Morning everyone, 9 o'clock will kick off. I declare open this hearing of the Senate Economics Legislation Committee into the 25-26 additional budget estimates. I begin by acknowledging the traditional owners of the land on which we meet today and pay my respects to elders past and present. I extend that respect to any Aboriginal and Torres Strait Islander peoples here today. The committee is due to report to the Senate on Tuesday 31st of March 2026. The committee has set 20th of February 26 as the date by which senators are to submit written questions on notice and 10th of April 26 as the date for the return of answers to questions taken on notice. The committee's proceedings today will begin with the Department of Treasury's Macroeconomic Group and International Corporate and Investment Group. The committee will be conducting today's hearing in person and via teleconference. Under Standing Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. And I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false and misleading evidence. The Senate has endorsed the following test of relevance of questions at estimates hearings. Any questions going to the operations or financial positions of the department and agencies which are seeking funds in estimates are relevant questions for the purpose of estimates hearings. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has a discretion to withhold details or explanations from the Parliament or its committees unless the Parliament has expressly provided otherwise. The Senate has resolved also that an officer of a department of the Commonwealth shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. Witnesses are reminded of the Senate order specifying the processes by which a claim of public interest immunity should be raised. I incorporate the public immunity statement into the Hansard. And I remind senators of their obligations under the Behaviour Code for Australian parliamentarians to treat witnesses with dignity, courtesy, fairness and respect. An officer called to answer a question for the first time should state their full name and the capacity in which they appear. And I remind committee members and witnesses who are appearing via video conference and who are not speaking to mute their microphones. I now welcome Senator the Honourable Katie Gallagher, Minister for Finance, representing the Treasurer.
Morning.
Minister, do you wish to make an opening statement?
No, thank you.
And the committee welcomes representatives from the Department of Treasury, Macroeconomic Group and International Corporate and Investment Group. I welcome Ms Jenny Wilkinson, Secretary to the Treasury. Ms Wilkinson, I see we have an opening statement from you. Would you like to take us through that?
Thank you, Chair. And thank you to the committee for the opportunity to make an opening statement. I'll focus my remarks on what has changed in the macroeconomy since my appearance in December last year. So global growth continues to be more resilient than expected following last year's increase in US tariffs. China and the United States have both outperformed expectations despite weaker bilateral trade between them. This appears to have occurred because many tariffs were implemented later and at lower rates than was initially proposed. There has been a diversification of trade flows, and there was some front-loading of imports ahead of the tariff changes. However, as the full impact of higher trade costs materialise and the trading system becomes less efficient, this is expected to weigh on growth and supply chains over time. China's economy grew by 5% in 2025, in line with the official growth target. A large part of this story has been the continued strength in Chinese exports. As a result of US trade restrictions, Chinese exports have been redirected to alternative markets, including markets in the ASEAN and European Union regions. Meanwhile, domestic momentum in the Chinese economy has slowed as the property sector continues to weigh on aggregate demand. The US economy grew by 4.4% in annualised terms in the September quarter, supported by solid household spending. US household consumption was strong in 2025 and there was a lift in investment in software and technology-related capital. There are, however, some signs of weakening in the US labour market. Recent data continue to point to slowing jobs growth. This is driving market expectations of further monetary policy easing by the US Federal Reserve. Recent data across the world indicates some persistence in inflation outcomes across major economies. Across the United States, the United Kingdom, Canada and New Zealand, inflation remains elevated above monetary policy targets even as labour markets have softened. In contrast, the inflation outlook in major European economies is relatively contained. These differing paths have left central banks facing more difficult choices between returning inflation to target and supporting activity. Uncertainty over US trade policy, including court challenges to tariff arrangements, continue to cloud global trade. At the same time, the ongoing conflict in Ukraine and recent tensions in the Middle East, including around Iran, have raised concerns about global oil markets and commodity prices. Rising uncertainties have been reflected in financial markets, with the price of gold exhibiting significant volatility, including reaching record highs as investors continue to seek safe haven assets. Turning to Australia, there continues to be underlying positive momentum in the domestic economy. Solid annual growth is expected over the next 2 years. Private demand has made a stronger contribution to growth than public demand over the past 4 quarters. Business investment has strengthened as firms invest heavily in software and cloud computing infrastructure. This includes the construction of data centres, which is expected to support growth in non-mining investment going forward. Given much of this investment has a high import share, it has had a minimal direct impact on GDP, but it has the potential to raise the productive capacity of the economy over time. Dwelling investment is gaining momentum, and while volatile, approvals for new housing supply have picked up, and this has translated into higher commencements and an elevated level of activity. This is expected to support continued growth in dwelling investment in the near term. Higher rental yields have supported apartment and townhouse approvals in recent years, which has flowed through to higher construction activity. Alongside this, household consumption has strengthened over the past year, supported by rising real household incomes. Signs are emerging of stronger household spending on discretionary services, suggesting that households may be more confidently navigating cost of living pressures. Treasury is monitoring the economic impact of recent natural disasters. Around 1.4 million people are living in areas affected by bushfires in Victoria and flooding in Queensland. We currently estimate the loss of economic activity could reach nearly $1 billion, or around 0.1% of real quarterly GDP. Support for affected communities is being delivered through Commonwealth and state government arrangements. The labour market was broadly stable through 2025, with high participation and low unemployment. This stability is expected to continue in the forecast period. In December 25, the unemployment rate fell to 4.1%, and the participation rate remained high by historical standards. The labour market is expected to soften a little this year, but the unemployment rate is expected to remain low by historical standards. Employment growth eased through 2025. This reflected a slowdown in non-market sector employment, which was partially offset by market sector employment recovering, consistent with the shift from public sector to private sector-led growth. Indicators such as job vacancies and business surveys of hiring intentions are steady, suggesting employment will continue to grow around its current pace in the near term. The labour force participation rate was 66.7% in December. While it eased slightly in 2025, it remains well above pre-pandemic levels. Australia has avoided the large rises in unemployment or sharp declines in participation seen in other advanced economies over the past few years. After inflation moderated substantially from its peak in late 2022, it increased in the second half of last year. Headline inflation was 3.6% over the year to the December quarter, a little above the 25.6 MyEFO forecast. A major contributor to this increase was the expiry of state government electricity rebates. Headline inflation is likely to increase further in January as the Commonwealth rebates come to an end. Measures of underlying inflation, which largely exclude the impacts of rebates and other one-off factors, also rose in the second half of 2025. While the December quarter outcome was a little less than the September quarter outcome, both were higher than we had expected. The RBA's preferred measure of underlying inflation, the quarterly trimmed mean, rose from 2.7% over the year to the June quarter to 3.4% over the year to the December quarter. Our assessment is that the pickup in underlying inflation reflects a combination of temporary and more persistent factors. The temporary factors include some business and service providers rebuilding margins following a period in which they had been unable to pass higher input costs onto households, and volatility in travel components. More persistence has been observed in the food and market services components in particular. These recent data have increased the risk that inflation is higher and takes longer to return to the target band than expected at MyEFO. Expected ongoing constrained growth in wages and the higher exchange rate should support inflation returning to the target band. Finally, I'd like to confirm that on the 13th of January, Treasury's internal audit provider commenced a management-initiated review of the adequacy and effectiveness of the controls for state payments administration. This will consider opportunities to strengthen these controls, taking into account the measures we've already implemented to strengthen our processes, procedures and training. The final report will be delivered to me in March 2026. The ANAO has also initiated planning for a potential audit into state payment arrangements under the Federation Funding Agreements Framework in 2025-6, which we have supported. Thank you for the opportunity to give this opening statement, and I welcome your questions.
Thank you so much. I'll just kick off with a short couple. Your reflections there about Australia being in terms of the domestic economy being in a good position, particularly around positive momentum in the domestic economy and a solid growth expectation over the next couple of years. I did want to know if you could talk a little bit more about productivity and in terms of the challenge, over what we've seen over the last period of time around it being a long-standing challenge, and what your observations have been more recently. I guess while we know that quarterly movements can be volatile, what has been your observation in the more immediate term?
Sure. So I think it's widely understood that productivity is a key driver of economic growth and it's important for living standards. And this has clearly been a high priority for this government, as it was for previous governments. And the recent work that the Productivity Commission has undertaken is really looking into, through 5 different pillars, what are the opportunities to improve productivity growth across the economy. It's hard to measure productivity on a short-term basis. Most of the analysis suggests that you should be looking at productivity growth over long-term trends. But even in Australia, over the long term, I think it's widely understood, and I think this has been made clear in the most recent intergenerational reports, the last 2 or 3, that productivity growth has been weaker in Australia than in previous periods. Maybe, I want to be careful about this. I mean, in the September quarter, labour productivity did increase a little, by 0.2% to be 0.8% higher over the year. And if you look at the market sector, growth has been about 1.1% through the year, and that's encouraging. One of the tricky things in Australia is that obviously the mining sector has a big impact on outcomes, and productivity in the mining sector, as we've observed over time, is highly cyclical. But when I think about Australia's productivity outcomes, it does reflect a combination of shorter-term cyclical factors and also sort of longer-term sort of structural challenges. In terms of the cyclical factors, frankly, the strong performance of the labour market over the last few years, in a direct sense, has meant that we've had weaker productivity growth than in other countries where they've had a weaker employment outcomes. And sort of why is that? Well, it's partly because when firms take on more workers, that can happen more rapidly than changes to the capital stock. So it's pretty widely acknowledged that changes to the capital stock lag employment growth. It just takes time for firms to make decisions about investment and to install new capital. So this means, in a sort of mechanical sense, average capital per worker will tend to lower when you have a period of strong employment growth. And so that's kind of a key reason why, in a cyclical sense, you can end up with a period of weak productivity growth when you have strong employment growth. But I'm not denying that there aren't longer-term factors. Our experience with weak productivity growth mirrors that of many other advanced economies. This reflects a number of different things. It reflects the structural shift towards the non-market sector, which is occurring across most advanced economies, which is partly driven by an ageing population and growing demand for care services. It's also been acknowledged in Australia and in many other advanced economies that there are sort of what I call long-run challenges in the construction sector where productivity growth has been weak. And then there's the sort of the broader puzzle about what the impact of technology changes, well, when the impact of technology changes will be evident in the productivity data. There's no question that across the world over the last 2 years, and I think, since sort of the end of 2022, there's been a really significant shift in terms of the development of AI technologies. Those are gradually being diffused across the economy, but we've known from previous episodes where there have been significant technological shifts that sometimes it can take time for that then to be evident in the productivity statistics. So we need to, we are expecting that there should be some evidence of this going forward, but it's always hard to predict when those sorts of changes will be evident in the statistics. What are the sorts of things that domestic policy can do to improve productivity? You can, and some of these things are covered in the PC report. You can encourage investment, remove barriers to investment, remove barriers to innovation and dynamism. An important channel for Australia is creating strong linkages with global frontier firms. Australia is typically a strong adopter of technologies. We're a small open economy, so there is a limit on the extent to which we can be the innovator in some of these technologies, but we have evidence over time of being a strong adopter. And then, of course, the government can help to ensure that workers and managers have the appropriate skills to take up new technologies when they're available. I think that's probably my answer. Anything you want to add? No.
Okay, maybe just one quick follow-up and then I will move on. So I think in your opening statement you talked about business investment strengthening, and particularly in terms of kind of the technology piece. Mm-hmm. And, what you just talked about then in terms of there being a lag time with businesses investing and seeing outcomes. Is there anything else that you would say in terms of the recent business performance in our economy? What are the drivers and I guess how optimistic you are around that kind of longer-term uptick playing out?
Yeah. So just in terms of the investments in technology and data centres, I think that around the world there's been a bit of a surprise about how strong the investment has been in the second half of last year. So this certainly occurred in the US, and my recollection is that I've been reading about similarly in Southeast Asian countries. There does seem to be a very significant shift that's taken place more quickly than we'd expected. It's always hard when you're doing macroeconomic forecasts to identify when there are these sorts of shifts in trends. More broadly, the business surveys suggest that capacity utilisation is at pretty high rates in Australian firms, and that we would generally take as being an indicator that businesses are using their capital stock intensively and would be looking, that creates the right environment for them to be then looking towards additional investments in order to grow their ability to supply output to their customers.
Thank you. Thank you. Senator Patterson.
Thank you, Chair. Good morning, Secretary. You may be familiar with the media reports speculating about the deterioration between the pre-election economic and fiscal outlook and the mid-year economic and fiscal outlook. For example, there's been reporting in the Financial Review which attempts to quantify that mid-term deterioration in the budget bottom line at about $57 billion.
So, Senator, I'm aware of that. I'm aware of that media reporting.
Yep. Do you have?
Yep.
Sorry.
No, go ahead.
Do you have the exact figure? I think the 57 is just from percentage point rounded figures in my info. Do you have the exact figure of the deterioration in the budget bottom line over the midterm?
Senator, so this is a question which is going to, I presume, go to the details of fiscal policy and the determination of the medium-term projections. I'm happy to answer at a high level here, but then I think it would be more appropriate for those questions to be put to fiscal group when they arrive, because I won't have all of those details.
Sure, I do appreciate that caveat, and I will explore details if necessary with fiscal, but obviously you signed off on PFO as Secretary, and so I think it is important to have to understand your understanding of it. So my my advice is that when thinking about medium-term projections, it is much more sensible to think about it in terms of outcomes as a share of GDP. That's how we present them in the MyEFO and in budgets, and that's because nominal numbers are just much less comparable as the economy grows over time. So we have a strong view in Treasury that it's much more useful, it's more meaningful to show medium-term estimates as a share of GDP in order to indicate what's happening, and that's indeed what is presented in MyEFO. So that's in. Let's see if I can find it in MyEFO. In the charts.
You've got the budget.
Oh, I have. No, that's MyEFO. Sorry, I don't have that. Where are we? So.
You got it.
Yeah. So in the charts on page 54 show as a share of GDP how the underlying cash balance has changed. So that's chart 3.1, and then charts 3.5 and 3.6 show how total receipts and total payments as a share of GDP have changed since between PFO and MyEFO.
Sure.
And Senator, we think this is the right way to be thinking about the medium term, because it's very hard for anyone to grapple with kind of what a particular quantum is relative to the size, relative to an economy which is, like it's currently about 2.7 trillion, growing to, I'm not quite sure where it grows to by the end of the medium term. So it's just, you've got to keep, these numbers have to be considered in context, which is why we provide our forecasts, why these are presented as share of GDP.
Sure, I do understand your caution on that, but I still think it's worthy understanding what the dollar figures are, because you're right, numbers out of context a long time in the future are hard to understand, but even harder to understand for people is percentage of GDP in which financial year a long time in the future as well. And these are complex economic concepts. Dollar terms at least have kind of some relative meaning. So do you have the precise figure? Is it $57 billion? Is it a little bit less? Is it a little bit more? Thanks, Senator O'Neill. It's not necessary. Secretary?
Well, it was, because, you're about to line up a massive distortion, and she's just giving you the argument why you shouldn't be doing that.
Yeah, let's...
I think I've asked 2 questions so far.
Yeah, make sure they're genuine ones.
So the figures I have are about how the underlying cash balance has changed as a share of GDP over the medium term.
So you don't have the dollar figures?
No, I do not have the dollar figures.
Will someone else at Treasury have the dollar figures, or Fiscal Group have the figures?
So the information that is provided in the budget papers is, we think, the most appropriate way of assessing how the underlying cash balance has changed over time. We think so that at the end of the day, it's always a matter for government as to how information is presented in the budget papers, but that is the most meaningful way in which we can. We think that these sorts of things should be presented.
Sure, I do understand the preference that you express, and the logic of it is evident, but I still would like to know if you have the number. Do you have the number?
No, I don't have the number.
Does anyone at Treasury have the number?
I'd have to take that on notice.
Okay. All right, well then, for our purposes, let's just assume 57's in the ballpark, and maybe a little bit more, a little bit less, but let's assume that's in the ballpark. Can you explain what caused the deterioration between PFO and MAEFO?
So, as I said earlier, Senator, I think you might need to take these questions to Fiscal Group, but I will just point you back to charts 3.1, 3.5 and 3.6, and you can see that over the period, you can see that the projection for total receipts as a share of GDP declines over the course of the medium term. Payments is a bit lumpier, but by the end of the medium term is broadly around where it was at PFO.
Sure, but I still want to understand what caused it. I mean, this is Macro Group. Macro wasn't involved in producing this forecast? Well,
it's really, I mean, these graphs are the responsibility of Fiscal Group, but I think the information that you're after is presented in charts 3.5 and 3.6. That shows how how total receipts and total payments are expected to change over time, and how that varied between PFO and MAEFO.
Sure, but was it as a result of parameter variations, forecasting, or was it a result of policy decisions? What's the cause of it?
So the medium-term projections we produce differently from how we produce the estimates over the forward estimates. So we don't have a breakdown between expenditure variations and policy decisions for the medium-term numbers. That's just not the way in which these projections are conducted.
Right, so there's no policy decisions reflected in the medium-term variations?
No. What I said is we do not have a breakdown between policy decisions and expenditure variations in terms of the level or the change. There are where there are decisions that are taken by government which have impacts for particular programs before the medium term, they are I think usually taken into account, but it'll depend a little bit on what the particular policy is. But then assumptions have to be made over the medium term about how other areas of expenditure then are expected to change over the period. And so there are a combination of, there are different elements of the medium term are projected in different ways.
Sure, but if you are producing these statistics and charts, you either are including policy decisions or you are not including policy decisions. So I'm understanding from your answer that policy decisions are included and are reflected in those figures.
So all policy decisions taken by government are incorporated in the medium-term projections.
Okay.
Absolutely.
Right.
It's what I'm getting at, Senator, is it's more comes to the question of sort of technically the way in which projections are generated over different horizons.
Sure.
And we have a different approach for the forward estimates from the medium term, from the IGR projections. And that's because there are, so in the forward estimates, there is extremely detailed information that is compiled bottom-up by the Department of Finance using the Central Budget Management System. That together is what, on a line-by-line basis, creates the the forward estimates
sure.
numbers.
I do understand.
We do not have the same. There is not the same level of granularity in the medium term.
I'm not asking for the same level of granularity, but if you are incorporating policy decisions into the medium-term forecasts, then you should be able to say what the contribution of those policy decisions was. They have been incorporated, so you should be able to reverse that out and say this much of it was due to policy decisions.
We've never provided a breakdown of the medium-term changes between policy decisions and expenditure variations. Very happy to take away.
You might not have provided that in the past, but that's not a reason for not providing it now.
Sorry, Senator. What I'm saying is I'm happy to take. I'm not quite sure how that would be done in the current methodology. Happy to take it on notice well, you can have a discussion with Fiscal Group when they're here this afternoon about the individual components. But sort of happy to think about how else that information could be provided to you. But it's not something that...
In the 6 months between when you signed off on PFO and the government published my FO, we have a circa $57 billion deterioration in the budget bottom line. I think the public's entitled to know, is this because your forecasts about the economy have changed and therefore that's had implications for the budget? Or is it because policy decisions have been made which have deteriorated the budget bottom line? Or if it's a combination of both, what is the proportion shared by each combination? I think those are reasonable questions for the public to want to have answers to.
So I hear your questions. I'm just saying that the way in which the medium term is generated, there is not that breakdown that can be generated. But as I've said to you, Senator, medium-term projections have been produced this way for as long as medium-term projections have ever been produced.
I'm not suggesting there's anything different.
All I'm saying is
But you're asking for something different to be done, and that's not the way Treasury does their medium-term
Sorry, Minister, we just heard the Secretary say that policy decisions are incorporated into this. Like there are two components,
two possible components. The ingredients that go into
there are two possible components of these changes: policy decisions, parameter variations. In order to know what that change is, you have to add those two things together. And so if you've added those two things together to get a total number, you must also be able to reverse engineer that and say this much was from parameter, this much was from policy. I don't understand why this is impossible to do.
2 minutes, Senator Patterson.
Well, we're not going to change the way medium-term projections are done.
I'm not asking you to.
Well, you are.
No,
That's
I'm
exactly what you're asking.
I'm not. I'm just asking how you constructed this
Patterson.
medium-term projection.
They are put together in the same way they were done under your government.
I'm not suggesting anything different.
The Secretary has answered your questions.
We're not
Minister,
look,
she's
if you think that's an answer...
You can talk to Fiscal Group this afternoon, but...
Will Fiscal Group be able to answer that question?
And 3.6 give you the information you're after.
So will Fiscal Group be able to answer that question?
Fiscal Group will be able to give you more detail on how some of the individual, how the medium term is constructed. That's what they'll be able to provide you with. And I can tell you now that we do not have a split between policy decisions and expenditure variations over the medium term.
Well, how on earth did you arrive at the number if you didn't add the policy variations to the parameter variations? How could you possibly produce anything without having those two components?
Senator, I'm just telling you about the method.
Okay. Just last question then. Look, I've had a chart provided to me which kind of just puts in graphic form the numbers. I might ask the Secretariat to provide that
What
to
numbers?
you. From my EFO, the numbers from my EFO, and it just shows the difference between
produced your own.
EFO.
Or someone else has produced a document for you.
They're your
no?
numbers, Minister, from your document. If you disagree,
Well,
that's fine.
no, I'm just asking who's the author of the document.
So the thing that I'm interested in is that the largest variation in the medium term appears to be in 29-30. In other years, the variation is less, but the variation in 29-30 seems to be largest. Secretary, can you explain or account for why there's a particular divergence in the budget bottom line in the 29-30 financial year?
So can I just confirm, this is just chart 3.1 that's been produced with a different axis? Is that all this is?
Yes. They're your numbers. This is just so it's visual.
Right, well, this has just been given to us, so we're trying to
Yeah, that's fine.
understand it.
I mean, we could just do it by the numbers in my info if you prefer, but there's the biggest variation is in the 29-30 financial year, and I'm just trying to understand.
So I don't have, so you can ask Fiscal Group, so on the payment side, there are lumpy decisions which are incorporated in the forecast. I think, so there are sorry, let me just see here. What's this? This is just, this is over the medium-term projections. Oh yeah, so in my EFO, it does outline what some of the significant shifts are, but I don't think it says in the particular year you're talking about, so I think you should take that up with Fiscal Group and see whether they can help you.
Secretary, you just said there are particularly lumpy policy decisions that are reflected in my EFO. If you know that, you should be able to tell me what they are and what they add up to.
No, what I'm saying is that there are lumpy payments over time, so it is not surprising that payments as a share of GDP moves up and down because there are decisions about...
In 6 months? What's changed in 6 months?
No, there are decisions about defence spending or decisions about infrastructure.
Exactly. That's what we're trying to get to the bottom of. What are these decisions which have led to this change?
No, all I'm saying is that, and sorry, the other thing is that there's some of the lumpiness comes out of, as I understand it, the debt issuance policy. So there are a range of different things. Well, very happy for you to take that up with Fiscal Group and see how they can help you.
I think we'll have to. Thank you, Chair.
Rotate the call. Thank you, Senator McKim.
Thanks. Good morning, folks. I've got some questions about the capital gains tax discount. In 2000, these are Treasury figures, 2009, 39% of the capital gains tax discount went to the highest 1% of income earners. In 2022, that 39% going to the top 1% of income earners went up to 54% of the value of the CGT discount going to the top 1% of income earners. Those are both public Treasury figures, and this financial year, based on Parliamentary Budget Office analysis, 59% of the benefit of the capital gains tax discount is going to go to the top 1% of income earners. Can you just talk the committee through why those numbers are climbing so steeply and why the benefit, so much more of the benefit of the capital gains tax discount is going to the highest 1% of income earners?
So, Senator, I fear I'm going to disappoint you. I think you're talking about the figures that are in the tax expenditure statement that we released in December. Would that be right?
I'm talking about figures that are publicly available from Treasury,
yes,
that show that over time...
but I think they might be... So,
is it from that report, the tax expenditure statement that was released in, I think, in December?
Well, it doesn't matter where these figures are from, and I've been clear.
Okay.
These are the first two are Treasury figures. The last one is a Parliamentary Budget Office figure.
All I was going to say is that the officers who can speak to the information in the tax expenditure statement will be here with Revenue Group. I believe Revenue Group is here for 3 hours this afternoon.
Yes.
And they will be best placed to speak to what's changed and what do we know about how it's changed.
I appreciate that the Revenue will be able to go into detail, but you're the Secretary of Treasury.
Yes.
We know that Treasury is modelling potential changes to the CGT discount for government for consideration in the budget this year. You've just gone, and I've got no quarrel with this, you've just gone into deep dives into things like productivity. You were even happy to hold forth on, investment into data centres earlier, and that's fine.
Yeah.
Can you just explain to the committee why the CGT discount and the benefits of the CGT discount are going over time so much more strongly into the pockets of the 1% highest income earners in the country? I mean, surely you're happy to talk about that if you're happy to talk about investment into data centres.
Senator, it's just that. So that's a sort of a specific technical question about that component of the tax system, and I don't want to mislead the committee. There will be the relevant officers who will be available when Revenue Group appear in order to speak about that. So I apologise, but I am not in a position to I'm not in a position to, with confidence, provide the committee with an explanation for why that has changed over time. The fact that it has increased over time is evident in the Treasury, the tax expenditure statement that's released by the government. So I apologise, Senator, but yes, I'm not sure that I can help you.
So this is a $20 billion a year plus tax concession. You're currently modelling changes for the government for consideration in the budget. The Treasurer and the Prime Minister have been very clear not to rule out the potential for changes to the capital gains tax discount settings in this year's budget. It is, over time, massively concentrating its benefit into the very, very high income earning cohort in this country. And as the Secretary of Treasury, you don't have a view about why that's happening.
No, that's what the distributional data shows you from. What we are sharing through the tax expenditure statement is what the distributional data demonstrates. So I'm not sure whether either of my colleagues have anything else to add.
Well, I'm aware of what the data shows. I mean, that's the basis of the question. I mean, my question is, what's going on here? Like, why is it that over the last 15 or so years, the amount of the capital gains tax discount that is going to the top 1% of income earners in Australia has skyrocketed from 39% to 59%? Like, why is that happening? You're the Treasury Department. No one can help the committee understand why that's happening. I find it.
I was about to say, Senator Katrina DeMarco, Deputy Secretary, International Corporate Investment Group. I think the Secretary's right. I think that's best explored with Revenue Group. There's just a couple of cautions I'd put about looking at some of these things over time, particularly with regard to capital gains tax. The first is that it is incredibly lumpy. The second is that the benefit accrues in the year that you dispose, and so by nature, if you have the gain in that year, that can shift where you sit in the distribution of income in the tax scale. So you actually need to be quite careful in comparing these sorts of things over time. At that point, they've got a higher marginal tax rate, so when you measure the gains in this way, it does look like it's accruing to a certain part of the distribution. But that's kind of by definition in terms of the way you construct these things. So I'm not going to proffer a view on why it might have occurred over time. All I'm saying is you've got to be very careful in considering these things over time, because these are life course decisions. They may be one disposal in a lifetime, not a disposal by that same person in that part of the distribution in every year. Sure,
but those matters pertain right through the 15-year time period that we're talking about. I mean, it's the same. I'm not asking you, Senator Canavan. Thank you. And she absolutely has not. And what we've got is a situation where we've got the Minister for Finance here, we've got the Secretary for Treasury, and no one can explain why the concentration of benefit of the capital gains tax discount is skyrocketing over time and has gone from 39% going to the top 1% of income earners in 2009 up to 59% going to the top 1% of income
Well, we look forward
earners.
to your committee reporting.
I beg your pardon?
Report in the 17th of March, and I think this is one of the terms of reference that you're inquiring
Well, it
into.
is. And
but also,
I know we haven't yet received a submission from Treasury.
Yeah, revenue. That's all we're saying. That's all we're saying.
Yeah. All right, I'll just move on. I find it extraordinary. I find it extraordinary that we can't. That there's no explanation
CGT.
proffered from the finance minister.
With the Liberal Party on CGT.
I do find it extraordinary that we've got the finance minister and the secretary here, and
got a lot of things to say about it.
I find it.
It's just an inflation tax. That's what they're doing.
We're right.
That's what they're doing.
Is Senator Canavan going okay? Do you reckon, Chair?
Ask the questions.
Better than you,
Pardon?
mate. Better than
Senator
you.
Kim, you have the call. Senator Canavan.
Revenue will be here later.
I understand revenue
Yeah.
will be here later, but I'm just going to say I find it extraordinary that we can't get any kind of an explanation as to why the most unfair tax break on the books in this country is skewing over time so much further into the pockets of the top 1% income earners. I find that extraordinary. I find that extraordinary. So I'll move on, but it's still on the CGT discount. And I presume the answer is going to be the same, but it's the same with age distribution. We've seen a higher share over time going to older Australians and correspondingly a younger share over time going, a smaller share over time going to younger people. So just to be clear, the value of the capital gains tax discount that is going to people under 35 years old is 4%, and that is shrinking over time. Why is that shrinking over time? I mean, I'm happy for the minister to answer. I'm happy for the secretary to answer. Like, why? Like, young people are getting smashed by this.
I think it requires a technical answer, and the revenue group will be appearing later, and they will be able to answer your question.
All right. Well, let's go to some of the absolute figures on the CGT discount. I mean, I just don't know what response we're going to get here, but I'll give it a go.
Well, if there are questions for revenue group, you'll get the same answer.
Well, these are questions on the impact to the budget. I presume that having the Finance Minister here and the Secretary to Treasury, we might be able to get an answer on impact to the budget on the capital gains tax discount. So the Parliamentary Budget Office analysis that was requested by the Senate Select Committee into the capital gains tax discount projects that over the next 10 years, the CGT discount is going to cost the budget $247 billion. Now, that is more than the CGT discount has cost the Commonwealth budget over its entire 25-year history. That number, for reference, is $205 billion. Firstly, does Treasury take issue with the PBO assessment, and does Treasury agree that over the next 10 years the capital gains tax discount is going to cost the budget $247 billion? And secondly, how is that sustainable to the Commonwealth budget?
Senator, you will get the same response from me, which is that is a matter of detail which goes to a matter of revenue, that is the responsibility of revenue group. And so I think the relevant officials should be here in order to provide you with an answer to your question. I do not have an explanation in front of me for how this would change, or I'm not in a position to advise as to whether we agree or disagree with that particular piece of PBO analysis, but I have confidence that when Revenue Group attends, they will be in a position to answer those questions.
So Treasury's analysis is in the tax expenditure statement. Yeah. I haven't seen the PBO analysis. I don't know if it's public. I'm just looking on the submission side for your committee. I can't see it listed there, but they're the figures that Treasury provided out to 28. 29. Yeah.
So I
don't know if they're different to the ones that you're citing from.
Well, how much is the capital gains tax discount going to cost the budget over the next decade?
Well, I can see figures here until 28, 29. And so they're in the order of about $19 billion in 26, 27, growing to 19.6 in 27, 28 and 20.380 in 28, 29.
Okay.
Are they the only published ones? We don't publish.
So,
not publish beyond
look,
that.
the Treasurer had his economic roundtable earlier this year. He said the top two issues that came out of that were a fair go for working Australians and intergenerational equity. You've got a tax system in this country where if you go to work as a plumber or a carpenter or a cleaner or a bartender or a nurse, like you pay double the tax on your income than someone who sits on the couch and flips investment properties for a living. You've got a massive public subsidy to property speculators, only 4% of the benefit of which goes to people under 35. 60% of the benefit goes to the top 1% income earners. I mean, it's a no-brainer, isn't it, Minister, that you would rein in the capital gains tax discount to deliver on what the Treasurer says are his two main priorities: fair go for working people and a fair go for young people. It's a no-brainer, isn't it?
Well, that sounds like, you know, the forward to your select committee report, I imagine. As chair of that select committee, Senator McKim, we look forward to receiving that report when it's finalised and whether or not you can get, you know, a majority report for that. I'm not sure. The Treasurer has been clear about the issues that came out of the Economic Reform Roundtable. He's been clear in recent days about, in media statements and otherwise, around looking at some of the intergenerational issues in housing, you know, and we're working through policy work as you would expect.
Last question, Chair, just on this, and then I'll move on to other topics in my next bracket. But that inquiry has been informed by Treasury that Treasury won't be providing a submission to that inquiry. So, Ms Wilkinson, that inquiry has received a submission from the New South Wales Treasury Department, but it appears that that inquiry is not going to receive a submission from you, from your agency. Why is your agency not submitting to that Senate inquiry?
So, Senator, I think that the tax expenditure statement over time provides, I think, relevant information that can be considered by the committee. I expect that Treasury officials may well be called to appear before the committee.
Sure they're invited.
That's right, and we are happy to appear before the committee.
No.
Thank you, Senator McKim. So just for all senators, we'll go in 10-minute blocks now, and we'll try and stick to time as much as we can, and break at 11 o'clock and hopefully be on track for the agenda for the whole day. So, Senator Patterson.
Thank you, Chair. I just want to briefly revisit this issue of the medium-term projections, but I will pursue the detail later with fiscal. In my info, the document says, and I quote, the medium-term fiscal outlook is broadly in line with 2025 PFO. Secretary, do you think a $57 billion deterioration, if that's what it is broadly consistent with PFO?
So, Senator, I'm happy with that statement. If I look at the chart on chart 3, if I look at the graph on chart 3.1, you can see how the underlying cash balance varies over time. You can see how it has varied in terms of the medium term between PFO and MyEFO. I think that taking into account, as I say, the uncertainties around doing these projections over long periods of time, like over a decade, I don't think it's unreasonable to draw the conclusion that that change is like that it is broadly, I think what the words are, I think, broadly in line. I think that's what I said. It's broadly in line with the 2025 PFO. That's what I would come back to, is drawing your attention to the chart 3.1, including it gives you a sense of how much the fiscal position can change over time.
I mean, it feels like to me that broadly is doing a lot of heavy lifting in that sentence. $57 billion, if that's what it is a lot of money, even over a period of time like that. If you want to express it in terms of percentage of GDP, 0.3% of GDP over a single financial year is a big deterioration too, isn't it?
I think the statement is about the fiscal outlook. Overall, the fiscal outlook compared with the PFO. So it is an overarching statement rather than a statement about any particular outcomes in any particular years.
Right, but if you were talking specifically about the underlying cash balance?
So again, I would look at chart 3.1, or I would look at, what's the other charts? 3.5 and 3.6, and I think that those charts provide information about what's changed over time. So I don't, as I say, I think your question was, do I stand behind the overarching statement, which is that the medium-term fiscal outlook is broadly in line with 2025 PFO? I do. It's not exactly the same, but I think it's broadly in line, and I think the government's been transparent about how it's changed over time.
But it was only 6 months, roughly, call it 7, between PFO and MyEFO. That's, in that short period of time, that's quite a large deterioration, isn't it?
I think there are probably much more significant deteriorations. I mean, so the budgets get updated roughly every 6 months, always, right? So
yes.
We have budget in May and we have MyEFO in November or December most years, and there are variations that flow through in those periods. So I don't have that in front of me, but there are periods where there are more significant changes in economic variables or other things, which can lead to more significant changes in the fiscal position. But not sure that I've got anything more to add.
Sure. Okay. So just a couple of final questions on this. I mean, in one financial year, the deterioration is about $11 billion. That increases the deficit by about a third. Again, I just want to understand your view that an $11 billion variation in a single financial year, increasing the deficit by a third, is broadly in line.
No, my statement about broadly in line is over the whole of the medium term.
Yeah, that's why I'm asking you about this specific. Do you think that is broadly in line?
So there are, as I say, I think the budget papers are clear that there are particular variations in particular years, but overall it's broadly in line. That's I think the statement that's been made, and the statement that I'm comfortable with.
When you signed off on PFO, were you aware of any possibility that with this kind of deterioration?
No.
So it just kind of came out of nowhere for you?
Every 6 months there are updates to economic parameters and updates to program-specific parameters, and those are reflected in the updated budget documents.
Okay. I'll just move on to...
Senator, so I was obviously Secretary of Finance at that time, and Secretary Kennedy was the Secretary of Treasury at that time, and we take signing off on PFO very seriously. We've jointly signed off on the PFO in 2022 as well, and we think it's extremely important that the PFO does provide our best understanding of what the fiscal outlook looks like. So we take that very seriously.
Okay. Moving on to something that is within the forward estimates, so maybe a bit more straightforward. Page 317 of MyEFO, table E1, it has some updated forecasts for payments and underlying cash balance and receipts. I'm particularly drawn to the change in payments between 23-24 and 25-26, where we go from percent of GDP to 25.1 to 26.9, and that results in a deterioration of the budget bottom line from positive 0.6% of GDP to negative 1.3% of GDP. That's a very big turnaround in just a couple of financial years, isn't it?
So obviously those data are published there. That is the change in payments over that period. There are significant changes in, I mean, when I look back in that series, there are periods where there are significant changes. I mean, between 2012-13 and 13-14, payments went from 23.8 to 25.3. I mean,
yeah,
there are things that happened both on the payment side and
I think that financial year there was a significant payment to the RBA which affected those numbers.
Oh, sorry. So no, I'm just looking back through that series, and I don't have an analysis of, what drove that change, but I think that those data are clear about the increase in payments as a share of GDP between, over this period. So that's what you're saying is reflected in those tables.
Sure. So we've got almost a 2% deterioration in the budget bottom line over 2 financial years, 1.9%, and of that, 1.8% is due to government spending, right?
The breakdown between receipts and spending, well, I think that's what's published in the in these documents.
Can you point to a time outside a recession or when we're making major top-up payments to the RBA where there's that kind of deterioration just 2 financial years driven by increased spending?
I'd have to take that on notice, Senator.
Okay.
1 more minute, Senator Patterson.
Thank you. What kind of impact does that have on the macroeconomy? Such a significant increase in government spending in just 2 years and such a big increase in the deficit in just 2 years?
So when we're, and Dr. Grant might talk a bit more about that, but about this. So when we are doing our macroeconomic forecasts, of course, we take into account a wide range of factors, and one of the things we do take into account is the fiscal stance and the change in the fiscal stance over time. It doesn't, if you like, mechanically flow through to macroeconomic forecasts, but it is, and it depends on the individual elements as to how we think about that potentially affecting outcomes.
Sure.
The one thing I would just note.
Can I jump in there because I've got limited time? We're in an environment of rising inflation.
Yeah.
The RBA governor has said that the economy is at its speed limit or beyond its speed limit. That's why they had to increase interest rates. Do you think increasing the deficit and government spending by so much at the same time is going to put upward pressure on inflation or downward pressure on inflation?
So, Senator, what you're asking me is a sort of an in the abstract type question.
No, it's in the particular, not abstract.
No, Senator. There is no question that over 2025, and particularly the second half of 2025, there was as I said in my opening statement, there was a lift in inflation above where we expect it to be. When we try and think about what led to that outcome, we have to look at what has changed between our forecasts, say at PFO last year or the middle of last year, and the outcomes and our forecasts now. When I look at those changes, there are a couple of things that I would highlight. One is that private demand has clearly come in higher than we expected. The other is that, and that has been driven by a combination of private investment and private housing and private consumption. So all of those have come in a bit higher than we had expected, frankly, and the RBA expected, and most market economists expected in the middle of last year. At that time, when we were producing the macro forecasts in the middle of last year, we had a fiscal stance which is essentially the same as what it is now. In fact, if anything, fiscal policy has become a bit tighter over that period.
Hang on, we went from
24
surpluses to deficits.
So at that, what I'm saying is,
rotate after this.
you have to take into account all factors and all contexts. And what I'm saying is that at the point, at PFO last year, but frankly also in the middle of last year where other forecasts were updated, this current stance in fiscal policy was already factored into the forecast.
I wasn't asking about PFO. We've moved on
No,
from
I'm
PFO.
gonna have
I was asking about the last
Secretary
two financial
Let
years.
the Secretary finish.
I'm clarifying so there's an understanding what I'm trying to understand.
You're just interrupting.
So, so if we are trying to understand why inflation outcomes have been higher than we expected, you have to look at what are the factors which have turned out to be different from what we expected. And there are a range of those, like the global economy has turned out to be stronger than we expected, commodity prices have turned out to be stronger than we expected, private investment has actually turned out to be stronger than we expected, like in quite a few other countries, and consumers have turned out to be, well, we were always expecting a lift in private consumption expenditure, but it's been a bit stronger than we expected. The stance of fiscal policy has not changed between those forecasts that were made in PFO and today.
I've clarified that's not what I'm asking about. I'm asking about the 1.8... Sorry, Minister, please let me be clear about my question because the Secretary's answering a question I didn't ask.
We'll give you this last chance to ask the question and then I need to rotate the call.
We've had a 1.8% increase of GDP in government spending from when inflation was falling to when it is now rising, and a 1.9% deterioration in the budget bottom line from a surplus to a deficit. That is net stimulatory on the macroeconomy, isn't it?
So the change in fiscal policy is absolutely taken into account when we are working out our macroeconomic forecasts, and that change in fiscal policy was already evident when, in the middle of last year, we were still expecting inflation to fall. So, Senator, I think that it is very difficult in these circumstances to talk in the abstract about individual components, but all I'm trying to say is that I think what's critical in this discussion is understanding what has... I mean, there's no question circumstances have changed from the middle of last year. That's what we partly confronted in MyEFO, where we upgraded some of our forecasts. That's then also reflected in the RBA forecasts, which were released a couple of weeks ago. What I think is critical is to understand what are the underlying factors or drivers that have changed, and the change in this and the stance of fiscal policy, including what you have pointed out in terms of fiscal policy going from a surplus of 0.6% of GDP to a deficit of 1.3% of GDP, that has not changed. And if anything, actually, I think if we look back at PFO, the change over that period was greater than what it turned out to be.
Thank you, Chair.
Thank you. Senator Bragg.
Thanks, Chair. I just want to ask you some questions about housing. So, is housing a top priority for the government?
Is that a trick question, Senator Bragg? Because I feel like I've answered that a number of times already.
Is it?
And if you're looking for a different answer, you're not going to get one.
Is it a top priority for the government?
Absolutely.
Okay. I mean, it wasn't in the Secretary's speech today, so I was a bit surprised that it wasn't.
Well, the Secretary's address is the Secretary's remarks to the committee. You asked about a government priority. I'm answering that.
Yeah, well, they work for you. So, basically, the government is spending... I mean, the Housing Minister brags about spending $43 billion on housing.
Sorry, Senator. I think I did talk about dwelling investment in my opening statement. I talked about the fact that it has been gaining momentum. I talked about the fact that while approvals have been volatile, housing supply has picked up. So, Senator, I did actually talk about housing investment in my opening statement.
Dwelling/housing.
But the problem is that it's going in the wrong direction, isn't it, the dwelling investment? Because the RBA data shows that in June 26 it'll be 3.7%, June 27 it goes down to 1.1%, and by June 28 it's negative 0.4%.
Sorry, Senator, I'm not sure quite what you're talking about.
Dwelling investment.
Growth in dwelling investment?
Yes, is trending negative over the next few years, isn't it?
I'll ask Dr Grant to answer that question.
According to the RBA.
Good morning, Senator. Dr Angela Grant, Deputy Secretary, Macroeconomic Group. I think you are referring to RBA figures.
That's right.
I can refer to our figures in the 2025-26.
I've seen your figures, but why do you think the RBA is forecasting a drop in dwelling investment over the next few years?
It's difficult for me to speculate on the RBA forecast, but the one thing that they have been clear about is they make a technical assumption in their forecasts about the future path of interest rates. As you would know, Senator, interest rates are an important driver of dwelling investment. That may be affecting their forecast profiles.
So, as I said, the Housing Minister brags about splurging $43 billion on housing. Is that the figure that you use internally, Treasury Secretary?
I'm aware of the composition of that that spend across different measures. I mean, that is so. Again, so I'm happy to answer to the extent that I can, but certainly I understand how the calculation of $45 billion is spread across a range of different programs, and it's a completely reasonable summation across the different government programs.
Okay, because the Housing Minister is a Treasury Minister, right?
She is a Minister in the Treasury portfolio, yes.
Yeah, okay, so...
And I have a group that is focused on housing policy.
But the Treasury have given her that figure of, I think you said 45 billion, did you?
My understanding is that it is over $45 billion.
Okay. So, $45 billion bucks. I guess the question is, well, what are we getting for that? Because overall, we're not getting the same number of houses that we were getting in the past, are we? I mean, we're trending at 170,000 houses a year over the course of this government. Be lucky to get 180,000 houses this year. So with all this money, why aren't we getting more houses?
So I think it'd be most appropriate if Housing Group took you through the details of all of the different components of the housing housing programs. They are, of course, focused on a range of different things, including providing infrastructure to support the states to build more housing. It includes the investments that the government's making in social and affordable housing. But the government has also been clear that in an overall sense there are other settings that are important for supporting ongoing housing investment. So
I understand that, but I guess I'm trying to work out why the numbers aren't going up. They're not getting back above 200,000 where they were last decade in the main, given this huge investment. I mean, we hear all this rhetoric. I mean, and this is one of the reasons why I think people, frankly, lose confidence in these institutions, because there's all this bragging about how much money's going out the door, but the results are terrible. I mean, we're objectively getting fewer houses, and the RBA is predicting that we're going to be negative on dwelling investment in the next 2 years, which is right in the middle of the housing accord. So what's going on?
So the MyEFO forecasts that dwelling investment will grow by 5.5% in 25-6 and by 6% in 26-7. That's a reasonably strong rate of growth for dwelling investment. There has been an elevation in approvals. There's been an elevation in the pipeline of dwellings that are under construction, and all of those we expect to support activity in the near term.
I get it. But those words you use then are making my point for me. You're talking about approvals. You're talking about your projections, which sometimes are wrong. What I'm wanting to know about is completions.
We do our best to... So that's right, Senator, and when you look at the approvals data, as I said, I think in my opening statement, the approvals data are always fairly volatile. Approvals are now at a level which, as I understand it, is above our assessment of what the growth in underlying supply needs to be. I think that's the first time that they've been above that level. I don't have that in front of me, but I'm sure I've been briefed along that way.
Okay.
Oh, hang on a minute. Yes, so building approvals have risen to levels above what we estimate to be new housing demand.
But as you know, there's a big difference between approvals and completions. So
yeah, that's right. But it's important that you need to have approvals in order to then get the investment and then to get the completions.
Okay, so obviously, I get that you don't want to cast aspersions on the Reserve Bank's data. I get that, fair enough. But even your MyEFO has downgraded dwelling investment compared to the budget. So why is that happening? I mean, the government's spending $45 billion on housing, and now dwelling investment's heading south. So what's the reason for the downgrade?
So, Senator, you are correct that in 2026-27, in the budget, we forecast dwelling investment to grow by 7.5%, and in the MyEFO, we forecast it to grow by 6%.
Yeah.
One of the main driving factors of that is we, like the Reserve Bank, take a technical assumption on interest rates across the forecast horizon. We had a slightly higher interest rate profile in these forecasts than we had in the budget forecast. That would affect the dwelling investment forecast in 2026-27.
So let's go to one of the government's flagship kind of housing delivery agencies, this Housing Australia Future Fund. So, Secretary, how's that going? How many houses is that built now?
So, again, Senator, I think that these questions of detail are better put to...
It's not a detailed question.
So, Senator, I think they are most appropriately put when I have when they're
You've got Housing Australia coming.
They're coming tomorrow morning.
The head of the department, I think, is reasonable to assume you'd be briefed on how many houses the government agency has built. Not a trick question.
No, Senator, but this session is a session about macroeconomic and international and corporate matters. I can see what information that I can provide you with, but these are matters of detail which are where I think it's most appropriate that I have the relevant staff.
Well,
2 minutes.
Okay, well, let me ask you about the governance then, because there's been a lot of debate about the cohesion problems at Housing Australia. Have you been briefed on this intersection report that was done into the governance of Housing Australia, which cost taxpayers $24,000?
So I am aware of that report, and I understand that was a report which was conducted in it was I think early 2024. So these are issues which I think have been aired at estimates on a number of occasions. So since that time, there have been some significant changes in the leadership and the governance at Housing Australia. Again, the relevant officials will be able to speak to you about the details of how that of those changes.
Okay, so high hopes.
These matters have been taken very seriously by Treasury and by the board. I beg your pardon?
High hopes for the future of the governance of Housing Australia there then.
So these, all I'm saying is these were matters which were raised, I think nearly 2 years ago. There have been very significant changes since then. The issues that were raised were taken seriously.
Sure. Well, I mean, I just have one more question. I mean, I don't know that they're old issues. I mean, there's an article in the Financial Review saying that the agency's only supplied a couple of hundred houses with its $10 billion. So I'm not sure that they're going away. Look, just finally, because I can feel the chair wants to wind me up, and I always like to be efficient with taxpayer resources, I think there's no doubt that the productivity challenge in housing is immense. I think that's been well flagged by you before and by the Treasurer, and indeed there was an economic summit, or I think an economic reform summit it was called.
The Economic Reform Roundtable?
Yep, in the Cabinet Room, yep. Very, very democratic. And so in that outcome from that meeting, there was a promise to slash red tape in housing because it was recognised that was an urgent priority. So how much red tape has been cut from the housing sector since that meeting?
So there are a couple of key commitments at the Economic Reform Roundtable. One of them was to pause changes in the National Construction Code and to streamline the National Construction Code. That was undertaken. The pause was undertaken immediately, and we are currently consulting on streamlining and modernising the code.
Okay, so when will that be finished?
I think that, I understand that consultations will close on the 27th of February. So it's under active consideration. The other commitment that was made was that there should, that the assessment, so we needed to fast track the assessments of homes that were currently sitting under the EPPC Act. There were more than 26,000 homes at that point, which I understand were under EPPC Act consideration, and a very substantial proportion of them, I have the figure here because I remember reading it, have been approved.
Okay, so
remember that.
So that was
the change to the EPBC.
That's good.
You didn't support.
So
we got it done anyway.
So that's
so
now.
It's true. You come in here and whinge about things you obstruct.
We took it to the election.
You obstruct in the Senate.
Took that idea to the
election.
And
then you come in here and whinge about delays.
It was good. You changed your mind.
Everyone sees you have no credibility.
I can't cop that from you, sorry, on that issue.
So 17,000 of the 26,000 dwellings which were waiting for approval have now been approved.
What
so
about
that
the new NCC? When will that be approved, do you think?
Can we wind it up now?
Yeah, I just want to get clarification. When do you think the new NCC will come in?
As I say, the existing code has been, so changes to the existing code have been paused.
Yep.
And I'm not in a position to advise on what the timeline is around streamlining and modernising the code, but when housing officials come, then I'll see how much they can help you. I mean,
hopefully
with things like the National Construction Code, there is a very significant kind of change management process which is required because given how many different people engage with the code. So
which
that's
is
something
why the pause started immediately.
Hopefully this decade.
And agreed.
Yeah.
All right, thank you.
Thank you. We have more than 40 minutes worth of people still wanting to ask questions, so I'll just ask people to keep efficient if you can. So Senator Sharma, you're up next.
Thank you, Secretary Minister. I just wanted to ask about this review into the Australian Office of Financial Management that you announced, I believe it was yesterday.
I put in place, so I advised the Treasurer a couple of weeks ago that we were going to do this independent review. Yep.
So when did you first start considering a review of the AOFM and what prompted that?
So I've been in this role since June last year. I've had a series of discussions with the CEO, and then through the second half of last year was aware of the significant restructure that they were undertaking. There were some issues raised with Treasury towards the end of last year, and that prompted...
Sorry, issues raised by whom, could I ask?
By some AOFM staff.
Existing staff, not departed staff?
I had to take that on notice.
Sure.
At that point, the head of corporate that I had at that time, Victoria Anderson, and the head of fiscal group had discussions with the AOFM. There were a series of questions that we put to them about the restructure and the rationale for it and the objectives of the restructure. So that was in November. We've continued to be kind of actively engaging with the AOFM and having just and have had discussions with a range of different people about the restructure and about the performance. And the restructure was completed, as I recall, towards the end of last year, and when there were some ongoing issues which were raised with us from a few different quarters, I had a discussion with the secretary or the head of the AOFM, who is the accountable authority for the AOFM, and discussed with her the fact that I thought it would be a good idea to do an independent review to make sure that I could be assured that they had the right skills and capabilities in place to be managing the important role that they do as well as they do.
Okay. Were you aware of the quite adverse results of their staff survey last year?
Senator, in general terms, I have been aware of that. I have also been aware that, yes, I have been aware of that.
Okay. And the high staff turnover or high staff departures? I guess that's what you're referring to.
And I have been aware of the high staff turnover. I mean, there has been some relatively high staff turnover at the AOFM over a period of years, but yes, and that's all of those things kind of combined have led me to decide that it was prudent to have an independent arm's length review of the agency.
Okay. And I've looked at the terms of reference for the review, but just so I understand, workplace culture, staffing issues, are they within the scope of this review that's being conducted by Mr. DeBell?
So the terms of reference, in the first instance, it's critical that I and the government, I think, are assured that the AOFM has the right skills and organisational leadership to do their job properly. So that's what I'm asking Dr. DeBell to do. To the extent that there are other issues that are raised, so, organisational culture is one of the things which I think go to the effectiveness of an organisation. So it's, if you like, not in and of itself, but to the extent that it is relevant to the question of their capacity to perform their role well, yes, it is. And we have been clear in the terms of reference, particularly given some of the issues that have been raised, that if over the course of this review Dr. DeBell was to decide that he thought we should, that there was some other matters which go beyond just capability and organisational capability, that he, of course, we would expect that he would raise them with us.
Okay. And I saw the terms of reference also said that the report is expected to be made public. Is that correct?
That was my judgment, is that I think it's important for the Parliament and for the Australian community to be aware of what the outcome of this review is, yes.
So the report will be made public?
That's my
intention. Okay.
Yeah.
And you did say, correct me if I'm wrong.
Sorry, but just to be clear, I would be very careful about, so I think I would expect this report to be made public, but again, I've made clear in the terms of reference, there could be matters raised which are not appropriate to be made public. And I think we need to be clear with individuals that we would protect their confidentiality so that we can have a thorough and a good report.
Okay. And you did say the Treasurer was consulted about this?
No, I informed the Treasurer. So the Treasurer... that
you were intending to...
Yeah, I informed him that I was going to conduct an independent review.
Okay. And did he approve the terms of reference? Or
no.
That's within your scope? Okay. Were any other departments or agencies consulted, like the APSC, for instance?
We consulted the APSC.
Okay.
Yeah.
All right. Thank you.
We consulted the APSC in part to sort of think about what's the appropriate type of review to conduct at the, in this juncture, and whether sort of the sort of particular structure that they do around capability reviews was the right thing to do. And at the end of the day, we took, they provided some useful input into our terms of reference to help inform those.
All right, thank you. Did they suggest appointing Dr. DeBell, or was that your... No,
Ms DeMarco and I had a discussion about who would be the sort of people who would have the skills and experience to be able to conduct this sort of review, and we determined that Dr. DeBell had the right breadth of skills. I mean, combining everything from the fact that when he was the Deputy Governor at the Reserve Bank, he had responsibility for organisational matters, so he's had that experience. He is obviously of high standing in the general financial community. He chairs the board of South Australian Funds Management, so he understands that business. We needed somebody who had that breadth of skills in order to provide us with that confidence, and we thought that he had the right breadth of skills.
Okay, thank you. Have I got
2 more minutes?
Yep, I'm going to change topics and be very quick. I just wanted to ask about the investor front door, which I understand sits within this group. Is that you, Mr. Marco? So I understand this investor front door was officially opened on the 1st of September last year. The status is as a pilot program at the moment, I understand?
That's correct, Senator. We've established it as a pilot program.
Okay. How many applications have been received since the front door opened on the 1st of September?
I might just see if Mr Heed's got that to hand.
This is Assistant Secretary for the Investor Front Door. Senator, thanks for the questions. So, since we've opened, we've engaged with a number of proponents, and the way the process works is we'll kind of sit down with the proponent, understand what they're looking for, where they're at in their process of their project. Sometimes it's actually pretty straightforward. What they're looking for is a little bit of support for us to connect them to a special investment vehicle or to understand how the Commonwealth regulatory system works. So that's a couple of meetings, that's a conversation, that's us kind of joining the dots and helping proponents connect. For other proponents where they're looking for more of a detailed concierge service, so kind of to become one of our pilot projects, that's a little bit more involved. We engage with them. We kind of understand when they're likely to hit the Commonwealth system. As you'll understand, Senator, often projects start at the state level, they go through the state processes. Often there's a state coordinator general or a state kind of investment facilitation function where we will link in with them. So it's kind of it's not as straightforward as how many applications we get. We have engaged with a number of proponents. Have
you got a figure for the number of proponents?
Look, Senator, so if you're asking for a figure on how many proponents we've spoken to about whether or not we're the right kind of a vehicle, the number's somewhere between 50 to 100. So some of these are one-on-one meetings, some of these are emails, some of these are conferences and kind of investor delegations. So it's a bit hard to give you just a specific number.
Okay.
In terms of proponents where we've kind of gone down a more formal path, engaged with them on, we have an EOI process that's on our website that kind of sets out our process. So there's been about a dozen of those where we've kind of gone down much more of the kind of the formal route. Here's a form, tell us the detailed specifics of your project. But in some cases, the services they're looking for doesn't quite necessarily need them to go down that route.
Okay. I might put some more detailed questions in on notice. Just the last question, and I'll see. It's a division, right?
Yeah.
How many staff, how many full-time equivalents do you have working in the division?
As of this week, I got a new graduate, which I'm very excited about. It's about 45 people in my division.
45 full-time equivalent, okay.
45 humans. That's not FTE because some people do work part-time. The exact ASL numbers slightly less than that, but I've got kind of 45 humans, some of whom work part-time.
Okay. Thank you.
Thank you.
Thanks, Chair.
Senator McDonald.
Thank you very much, Chair. I wanted to ask you some questions with regard to Australia's net zero transformation, treasury modelling and analysis. I did ask some questions at the last estimates which remain unanswered. So question on notice number 107, 108 and 436. So I'd ask that we return to those shortly if we have time. Specifically, I wanted to know what modelling Treasury has done on Australia's taxation base associated with the net zero plan. So in what year does Treasury project that taxation revenue from renewable industries will surpass taxation revenue from fossil fuel industries?
Senator, the modelling was very much focused on whole of economy. We didn't undertake any revenue or any implications underneath that, let me just... Is that right?
Yes, that's right. Senator Rebecca Castles, Assistant Secretary of the Climate Industry Modelling Branch, and we are aware of those questions that we do still have with ourselves on notice, so we will hopefully get them back to you very, very soon.
Thank you. So in the model on page 34, you've projected the range of exports, and you've got green commodities crossing over with fossil fuel exports. It looks to be about 2032, 2033. It's not entirely clear from the graph. That's not very far away, and I would have expected that that would have been an important part of the modelling, was to understand what that impact is on taxation income.
So, Senator, for this modelling, we simply tried to look at scenarios that showed different economic pathways to net zero. So 2 of those pathways are consistent with government policy. One is a disorderly pathway. As part of that, we didn't go into the revenue implications. We also didn't go into the fiscal cost. I know we've received questions about that before. We stayed very much at just whole of economy. How do we think the structure of the economy shifts, and how does that affect different components? So we stayed at that level rather than the level that you're asking about.
Okay, I understand the answer that you're giving, yes. But given that revenue is so fundamental to the success of the Australian economy and what options we've got for expenditure, and given the very short time frame that you've projected, I am surprised that there hasn't been modelling done on that. Am I best then going to Revenue Group to talk to them about tax revenue, specifically from renewables and versus mining?
Yes, you are correct, Senator.
Okay. Those questions on notice that I had also asked for further detail on the modelling that was used to develop this report, specifically the split between the different renewable energy types that you had versus the fossil fuel exports that you were including. Given that the modelling work has been done, I'm just unclear as why you've not been able to answer me more quickly.
So we will get straight onto that after this, Senator. Absolutely.
Okay. It would have been useful to have had those for today.
Yes, I'm sorry.
Thank you, Chair.
Senator Hume.
I think one of the issues we're dealing with here is the amount of questions on notice in December. We don't usually have estimates in December to return in February to have another session. So I know there's a couple in my areas that we haven't been able to manage. I've been signing off hundreds of quants in the last month. So I think agencies are working really hard, but it is unusual that we've had that very close 2 sessions of estimates as well.
So if I might add, Senator, of the, I think, around 550 questions that we had, there's 10% that are still outstanding. So the department has worked incredibly hard to get those answers, and we do apologise, but we're up to about 10% are still outstanding.
Thank you.
Thanks, Chair. I'll try and be really quick. The AFR had some reports this week that there were options to scale back or replace the 50% capital gains tax discount that are being examined ahead of the budget. Can Treasury confirm whether it's currently undertaking any analysis, any modelling, any policy development on changes to the capital gains tax discount?
Senator, the Treasurer indicated, actually I think it was on Insiders on Sunday, that as part of the upcoming budget he'll consider whether more steps can be taken on tax reform. That's consistent with the outcomes at the conclusion of the Economic Reform Roundtable. He outlined at that time that any changes or any future changes would be guided by 3 key principles. So Treasury has clearly been clearly works with government on tax policy and tax reform, and we have provided advice on tax matters as we do all the time over the course of this past year. But I'm not in a position to speak to any details of the advice that's been provided. That's a matter for government, and I think that if there was a discussion around what advice has or hasn't been provided on this policy or that policy, that would inhibit the sort of the deliberative processes within government of determining what future directions of tax policy could be. There are a number of changes in tax policy which are already in train and have been announced by government, and we're certainly happy, or Revenue Group will be very happy to talk through those changes and where any of those changes are up to.
I'll ask Revenue Group a couple of those sorts of questions, but I suppose just specifically on this change that's been well canvassed in the financial review, I'm wondering whether an inflation-based approach or whether a lower flat discount are options that Treasury may have done some analysis on.
I'm not going to speak to the details of any of the advice that we've provided.
I think you don't have to speak to the details of advice that's given to government, but if you're looking at capital gains tax discounts or alternatives to capital gains, I would assume that they would be within the mix.
We provide advice on all aspects of the tax system.
As you'd expect. And as would have happened under your government, Senator Hume.
Well, we weren't looking at slashing the capital gains tax discount, and actually neither were you before the election.
I'm sure Treasury provided you advice on the operations of the tax system. I'd be very surprised if they didn't.
That's not the question that I asked, though, is it, Minister?
Well, that is the answer that the Secretary just gave.
That you are going to provide for the record.
Treasury routinely provides advice to government on the operation and performance of the tax system.
You're really throwing yourself in front of a bullet that was moving pretty slowly. You probably saw this one coming, Minister.
I don't feel threatened by
well, then why don't you let
way.
the Secretary answer the questions?
Well, I'm here appearing as a witness as well, Senator Hume, so I can also provide information to the committee.
I'm wondering if there's been any discussion papers or exposure drafts or consultation documents that have gone out on potential changes to capital gains tax.
That have been publicly released by government.
Well, the tax expenditure statement was released in December. That goes through all of the operation of the tax system, and we're not going to get into the specific advice or discussions on the work given deliberative nature of the budget process.
So the answer is no, that there are no public discussion papers out there or consultation papers that have been made available to the public on this specific measure?
Well, other than the tax expenditure statement, which is released annually and has information about the capital gains tax.
But it's not a consultation paper and it doesn't discuss changes, does it? So,
but I do know there's been a lot of submissions provided to the committee that you supported establishing in the Senate, Senator Hume, the Select Committee on Capital Gains Tax. I noticed they have got a lot of public submissions and public discussions. Well, it's only a Select Committee because you supported it. So I'm sure you're reading them as well.
Absolutely. So despite the work not being public, obviously detailed options have already been reported in the financial press, and they cite sources that are familiar with government deliberations. So I'm wondering whether Treasury can explain how those detailed policy options are being reported in the media if the work hasn't been released publicly.
Who knows? The media work in very mysterious ways in this building. They often cite
do you think it's the Treasurer's office?
Sources. I mean, we're
do you think it might be the Treasurer's office that's flying that kite?
The unedifying squabble that's going on about your leader, Senator
I don't have very much time with the Secretary, Minister, so I'm wondering whether...
The point I'm making is journalists write... I know. It's showed a level of restraint that I'm proud of as well, myself, for doing that. But all I'm saying, the point I'm making is journalists write articles, columns in this building based on a whole range of information, often unsourced.
I would assume it wouldn't come from the public service. That would be a disaster. So therefore,
well,
if it's unsourced, but it's coming from somebody that is familiar with the government deliberations, it sounds like it's coming from the Treasurer's office.
Ask the journalist.
All right. Thanks, Chair.
Thank you very much. Senator McKim.
Yeah, thanks. Just quickly, back on the CGT discount, I wanted to ask Secretary, back in, so we had the Ralph review and then the introduction of the 50% capital gains tax discount, which remains in place today. In the early years of that discount in 2004, the Productivity Commission warned that the 50% CGT discount was inflating property prices in Australia. As an aside, I note that we know from recently released Cabinet papers that Treasury pushed back and actually didn't include the Productivity Commission analysis in the Cabinet submission, which went to Mr Howard's Cabinet when they were considering housing affordability. But I want to ask you...
When was this?
But well before your time as Secretary, so I just, as I said, that's an aside. But what I do want to ask you is whether you would accept the proposition that was raised by the Productivity Commission that the 50% capital gains tax discount is inflating property prices in Australia.
24 years ago.
So, Senator, I think we had a bit of a discussion about this, I think at last estimates.
Every estimate.
And
I'm nothing if not persistent, Minister.
No. And we have, then, and we have discussed at length the different factors which contribute to supply in the housing market and economic outcomes in the housing market. And as you know, and I know that we agree, kind of supply factors are of critical importance here. There is I think so part of the reason I'm hesitating, Senator, is that I've never run revenue group, so this is not an area that I have over the course of my career delved into deeply, but there is, I think, if I would summarise what most of the if you like, kind of academic advice is around what the likely impacts of different tax settings are, most of them go to 2 points. One is it depends very specifically on the details of what's being proposed, and the other is that most of these impacts are relatively modest. It is on the public domain that I think the Henry Tax Review looked at these matters as part of their review, and their Ken Henry's analysis at that time, I don't recall, talked about a level impact, but talked about there being a possibility that the settings as they were at that time could exacerbate cycles. But I think that my reading, and again, happy for you to test with this with Revenue Group, but my reading is that most of the analysis suggests that levels impacts are pretty marginal of changes in tax settings. That doesn't mean that there aren't other impacts, and I think at the last estimates I provided evidence that our assessment that we have provided over time has been that changes in some of these tax settings could, for example, change the balance of owner-occupiers versus investors in the market, and that is that's a different outcome, but an outcome that the sort of the broader debate would suggest is the kind of direction of change. Sorry, I can't be more helpful.
No. Thanks, Ms. Wilkins. So perhaps just to try and drill into that a little bit then, and then I'll just move on quickly to another matter. But all other things being equal, and I certainly accept your proposition on supply side, but all other things being equal, and leaving aside the quantum of any impact, I guess, would you accept that the implementation of the 50% capital gains tax discount, which came, remember, from a baseline of just indexation, would you accept that that does stimulate demand for housing? And under normal economic analysis, all other things being equal, an increase in demand would flow through to an increase in prices, would it not?
Well, I think that the evidence that I provided last time is that I would expect it might change the nature of demand. So if you think about, there's different sources of demand in the housing market, and first-home buyers and owner-occupiers are different from investors. So it would potentially change that.
I understand that, but just in terms of prices, would you not be?
Well, I think most of the evidence, Senator, is that those price impacts are relatively modest. So,
but you would accept that there is a price.
Well,
impact.
It will depend on the details of the policy that is.
Well, I'm asking about the current policy setting, which the Productivity Commission warned in 2004 was putting upward pressure on house prices. Would you accept that general proposition that the 50% capital gains tax discount, compared to what the settings were previously, did put upward pressure and still puts upward pressure on property prices?
It is really difficult to answer questions about all other things equal, and just looking at this, it just feels to me like it's hypothetical, and I don't want to make a comment which then gets used out of context.
All right, thanks. Just quickly on another matter then, Ms Wilkinson, you're on the board of the Reserve Bank. The Reserve Bank's currently put up interest rates. I listened really closely to Ms Bullock's comments immediately following that decision of the board, and it was of interest to me that she named up credit growth. She named up credit growth as one of the inflationary pressures that were of concern to the Reserve Bank board. We know that lending to property investors is skyrocketing at the moment. It's at record highs and it's growing at nearly 20% per annum. Firstly, can I just ask when the board indicated through the Governor that it was concerned about credit growth, does credit growth include lending to property speculators and property investors?
So, Senator, absolutely right. I am on the board of the Reserve Bank. I don't think it's appropriate for me to speak about either deliberations at the Reserve Bank board or, and it's actually, frankly, not. I don't think previous secretaries have talked about their role on the Reserve Bank board or the deliberations of the board or monetary policy. The Governor is appearing before estimates tomorrow morning. She would be best placed to speak to those specific questions. I think that amongst the factors that let me also say, I think there is an enormous amount of transparency around monetary policy decisions these days, what with the statement that comes out after the board meetings, the press conference, the minutes that come out a couple of weeks later, the statement on monetary policy. There is a lot of material there that is available, and I don't have anything to add. I don't think I can usefully add to that material. In that material, one of the things that was highlighted in terms of the things that were stronger than expected in the second half of last year was financial conditions, and in part that was looking at, credit growth is one of the indicators of financial conditions. So
you can't say whether part of credit growth is lending to property investors.
So credit growth, again...
Does that include, does the term credit growth include lending to property investors?
So
Yeah, I was just going to say the bank covers this in their statement on monetary policy on pages 15 and 16.
I don't think it's a controversial question.
Well, it's. I mean, you're asking us questions about the Reserve
but I'm not getting an answer.
view, and it's contained
No,
in their statement.
I'm actually not asking about the Reserve Bank's view. I'm asking whether the term credit growth includes lending to property investors. Which is growing at record highs and is at record levels.
So credit growth
turbocharged
includes
by
all credit.
your policies, Minister.
Credit growth includes all credit. So it includes all credit that's issued across the economy, Dr. Grant. I mean, it's so it includes all sources of credit.
Yeah.
Yes, I don't. Yeah, that's right.
Not controversial. So
I'm going to have to rotate the call if you can.
Thank you.
Finished?
Yep.
Great. Thank you, Senator Kim. Senator Cadbury.
Thank you, Chair. I'll be really quick. Secretary, did you vote for interest rates to increase at the last Monetary Policy Board meeting?
Senator, I don't think it's appropriate for me to speak to the deliberations of the board meeting.
I'm just referring to the media release put out by the RBA on 3rd of February says today's policy decision was unanimous. So we'd have to. You're a member of that.
I am a member of that board.
So you would ergo have to have voted for an increase.
I am a member of that board, and that is the statement that came out from the board.
Did you vote for an increase?
So, Senator, I don't think it's appropriate for me to speak to
I don't have too much time. Let me put the question another way. Why didn't you argue against an interest rate increase?
So, Senator, I am not getting to the question of what were the deliberations within the Reserve Bank Board.
Rightio. Really transparent. I know that I don't think in the opening statement I couldn't find any reference to migration. Does Treasury believe the unprecedented levels of migration that is occurring right now are contributing to inflationary pressures?
Senator, I'll ask Dr. Grant to address this. I mean, again, so let Dr. Grant go ahead.
Hi, Senator. So we do know on the latest data that population growth was 1.5% through the year to June of last year. This hasn't changed a lot in very recent times. So it has come off from a peak of about 2.5% down to 1.5%. And of course, as you know, it has both demand and supply side effects. So we don't see anything here that is giving us a sense of concern on inflation.
On the latest migration data, it shows that the last few years since COVID, we've been issuing visas at a rate 200,000 people more than average, than the historical average before COVID. Are you telling me that many more people, 600,000 or more people on average, is not creating inflationary pressures in the Australian economy?
I'm saying that compared to population growth in around the 2010s was about 1.4%, I think, and it's now sitting at around 1.5. So we're not seeing significant shifts. Now, of course, you're right with COVID.
You're just saying it was at 2.5, just
in the peak of COVID.
Yeah.
So So
did that create inflationary pressures, the 2.5?
Well, no, Senator, because what was happening at that time was a payback from what had happened with the borders being closed. So as you know, there was an incredible disruption in the economy through that period, globally and domestically. So we wouldn't be assessing that. It goes to, I suppose, the point of the Secretary that the context matters, and the context for that was
we are way above the catch-up. I don't have time to go through it, but that's unbelievable. The Treasury doesn't think migration plays a role in the inflation we're seeing. I don't think the Australian people would share that view.
That's not what they said.
So, they did. Well,
use the numbers instead of the rhetoric.
They absolutely did. They just did. They said the 2.5% was catch-up and didn't force that. So I've got to move on. I haven't got a lot of time. I've just noticed on the AOFM website that our debt is already sitting at gross debt at $993 billion. That is actually above what is predicted in my IFO for the end of the year. Is Treasury still confident we won't hit $1 trillion in debt by the end of this financial year?
I hate to irritate you. I think I don't have that answer. I think that's a question if you could put to fiscal group when they come at 1:15.
You don't keep track. I mean, the monthly statements just came out.
No, we do keep track. I don't have that as part of my briefing.
I noticed that the monthly statement that came out on the 31st of January from the Minister for Finance, from Minister Gallagher, it has the year to date by end of December underlying cash balance sitting at nearly 34 billion, just under 34 billion. The prediction in MyEFO released that month in December was for 37. So we're only 3 billion off the... I know these figures are very lumpy, but it does seem to me there's a high risk here that the underlying cash balance will be greater than 37 billion. And obviously the headline cash is more important for the gross debt figure. And could we hit $1 trillion in debt this financial year?
So, Senator, that'll depend on the outcome, over the next 6 months. What we've experienced over the last several years is that there's been a reasonably significant variation between our estimate of what the deficit would be in a particular year and what the outcome was. Spending has often been lower than we had predicted, and in many cases revenue's been a bit higher.
Just moving on to the net zero modelling, last night at the Rural Affairs Committee, ABARES revealed that they've taken your modelling. That to get to net zero, you'd need 119 million tonnes of carbon sequestration by 2050. They've calculated how much that would mean in terms of lost agricultural land, lost farmland. Their estimates come at 18 million hectares would need to be converted to 2050 from farming to carbon credit production. Is the Treasury aware of those ABARES calculations, and did you factor in the net zero target analysis and modelling you did that Australia would have to give up 3 times the size of Tasmania in farming land to get to net zero?
Senator, we are aware of that report and have had quite a number of conversations with ABARES over the course of the net zero modelling that we undertook, and had advice from ABARES on land sequestration. Within that report, we noted that there is a lot of uncertainty around land sequestration and how much land and the types of land, but also the types of land-based sequestration that you can actually access. ABARES did do some more work, and that's since been published, and so we are aware of that
Did you have the 18 million hectares figure, or did the government have that 18 million hectares figure before they set the 2035 targets?
No, Senator, we did not.
You didn't?
No.
So how could the government set an emissions target when it didn't even know how much farming land and production we'd have to give up to meet that target?
The point that we do make in the report, Senator, is that farmers will be able to do what they, make decisions about their land use. These will be economical decisions that they make, business decisions. Part of that can be a mix of both standard agricultural practices that we have now, but also sequestration. And I know that ABARES make that point as well in their report that just
one other issue I think that arises from the modelling is that they come out, I think they said last night, well, the carbon price, the price for the credits from sequestration would end up being just over $100 a tonne, but in your modelling, shadow carbon prices were more like near $300 a tonne. So wouldn't that indicate that actually we could end up doing a lot more than 119 million tonnes of carbon sequestration if the marginal cost or price of carbon sequestration is much below your shadow price? In equilibrium, you'd expect actually more more farming land to be given up, because this is not capped. There's no cap on how much farming land can be lost. So have you looked at that? What's the difference in the prices?
So with those estimates, Senator, they do, again, talk about the uncertainty around that figure, both the number of hectares or acres, but also the price, the marginal price.
But the problem for us in rural areas is the uncertainty here seems to be on the downside for us, in the sense that more farming production could in fact be lost, given it seems to be a much cheaper form of carbon abatement that you assume in your modelling. And that means more rural towns will be without jobs in the farming sector than the government has estimated. Have you looked at the fact that the ABARES has identified 7 local government areas that would face a more than 5% reduction in farming output, and there doesn't seem to be any assistance for those areas of the country under the government's net zero plans?
The balance of that would have to be the sequestration practices being at least as profitable as the farming practices. So it would be zero.
Of course, that's for the farmers though. That's not for the local government area. That's not for the fencing contractors, the truck drivers, even the hotels and cafes, because there will be fewer people. No one you don't need people to generate carbon credits. It's just scrub. So they lose all those jobs. Have you done any analysis of that adjustment that would be required over those 7 local government areas and whether they should deserve some help given they're being asked to bear the burden of net zero?
You're at 9 minutes.
Okay.
Yeah, I mean, we have the Net Zero Agency whose job is to essentially support communities through transition that the economy is going through, and that will continue. We remain committed to supporting local communities as our economy changes. We're making investments in it.
One more question, if I can. I know we're a bit over time. I didn't get much, though, compared to others. I just note that since mid-October, the 10-year yield on Australian government bonds has increased by 13%. It's gone from 4.3 to 4.8. In comparable countries, we're only seeing a 3% increase in yields in the US. It's slightly decreased in the UK and a 7% increase in Canadian yields. Why are Australian government interest rates, our interest rates, going up by so much compared to comparable countries?
So, Senator, as you know, there are a lot of movements happening in yield curves across advanced economies at the moment. Part of this is a global uncertainty, global trade policy story, and then some is very much domestically focused. We've also seen recent interest rate change in Australia. This is just the market making its assessment of what will happen in yield curves.
Isn't the simpler answer here is that the market has lost confidence that the government is going to contain inflation? That's the simple answer, that in those other countries they haven't seen such an increase in yields, but obviously the market, given the unexpected surge in inflation, is now saying that, hey, we don't have confidence that you guys are going to control this.
Yeah, as you know, Senator, the market looks at a range of factors in assessing this. Part of it will be interest rates, part of it is the growth outlook, just kind of the prospects for Australia within the global economy. They would take a fairly broad view of what it is that matters.
It's a multi-billion-dollar cost to our country now that we're having to borrow at the highest interest rates in the developed world. No other developed country has a 10-year government bond yield, not Italy, not anywhere above 4.8%. So it's a big cost to Australians. Thank you, Chair.
Thank you. I note that we are a little over time for our break, but I understand Senator Patterson's got a couple more questions and that's it. So if we can just finish off this block with Senator Patterson, then we'll break.
Thank you, Chair and Secretary. Thank you for your indulgence. I just want to go back to your opening statement where you said, and I quote, private demand has made a stronger contribution to growth than public demand over the last 4 quarters. What was the rate of growth of private demand and the rate of growth of public demand in the September national accounts?
So, Senator, in the September quarter national accounts, new private final demand grew by 1.2% to be 3.1% higher through the year, and new public final demand grew by 1.1% in the quarter to be 1.5% higher through the year.
So I noticed the emphasis on the word new. That's not the table that I have from the ABS. I've got public final demand, 1.2% for the September quarter, private final demand 1.1% to the quarter. What is the reason for you choosing new private and new public demand?
So, Senator, when we use the term new, that means that we are abstracting from second-hand asset sales between the public and private sectors. This is a long-standing practice. There is a footnote to the forecast tables that let you know we focus on new for both so that asset transfers don't affect our view of what is happening in the private and the public sectors.
So that's the most relevant comparison to the forecasts that are published in the budget papers.
I'm interested in understanding why you think assets should be excluded. So if the government goes and buys used assets, why shouldn't that count?
So it's the transfer of assets, Senator. So imagine something got built by the private sector and was transferred to the government sector or vice versa. That can hit the growth rates when it's simply just transferring of assets. So we try to abstract from that.
So if the government went and bought 100,000 used cars, that wouldn't have any inflationary effect?
So we would look at, again, new public final demand. So if that was the case, you would see an asset transfer from the private sector to the public sector. So one would be down and one would be up. We just try to abstract from that kind of noise in the data. That is all this is.
But that wasn't my question.
Yeah.
If the government went on a spending spree to buy 100,000 used cars, just as an example, would that have an inflationary effect? What would happen to the price of used cars?
Yep. So that is different in the sense of there would be an income effect from that. So income would shift from the private sector. Well, the government would pay the private sector for those cars. They would earn income for that. So that would have an income flow, but it wouldn't have an activity flow. And we focus very much on the activity impact.
And that's why I've asked about inflation. What would be the effect on inflation if the government went and bought 100,000 used cars?
Well, that's a hypothetical.
Well, just trying to understand.
The government is not doing that.
Yeah, thank you. Glad to hear that, Minister. You never know. I'm interested in unpacking, understanding why this is Treasury's apparently preferred method. So I've asked what the effect. Senator O'Neill, I don't need the interjections.
Please point numbers.
Thanks, Senator O'Neill.
Purposes rather than hypotheticals.
Dr. Grant, could you answer the question, please?
Yes, I can.
I think she has answered the question about 6 times.
No, because my question was about inflation, and Dr. Grant hasn't explained what the impact on inflation would be.
So, Senator, I want to take a lot of care about the kind of context and the counterfactual. So maybe if I step back a little bit. Whenever we are asked to assess the impact of anything, it depends on a lot of different factors. So we would look at whatever was actually happening and we would assess it at that point. But as the Secretary said, this is a $2.8 trillion economy. So something like the purchase of vehicles in the kind of magnitude that you're talking about would be difficult to affect the aggregate. So it's just hard for me to get into kind of details about certain things that go up or down and what that would mean when, as you know, the economy is pretty interrelated and it's pretty connected. We would want to know exactly what it was that we thought was happening, what the context was within that, and it's very hard for me to speculate.
Well, let me give you a real example, not a hypothetical example. As my colleague Senator Bragg has pointed out, the government is buying houses from the private market, used houses from the private market, and calling them new as part of an attempt to pump up the numbers of housing construction.
So negative,
that's a real example. Pardon?
So negative.
Well, it's true.
I mean, it's literally true. So that's a real example. We don't need the hypothetical used cars example. What the effect of government buying houses in the market be on inflation? Is it upward or downward?
So again, Senator, we think about activity. If it's a transfer of an asset, whether that be a car or a house, that doesn't affect activity within the economy.
But would it affect inflation?
Well, we would link inflation to activity.
Right.
So if you're seeing asset transfers throughout the economy, and we don't think that's having an overall impact on activity, then you wouldn't be thinking about the link to inflation particularly strongly.
Well, I think the government's argument, as I understand it, on housing is it does affect activity. This is going to produce more houses. The government buying houses is going to generate more houses.
So again, Senator, I really want to take it, but we're talking about one sector of the economy. I'm talking about the aggregate economy.
And I'm asking what would be the contribution of this sector to the aggregate? Would it be up or down on inflation?
Also, Senator, I couldn't possibly speculate on that in this kind of hypothetical. It's
not hypothetical, it's actual.
Well, again, in terms of this economy, big aggregates, right? Like that's where we focus for assessing what is happening in aggregate demand, aggregate supply, where does it sit in balance, what does that mean for the labour market, and what does it mean for inflation?
But I can't ask you about 1,000 different transactions that the government enters into. That would be a waste of everyone's time. And I appreciate that any one decision by government and any one sector will make a small contribution, but I still want to know what that contribution is. Would it be positive or negative?
I just can't speculate, Senator, on that. I really can't.
Senator Cavan, I want to clarify.
It's just clarification. Dr. Grant, you said earlier that the historical population average growth is 1.5. It seemed a bit high to me, so I went and had a look at the data on estimated residential population. I don't know what data set you're using, but on this one, ABS figures, the average this century pre-COVID was 1.1% per year. Even from 2010 to 2020 was 1.2. I'm just wondering, where did you get 1.5 from?
So, Senator, I was referring, so in the population statement that was released in January, in one of the early pages, I'm just on page 1 with one of the tables, I was referring to our most recent population growth number, which was 1.5. Right. That's the most recent number. Yep. And I made reference to an average growth rate, which is in paragraph 2, and it says that the average growth rate in population was 1.4% experienced in the 2010s. That was the figure I was referring to. Well,
maybe you could just clarify for that on notice, because I've got the data right here in front of me and I'm getting 1.2. I'm just highlighting from 2010 to 2019, so not factoring in COVID. I've got 1.2.
Very happy to check that, Senator.
1.4 seems a bit high.
Yep, I can take that.
And over this century, just to be clear, I've got 1.1 for the 21st century, but pre-COVID. Okay, thank you.
Okay, I'll just move on to a final line of questioning. Thank you, Chair. So I want to ask about RBA forecasts for the economy. In the Statement on Monetary Policy in February, there's now really quite a large divergence between the RBA's forecast for the economy and Treasury's forecast for the economy, particularly economic growth. Secretary, you'd be aware of that divergence?
I am, yes.
What do you think is the reason for the RBA's significantly more pessimistic view about growth? For example, to June 27, they say the economy will grow 1.6%. You say it'll grow 2.25%. To June 28, they say it'll grow by 1.6%. You say it'll grow by 2.5%.
You should probably ask the RBA about what underpins their forecasts. I don't think it's reasonable to ask Treasury. Treasury will update their forecasts in the normal way through the budget process.
Sorry, no, this is macro. I'm asking about Treasury's forecasts and why they're different from the RBA's forecasts.
Well,
this
you
is
asked
a utterly routine estimates question.
Well, if I heard your question properly, you said what has led to the RBA revising their forecasts, and I'm saying that's a question you should put to the RBA when they appear. And we will.
Ms Wilkinson, why is Treasury so much more optimistic than the RBA about economic growth?
So our forecasts, the most recent forecasts that Treasury has published were the forecasts in MyEFO. Mm-hmm. Obviously, we will update our forecasts in the budget context. So there is partly a timing question between MyEFO and the RBA forecasts, which were released a couple of weeks ago. There are some key parameters which are different between those forecasts. Dr Grant can probably just speak to a couple of those key underlying assumptions which are different because those have changed between MyEFO and now.
Please do explain why in the 6 weeks between MyEFO and the February SMP there's been such a big change in the outlook for the economy.
So, Senator, I just want to be clear that I'm just going to comment on some of the assumptions that underpin both sets of forecasts that have moved in between the publication of the MyEFO forecast and then the RBA's more recent forecasts. So as you know, the interest rate expectation by the market, so it's a technical assumption, not a view we take on interest rates, but we have seen the market shift their interest rate expectations. The exchange rate has also appreciated quite a bit in that period, and we have seen movements in commodity prices that are so in our assumptions there are just a lot of things that move in a volatile way. They do matter for when we set forecasts. We will be updating all of our technical assumptions for the budget.
So you're saying that the difference of 6 weeks or thereabouts from MyEFO and the SMP is enough to account for a 0.15% difference in the 26 financial year, a 0.65 difference in the 27 financial year, and a 0.9 difference in the 28 financial year. I mean, these are orders of magnitude more pessimistic.
Sorry, Senator, I should have been clearer to say that one of the factors that will be impacting the difference will be an update in technical assumptions.
What are some of the others?
That will depend on the data that is released between now and budget, we will take a look at it, but we have some partial data for the December quarter. And as the Secretary has said, the private sector has shown more strength than we expected in the second half of last year. So we know that. And we also know that within that, we've had labour market tightness and we've seen the inflation rate come up a little more than we expected.
Again,
we will assess all of that for budget.
These two things were released about 6 weeks apart. It's a lot of change in a very short period of time. You're really saying the economy turned on a dime in that 6-week period?
I'm saying that the technical assumptions have shifted quite a bit in that 6-week period.
Okay. What do you think? What's the reason for such persistently low forecasts of economic growth? I mean, the RBA's forecast of 1.6% economic growth is the lowest in its history.
So the RBA would be best placed to explain their forecast, Senator.
But I'm interested in your belief about why the economy is growing so slowly.
Well, you're using the RBA's forecast, so I think it's appropriate you ask the RBA.
We will certainly ask the RBA.
We can speak to our forecasts as published at MyEFO, and we will speak to our forecasts when they are published at budget. But and I think we had a discussion about this at last estimates. So happy, yeah.
Is low productivity growth contributing to low economic growth?
In our forecasts? Go ahead.
So in the detailed forecast period, Senator, when we build up from the bottom of the economy, so we are looking at all sectors of the expenditure component of GDP. And again, it goes to what the Secretary said. We will assess what has changed, what looks different to what we expected, why do we think that looks different, and what is driving those differences. Once we've done that in the kind of the next 2 years, so the detailed forecast period is very bottom-up driven by us, we will then think about the economy at a more aggregate level. And at that kind of time frame, the supply side and where you think the economy balances becomes particularly important. So the productivity numbers and the assumption that we make on productivity does drive our view of potential output growth in the medium term.
But, I mean, these are very low rates of economic growth to be generating inflation, aren't they? One of the reasons why you'd be having inflation even with such low levels of economic growth is because productivity is not growing, isn't that right?
So our growth rates are 2.25%. So we forecast real GDP to grow by 2.25% in 2025-26 and 2.25% in 2026-27.
Do you think we're going to hit those numbers?
They are our latest numbers, Senator.
So
they're our latest forecasts.
Yes.
We will, of course, update them for budget, but they are our latest forecasts.
Most economists would say that's pretty optimistic.
Senator, all we can speak to is the latest published forecasts.
Okay. What's your latest expectations about productivity growth? What's the assumption you're making about productivity growth?
So the long-term assumption for productivity growth is 1.2%, and it takes a while to get there. So in the near-term detailed forecast period, it is much lower than that, and it transitions to 1.2 over the forward estimates.
When's the last time we hit 1.2?
So, Senator, this is based on the annual national accounts, and I say that because you do get slight revisions in the quarterly, but for these numbers, it is important. Productivity grew by 1.5% in 2021-22. That's labour productivity.
So, and since then, how have we gone?
So, Senator, this comes back to the question the discussion we had right at the beginning about cyclical productivity growth and structural, and you know, one of the challenges in thinking about productivity growth is that there are these long-term structural trends, and so we have to have a short-run assumption about productivity growth, which is, as I understand it, not that different from where the Reserve Bank is. The Reserve Bank only forecasts over the next 2 years. They don't have to think about what the long-term projections are, but we have to think about what those would be.
But since that year where we had that 1.5% growth, how have we gone? My understanding is for the next few years after that it was negative, and in recent years it's been maxing out at kind of 0.7, 0.8%. Is that right?
So, like the Secretary just said, like you are right, we saw a very subdued growth in productivity in 2023-24, It was negative in 2024-25. On the latest quarterly numbers, and you have to take care, they can be volatile, but it grew by 0.2% in the quarter, and it's at 0.8% higher through the year.
So still a long way below the 1.2% assumption.
If I just remind you that over the decade to 2020, average annual labour productivity growth in Australia was the slowest in 60 years. And I think even Senator Hume acknowledged that when you were in government, you didn't do enough on the productivity agenda. In fact, you had the Productivity Commission reports and they sat on the shelf and you did nothing. And that is why, since coming to government, we have, on Treasury advice, revised back down the productivity assumption in the budget. And that is why the Treasurer is leading a productivity agenda, which I'll note on the two recent tests of that, you've opposed the EPBC reforms and the regulatory reform bill. You have opposed both of them. So let's just be clear here, while you sit here and criticise efforts around productivity, that you are obstructing and have obstructed in the Senate every attempt to address some of the challenges in the economy.
Minister, you've been in government for 4 years and productivity's gone backwards. Productivity did not go backwards under the previous government. It's a good thing.
It's a long-term challenge facing our economy that you ignored in government, and we are investing in, and the Treasurer has already said that productivity will be a priority.
We went backwards about a decade in productivity in your first
priority term. And is being considered in the budget context. But when you have to actually vote and do something about it, you guys walk away.
We're not in government, Minister, you are.
Yeah, well, you're sort of a semblance of an opposition at the moment, though, aren't you? And you still have a vote in the Senate, and you voted no to the EPBC reforms, which were about addressing some of these challenges in the economy. You said no to them. So let's just put your record on the table here.
Yeah, well, let's see your record of your actual performance in government over the last 4 years, which is productivity going backwards.
Yes, and I'm very happy to be measured by that, Senator Patterson.
Wow. I wouldn't be boasting about backward sliding productivity, but that's just me.
Well, have a look at what you did when you were in government. Absolutely nothing.
Productivity
You left us a mess, and the Treasurer has been addressing it since coming to government, and we will continue to do so. It is a long-term challenge.
Apparently.
Do you have any more questions?
I do, Chair, but I sense we're really kind of bumping up against time, so I will have to put the rest on notice.
I much appreciate that. Thank you. So we will now break for suspend for a short break. Senator Bragg still has some questions for corporate, so Secretary, you are free to go. But if anyone associated with,
Just one for the Secretary.
Oh, sorry. Okay, one quick one before we go to a break.
Sorry, just one quickly. Thanks, Secretary. Just in relation to the appointment of the ASIC chair, were you involved with that?
Yes.
Are you on the panel?
Yes, I chaired the panel.
And who else was on the panel?
John Lonsdale was on the panel, and Catherine Jones, the Secretary of Attorney Generals, was on the panel.
Okay. And I guess my question is, I mean, ASIC has had a very bad enforcement record. In the last couple of years, we've seen First Guardian Shield, Lion collapses. We've seen very few prosecutions, in fact, declined number of prosecutions and referrals to DPP. So I'm just wondering whether other people with strong prosecution experience were considered for this role.
There were a range of candidates who were interviewed through the process.
External?
Yes.
Okay, thank you.
Thank you. So we'll suspend for a short break. We can say goodbye to you, Ms Wilkinson. Those officials related to corporate, if you could stay until after the break. I would also just like to note that we will table your opening statement and also advise anyone who's following at home or elsewhere that the National Competition Council will be released from the program. So we'll see everyone at 11:45. Thank you. I'm going to kick off then. That's okay. We'll welcome people back and go straight to Senator Bragg to finish off this session. Over to you, Senator.
This is corporate.
Yep. Yes.
Are you corporate?
I am corporate, Senator.
Okay. Very good. Well, that's good. So, what involvement do you have with freedom of information requests?
So freedom of information requests are actually managed by, or the area that coordinates those is in our legal division, and they're going to appear with Revenue Group.
Okay, well, that has solved that issue.
Yeah.
So everything to do with corporate, just so I'm clear, because I don't want to get,
No.
I don't want to have an unpleasant experience at estimates. But
isn't that what it's about?
Well, no, quite like.
Depends which side of the table.
14 hours a day is not.
Well, it's quite a good opportunity to spend time with colleagues.
I don't think you guys need any more of that.
Well, we like talking to you, though. It's all good.
From the outside looking in, saying.
But we're all parliamentary colleagues. That's the great thing about Australia. So I guess then the question is, are all the matters to do with corporate now living in another house?
No. So all the matters to do with corporate reside with me. But I think at the last estimates hearing, so there's been a restructure of the department since the last estimates hearing.
Okay.
They used to be in the same group, corporate and legal.
Okay.
That's now not the case. So I've got the corporate component, but our law division with legal takes over freedom of information.
Okay, so FOIs, issues to do with the commissioning of reports, governance reports and the like, all go to legal.
This is going to be deeply frustrating for you, Senator, and I apologise in advance. If there's issues around the contracting and the governance, that may well be in corporate, but in terms of freedom of information and release of documents and those sorts of things, that will be an issue for the law division.
Okay, so in terms of the Deloitte report that was commissioned by a Treasury agency, is that something that I can ask you about?
I don't think so, Senator. I think, given it was commissioned by an agency of the Treasury, I would direct you to, I suspect that's Housing Group. But if it's about a freedom of information request with respect to that, or aspects of freedom of information, you may wish to direct that to Revenue and Law Division. But if the report itself was commissioned by one of our agencies, it's not a matter for us in terms of corporate.
Okay, I'm done then.
Thank you so much.
Good morning to you,
Okay, for corporate around the ASIC appointment. Obviously, there's been an announcement around the, not ASIC appointment, APRA appointment. There's been announcements around ASIC, but there haven't been around APRA. But I do know that Mr. Longo and Ms. Cole finish on around the same month. Yep. So what's the progress on replacement for Ms. Cole?
I might have to get back to you on notice about that, Senator Hume, but I think my colleagues from Markets Group will be here and they may have more of an update on that. So we would help manage some process issues, but in terms of the back end of it, that might be Markets Group. But if you don't mind, we'll take it on notice and see what we can get.
Can I ask about the process issues?
I don't have any information on that with me, Senator.
Okay. Okay. Who is it that decides whether APRA will restructure after a high-profile departure like Ms. Cole's, or whether it will be a direct replacement for her specific role, her enforcer role?
Senator, it would be my assumption that that is a matter for the agency head, so it would be a matter for Mr. Lonsdale.
Okay. Is it something that gets discussed with you, Minister? Does the agency head discuss it with you, or is it something that you discuss with the agency head, whether it's a sort of direct replacement for a particular person in a particular role, or whether there is a sort of a more broader restructuring of the agency?
Yeah, I'm not aware.
Treasurer.
I'm not aware if those conversations have taken place, Senator. They may have with the Treasurer, but we can take that for you on notice and see if Markets Group might have an answer.
Okay, all right. Can I just be a little bit cheeky here? If legal's gone and corporate's gone and you can't answer questions about appointments, processes, what's corporate do?
So, Senator, we do have appointments processes with us, but you're asking about the state, and so we manage aspects of that process, but you're asking about the organisational operations of that within a portfolio that's supported by our Markets Group. You're further asking about where the timelines are for decisions, which are a matter for the Minister, but I will check with colleagues, Senator, and try and get you an answer on notice. We handle the process aspects, so once decisions have been made, my appointments team will work through the Cabinet appointments process in a usual way, but in terms of some of the aspects that you're talking about, they would more ordinarily be dealt with either by the Minister's office or by the Markets Group.
Okay, thank you. Thank you, Chair. Okay. So I think that is it for everyone related to the corporate Department of Macro International Corp.
I did have one corporate.
Oh, you've got one corporate. Okay.
That's all right. If I could just briefly, this might not be the right place, but statement of expectations, is that looked after by corporate? Are you the guardian of?
No, Senator. Statement of expectations aren't. I'm not the guardian of those. They will be addressed with by. So, for example, in Markets Group, they've got regulators in their purview who they'll be looking at the statement of expectations. And similarly for other areas who've got regulators within their orbit, be more likely to.
So it's group by group.
It's
rather
group by
than
group.
A central function.
It's group by group.
Okay, I don't need to. I'll pursue that group by group then. Thank you.
Thank you. Okay, I think now you can. So, thank you very much for coming this morning. And we will welcome representatives from the Department of Treasury Markets Group and invite them to enter the room and join the front of the table.
Yes.
That's where my questions are.
Yes.
Right, Sean? My legal question now.
Do you want the org chart?
Yeah, I might.
That might help. Okay, do we have everyone ready to go? Yep, I think so. We will welcome to the representatives from Department of Treasury Markets Group. I'm going to go to Senator Sharma for first round of questions. Thanks.
Thanks, Chair, and good morning. I just wanted to ask about the statement of expectations. Which regulators does Markets Group have responsibility for within the Treasury portfolio that would normally be expected to be issued with a statement of expectations?
So James Kelly, Deputy Secretary, Markets Group. We're responsible for quite a large number of agencies, but to kind of go to the more obvious ones, they would include ASIC, APRA, Australian Competition and Consumer Commission, the Payment Systems Board, which is part of, sits within the RBA, but there's a separate statement of expectations in respect of just that particular function. The Australian Financial
Office of Financial Management?
No, not that's in another group, I think fiscal group.
Okay.
And the Australian Financial Security Authority is another.
Okay.
So they're kind of the major ones for which we would do statements of expectations. Okay. And I think all of those currently have a statement.
So my understanding from your website is that ASIC does not have an updated statement of expectations. The Payment System Board at the Reserve Bank does not. I'm not sure. APRA does, I believe. The ACCC does.
So I would say they all have statement of expectations. If your question is more, have they been updated very recently? That's some of them are longer standing, some of them are more recent. So ACCC, for example, has been updated not that long ago, but it depends on the particular agency. ASFA.
But ASIC, I understand, that dates, the last statement of expectations dates to the previous government.
And it's discussed at Senator Smith's, I think that was 2021.
So when will the statement of expectations for ASIC be issued?
So Minister, we're working with the Treasurer to update the statement of expectations following the Economic Reform Roundtable. So that's in train, but ultimately that's a matter for the Treasurer to consider the kind of the statement of expectation and kind of provide it. We also, in this kind of process with the regulators, with them to go through and develop a statement of intent.
When was the Economic Reform Roundtable?
It feels like a long time ago, August last year.
Okay, and I thought one of the outcomes from that was that the government agreed that ministers should issue statements of expectations for all regulators by the end of 2025, but ASIC, one of the most important regulators.
There was not a date put on it, I think, directly, but we have worked. We have done a draft of an updated statement of expectations with those key agencies that we completed at the end of last year. So, we've done that first round. Other than, I think, ACCC, we decided that its current statement, which was pretty recent, contained the relevant language that went to expectations around better regulation. So at this stage, we haven't actively pursued that one. But of course, the Treasurer could decide he does want to do that.
I think following from December estimates, and I think I recall there was also a discussion about allowing the new chair to come in to ASIC to shape the new statement of expectations. So there is a timing issue with that regulator. Like, only fair that the new chair should be able to have input or, consultation over the statement of expectations. So that will occur.
Yeah, and as the Minister said, we were operating on that basis, and that was effectively the process followed with the Mr. Longo back in 2021, where he was an incoming chair, and a new statement of expectations was prepared and discussed with him.
Okay, but the incoming chair at ASIC is already at ASIC, right? So have those consultations commenced?
Well, that will occur now the appointment's made. I mean, just because she was at ASIC, she wasn't in the role of chair, and obviously now that she is in that role, that work will be finalised. She was announced last week.
Mm-hmm. So have consultations been undertaken with Ms Court then on the statement of expectations yet? Or are you going to wait until she...
They will.
But only when she formally assumes the role of chair in May, as I understand it, or are they going to be undertaken
Well,
now?
we can take on notice that's outside of my portfolio area, so I'm happy to take on notice how they'll approach that task in the interim.
I mean, what I can add, Senator, is, in preparing a draft, we always speak to the relevant regulator. So, we've had discussions with staff. That's quite separate, as the Minister intimated, from actually talking to a person who's now in the chair role as to whether they themselves ultimately are comfortable with that statement, or how they will read. In some ways, the critical thing is how they'll read the statement and how it relates to a potential statement of intent.
Because I understand the ATO is in a similar position. There hasn't been issued with a statement of expectations under this government. Is the ATO your responsibility as well, Mr.
The revenue group, which will appear later, Senator.
So there's no... I was a bit surprised because I asked corporate about this. I think on my count there's at least 10 bodies regulating bodies or regulators that Treasury has responsibility for, and which it's responsible for issuing statements of expectations for. One of the main outcomes from the Economic Reform Roundtable last year was that everyone will get an updated statement of expectations. On my count, at least 5 of Treasury's bodies do not have one, including important bodies like the ATO, ASIC, the Tax Practitioners Board, the Payment System Board, the Foreign Investment Division. 5 out of 10, for a government that's been in power for 4 years, no statements of expectations, and it's one of the few outcomes from the Productivity Roundtable. How do you explain that, Minister?
Well, there have been new statements of expectations issued across government because I've been involved in those. They often require substantial work. It's not just writing, 3 pages and sending it on its way. It requires consultation with the organisation and across government in some instances, but that work will be being done.
Mr Kelly, can I ask, how many drafts for the ASIC statement of expectations have you provided to the Treasurer's office in the past 4 years?
Senator, I think there's actually a question on notice that we're still, it's still
we haven't got an answer to that one, have we?
I think it's best to take that on notice and kind of deal with it.
Well, there was over 550 quans asked in December. Around 500 of them have been answered. The previous witness said there's about 10% that are outstanding, so about 50. it may be one of those.
But you could just answer it now, Mr Kelly, if you know the answer, because I presume you saw the draft response to the question on notice.
Senator, I do not have an answer with me today, and nor can I recollect what the answer is from having seen a previous draft.
Would you be able to check with officials in Treasury and come back to me during the course of today?
If it's possible, yes, Senator.
Thank you.
Are you done? Oh, thantor you. Okay, Senator Canavan.
Thank you, Chair. I just wanted to ask about some reviews, I think, that are within the markets group. Have you provided a draft government response to the statutory inquiry into ASIC, the takeovers of panel in the corporations legislation?
Senator, I'm just going to check my folder.
Sure. I believe this was tabled in, or report was, tabled, it says here, in April 2024.
So, Senator, I'm assuming you're asking the question because we haven't provided a response.
Well, I'm asking, my understanding here is that the government has not responded, but have you provided a draft response or any advice on that report to the government? It's getting up to 2 years now.
Can you just tell me the name of the
statutory inquiry into ASIC, the takeovers of panel and the corporations legislation?
That is an inquiry in which we have provided a draft response.
You have provided a draft response. When did you provide that response to government?
I don't have that information, Senator. I'd have to take that on notice.
Okay, all right. The next one I'm interested in is the Senate inquiry into bank closures in regional Australia. I don't think we've got a response on that. Not that I've seen.
No, we haven't. We haven't provided one.
Oh, I don't think we provided one, no.
Yeah, I don't think we've provided a draft response.
Haven't provided a draft on that. Have you briefed the Minister at all, provided a brief on the report?
Senator, we've done a range of briefing and a lot of work related to regional banking issues and related to regional banking, the kind of distribution of cash and the acceptance of cash in the system. So it is a major focus or kind of stream of work within the group currently. It's just those resources have been used to advance the substantive issues and not at this stage provide.
All right, we're getting on nearly 2 years from that, so it seems strange there hasn't been a government response to it. I might come back to the regional banking issues. Next one I wanted to check was inquiry into promoting economic dynamism, competition and business formation. It was also in May 2024. Have you provided a draft response on that?
No, not at this stage, Senator.
The inquiry into insurers' responses to 2022 major flood claims?
The notes I have say we have not yet provided a response on that.
Cyclone reinsurance pool inquiry?
No, Senator.
The financial services regulatory framework in relation to financial abuse?
Not yet, Senator.
Impact of climate risk on insurance premiums and availability inquiry?
No, Senator.
So I think I've just read out 1, 2, 3, 4, 5, 6, 7 reports. Most of these in 2024, only one tabled last year. You've only prepared a draft response on one of those. Is that right?
So Senator, when our parliamentary committee makes a report, we're obviously mindful of the requested timelines for a government response that the kind of houses have resolved, which is 3 months for, I think, Senate and joint, 6 months for House committee reports. We always factor that into the discussions we have with ministers and officers as to when they would like a response. But we're also conscious of not diverting resources to providing responses if we're not at the right time to give a government response. So a number of the committee reports that you refer to are on kind of areas of major focus and at work within the department, like insurance is another example of that, regional banking was one. And, when a report turns up while the government is in a process of working through a range of issues on a matter, then it's not always simple, let's just do a response to this report now. It typically is often better to wait till the government has landed the key outcomes of where it wants to go. And then that's the point at which sometimes we'll prepare a response.
Well, you say you're factoring that into account, but we're getting on nearly 2 years with some of those. So I'm struggling to understand how that's being factored into account. Some of these reports have been initiated by the government. Some of them had a fair amount of fanfare associated with them. Australians have made submissions. They've provide their own time to participate in the inquiry. I'm just wondering what level of respect you are paying to those people and to the Parliament by not even preparing a draft response within the time frames that are requested by both Houses of Parliament.
Well, I can say that we do, of course, respect the Parliament and the committee system and reports. I would say Markets Group in particular is an area where there is a high workload usually from the Economics Committee here, and numbers of reports. On top of that, there's a whole range of other things Markets Group are doing. So I think it is about managing workloads. I'm happy to get a report or some advice back to you, Senator Canavan, about the approach for finalising government responses to those reports that you've asked about today. But, you know, we prioritise questions on notice, you know, all the other work markets are doing, and this is an element of their work, but I'm happy to see if we can provide an update for you.
Okay, well, Minister, I might just ask you, I mean, take the Promoting Economic Dynamism inquiry that was referred by the Treasurer, Jim Chalmers, on the 31st of January 2023. You know, people made submissions, as I said, to this inquiry. I'm just trying to find out. The internet seems a bit slow, trying to find out how many submissions were made. 62 submissions, by the look of it, were made to this inquiry. Have you, or has someone, the Treasurer, inquired with his officials about getting a response to this, if this was important enough to refer to the House of Representatives Economics Committee? Why hasn't the government, almost 2 years on from its report, even drafted a response, let alone provided one?
Well, I've already undertaken to come back to you with an update on finalising government responses, but I would also say that we do use committee reports routinely to assist us with work that is ongoing. Like it doesn't mean nothing's happening. If you know, if I'm looking at the terms of reference for that report, for example, you know, that covers quite a bit of work that the Assistant Minister Lee, probably the Assistant Treasurer and the Treasurer are undertaking across their portfolios. But I'm absolutely happy to try and provide you with a more comprehensive response on those reports and when you can expect a government response.
Okay, thank you. I might, and maybe my colleague Senator Bragg would take an interest in this too. I might want to jump in. One of those you mentioned is the ASIC investigation. That was a very extensive inquiry that Senator Bragg led and did a lot of good work on. Had extensive input from the general public. Last estimates we did ask about that. That estimates, I believe, that there would be a government response. As I mentioned earlier, it was tabled in May 2024. We haven't actually got an answer yet, though, from the question on notice on this. So can I just check that that was one where the draft response has been prepared, is that right? The ASIC inquiry?
No, there's been no response.
Oh, there was none?
No response prepared, and I think that was our answer back in December.
Right, so no draft response has even been prepared for that. I'm just wondering, you did say there would be a response, Minister.
Well, I said
what's happening with that?
Yeah, I'm sorry, Senator Canavan, I haven't got anything further on that.
Right.
I will see if I can provide some more while we're here today.
Yeah, you jump in, Senator Bragg. I said you did a lot of good work.
Well, I mean, you did say at the last hearing, thanks Senator Canavan, that you agreed with the idea that the government should respond to the ASIC report. I said to you, irrespective of its content, surely the government should respond, and you said, I agree with that, Senator Bragg. Yeah. As I said, if I have something more to provide, I will. And I said, when will that be, blah, 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 and you said you'd try and get it soon. So I guess that was in December the 3rd, 2025.
Yeah, so it is unusual that we're having estimates so close together, and that there's been, you know, a holiday season in between. I do believe committee reports should be responded to. That is my view.
Has the Treasurer suggested to the Treasury that they should not respond to that report?
I'm certainly not aware of anything like that.
Not that I'm aware of, Senator.
I just want to be clear on this, because it's very unusual for there not to be any draft response prepared into a very detailed report where even the government senators, while they didn't agree with the chair's recommendations, did make their own recommendations. So just want to be clear on this. Has there been a directive given not to respond to this report?
There hasn't been such a directive. I think as we covered in previous estimates, we did provide a kind of general brief or overview on the report when it was issued to ministers. And as I kind of covered in my answer to Senator Canavan, we don't, we're not resourced to just prepare a report because the government may want to issue. We have discussions with officers and ministers about when's the appropriate time and kind of when, and we do check in regularly on those because we do get reporting and we do track where reports are at. But it's, we're at the, ultimately we kind of do it when we see the opportunity and it's going to be considered by the minister at that time.
Okay, so you haven't been asked to do one?
No minister.
Okay,
no
but the minister just said that she thought it was important that report be responded
that
to.
is my view.
It's a bit unclear.
That is my view, that committee report should be responded to.
So will you get us a response to this report, please, Minister?
I have undertaken to provide more information. I'll do what I can, Senator Bragg. It's not my portfolio area, so I'm not the
but you're representing the Treasury here. You're sitting in the Cabinet. I mean, we just want a report to be responded to because it's canvassed a lot of issues that are important to the community. People who've lost a lot of money, lost their livelihoods. People feel strongly about this.
I understand that, and just because we haven't responded to a committee report doesn't mean that the government isn't working on a lot of the issues that have been raised through the committee process. So I'll see if there's anything more I can provide to the committee, and it sounds like we've got a couple of questions on notice to respond to too.
Okay, well, thanks for that. I mean, I just make the point again of the work that Senator Bragg did, but more importantly, there were nearly 200 submissions to that inquiry. There were a lot of heartbreaking cases put before us, and it would be good for the effort those people put in for the government to recognise at least the issues they raised and respond. They're obviously not obligated to agree with the recommendations, but a response would be, I think, appreciated by those people. Just a related issue, I believe there has been a draft of the post-implementation review of the compensation scheme of last resort completed. Is that correct?
Sorry, Lynn Kelly, First Assistant Secretary, Financial System Division. Sorry, could you just repeat?
I'm informed. There was a previous question we put, not yet answered, but well, sorry, I might have misread that. Has a draft of the post-implementation review for the compensation scheme of last resort been prepared?
We are currently still undertaking the review, so we're documenting parts of our review process, but we haven't got a report as yet because the consultations are still ongoing. Okay.
Do you have a timeline for its completion?
We don't have a timeline for its completion, but I will note that the Assistant Treasurer announced in December that we would be issuing another options paper early this year, so that will be coming shortly.
Okay, so are you conducting consultation right now, or are you waiting for the issues paper to be released?
We're currently working on the options paper to be released. Right. However, we are regularly engaged with stakeholders in relation to the issue. As you would imagine, there are a lot of views.
Is there a requirement for this post-implementation review to be completed by a certain date?
As soon as practicable.
Rob Preston, Assistant Secretary, Financial System Division. The Assistant Treasurer outlined in his media conference of the 10th of December that we provided him advice on some findings from the review, and that the announcement that he made about progressing the review through a series of consultation papers is how he's planning to take the work forward. So he released a consultation paper into the role of PAI, indemnity insurance in relation to CSLR on that day, and it's, I think, closing it's up for consultation at the moment, closing, I think, on the 13th of February, and flagged that early in this year further consultation will occur on matters relating to the CSLR, and that's how the review will be being progressed.
Okay. So I did ask before whether a draft had been prepared. I think you said no. But, Ms Preston, you just said that you had presented findings of the review to the Assistant Treasurer. Has that happened?
Yeah, we provided our advice on what we received a number of consultations from the initial round of the review in early 2025, and then also following the release of the consultation paper on the special levy that was conducted in around July of last year. We outlined sort of the feedback that we're receiving and gave our assessment of where the CSLR is at.
So when were those findings provided to the Assistant Treasurer?
Yeah, as the Minister indicated in his press release, we provided him a briefing on...
Oh, sorry, when?
When?
Yes.
I will have to take the date on notice.
Okay. It was obviously before the 10th of December then, before the press conference he held. Okay. Well, yeah, just last question then. So that wasn't a draft response, a draft report as such. It was just some early findings or something? Or
no, I wouldn't constitute it as a draft response, but it was...
All right. And the options paper will be outlining or being informed by your findings, will it, to outline a range of options that could... to change the scheme or to reform the scheme, if you want to put it that way?
I think that's a fair characterisation, and we're also, receiving ongoing feedback, such as through the Assistant Treasurer's Roundtable.
Okay. Thank you, Chair.
Thank you, Senator. Senator Payman.
Thank you, Chair. Good afternoon. My questions are around price gouging and the excessive pricing regime. In December, the Competition and Consumer Industry Code's Food and Grocery Amendment, Supermarkets Excessive Pricing Prohibition Regulations 2025 were made. Now, firstly, are these regulations where the government's works on this issue will end, or is an actual bill in development?
Jason McDonald, First Assistant Secretary, Competition and Consumer Policy Division. So there is the price gouging legislation which has already been introduced into Parliament and will begin from 1 July this year. Is that what you're referring to?
So what I'm trying to ascertain is, what is the legislation going to do that the regulation can't do?
So this gives the ACCC enhanced powers to look at excessive pricing by supermarkets, which they should be able to then look at when supermarkets are charging excessive pricing and take action.
And the legislation that you referred to, that's a delegated legislation rather than a bill. So what I was actually asking was, is there an actual bill in development?
No, the amendments to the Food and Grocery Code, which is what we're using as the instrument, that's it.
Okay. Under paragraph 45B(1)(b), it provides that no penalty can be applied in the case of price gouging to a person who is not a body corporate. What is the purpose of this paragraph?
So I think the intention is that there are still obviously penalties for the business, but that is to avoid people, that is to avoid a manager, say, of a local supermarket from giving a discount and then being thought and then risking them being charged and having fines on it, and therefore not having the incentive to give the discount. So we wanted to avoid unintended consequences where businesses weren't able to offer discounts or discounted pricing in sort of special circumstances, and then the individual themselves be held accountable for it, so the local manager or the local person responsible for pricing. But the penalties are obviously still there for the supermarkets themselves.
So, just so I have it on the record, if a person within a very large retailer directs that retailer to engage in excessive pricing, they're not held liable?
This will be probably a question directed at the ACCC about how they're going to implement it and what they believe the scope of the legislation is. But the intention of taking out the penalties for individuals was to allow the individual managers to make price discounts without the fear that they wouldn't do it because of the risk of how it would be implemented. But the penalties are always and have been intended to target the supermarkets themselves.
But wouldn't you see that as a loophole for people to exploit the system?
The advice that we had a lot of discussions with the ACCC about this, and I don't think they think it's a loophole.
Excessive pricing is defined by the rules as supplying or offering to supply a grocery product when, and I quote, the pricing for the supply is significantly excessive when compared to the cost to the very large retailer of the supply, plus a reasonable margin, end quote. What does significantly excessive mean in this context?
I think it means the normal definition. When you are able to charge a price after you've taken out all of your costs, including a rate of return, then that would be considered excessive. And I think it's in the normal, the average consumer's understanding of it and of what that means.
Are you able to give us a percentage of what that would look like?
You can ask the ACCC how they intend to administer it, whether they're going to have rules of thumb.
But does the department not have an indication or gauge of what that's going to look like?
Well, we would leave it to the regulator to assess.
Okay.
So, I mean, we always get this tension between, do we want a kind of principle-based law that sets a high-level kind of expectation, or do we want to have very detailed law that tries to prescribe what outcomes there are?
Sorry, I missed that.
That tries to prescribe exactly how things are going to work. In this case, the government's made a decision to go with a high-level principle approach. That reflects effectively the approach that's been adopted in the European Union in respect of excessive pricing laws. They have a history there of cases beginning to unfold and unpack, kind of court cases unfold and unpack how that prohibition works. And so, there's a body of international jurisprudence on this that can be drawn on. And obviously, as Mr McDonald said, it's something for ACCC to turn its mind to and consider what guidance it gives supermarkets about how to interpret it. But ultimately, the courts will be the test bed for its application. And
was that the courts?
Ultimately, the courts. So, and if you think about the Competition and Consumer Act, it has very kind of high-level principle-based laws around misleading conduct and unconscionable conduct. These are really important laws in the system to make sure our markets function efficiently. Those laws have been more effective for being high level and principle based and able to capture a range of developments rather than being very prescriptive.
Okay. Well, let's hope that's the case. What does a reasonable margin mean in the text that I read earlier within that context?
So, as an economist, a reasonable margin will mean a margin sufficient to encourage the business to perform the activity, a rate of return that allows them to perform the activity. We're trying to target economic rent as an example. It's not obviously in the legislation because it's difficult to get an economic definition, a legislative definition around it. But a reasonable rate of return is a normal rate of return in an economic sense, and everything above that would be an excessive rate of return, which is economic rent. Which is an economic rent is a return not needed to keep that factor in its current job.
Sorry, what was that last part?
So economic rent, we want the supermarkets to continue to provide goods and services to the community, and a normal return or reasonable rate of return would allow that to happen. An excessive rate of return means it's above that and they're earning more money than they actually need to provide that good or service, including a rate of return on their capital, risk adjusted.
Has Treasury received any representations from the ACCC about what it thinks excessive pricing is, or is that left to them?
We would rely on their analysis, and there is some analysis, I think, in the supermarkets inquiry which led to this around profits and profitability of the sector, and I presume they would use a similar kind of methodology when enforcing this legislation.
Can you shed light on how will the cost to very large retailers of supply be determined?
I think that would be something directed at the regulator, given it's at the operational level.
You're at 8 minutes. No worries. I've only got 2 more. Given the many factors that affect supermarket prices and the volatility of those factors, how will the cost of supplying products be able to be reliably determined?
So that is the reason why it is a principle-based legislation, it requires analysis of the facts on a case-by-case basis, and that would be something that the ACCC will be determining.
I'll definitely put these questions to the ACCC as well. What new information systems will be developed to assist in tracking the cost of supplying products to enforce the excessive pricing regime?
Do you mean by the ACCC or by the supermarkets?
By the ACCC.
That would be a question directed.
Do you have any information of how the supermarkets may navigate that?
So we have had a lot of consultations with the supermarkets when we were drafting these provisions, and we were looking at the information they already were providing the ACCC, and we don't expect them to be making significant new investments in new information gathering or ways of providing information to the ACCC. So we don't expect them to be making significant investments to comply.
So, but the onus is going to be on them to comply, and that's on the ACCC to ensure that they comply, but we don't know what systems they're going to put in place.
Well, I think the expectation is the information that the ACCC already has available for them or could get from the supermarkets, it will be sufficient.
Okay. All right. Well, I'll put these to the ACCC later. Thank you, Chair.
Thank you. Senator McKim.
Thanks. Just quickly on the same matter. Was it a government decision? Did the decision come from government or from Treasury to give effect to the announcement from the Prime Minister in the election campaign that supermarket price gouging would be made unlawful? Where did the decision come from to do that through the Food and Grocery Code rather than an amendment to the Competition Act, for example?
So all the decisions obviously are the decisions of ministers, but we do provide advice to our ministers about how things can most effectively be done.
And was it Treasury's advice that this should be done through via the Food and Grocery Code rather than the Competition Act?
We provided advice on what we saw as being the most effective and timely way of getting it done, and that was the Food and Grocery Code.
Okay. Was it also Treasury's advice that this policy should be limited to the supermarket sector and not across the entire economy?
I think I actually can't recall at the time what our advice was.
I think the government's
commitment to supermarkets.
Our election commitment set the parameters. Yeah.
That's right. Yeah, so that was a decision.
Yeah, I think it was part of the Prime Minister's announcement, yeah.
Based out of the Prime Minister's announcement. And you ran a consultation process, obviously, and I've read some of the submissions with interest. Woolworths suggested that you make this economy-wide, did they not, in their submission?
I think without specifying the supermarkets by name, I think that they did want it to apply broadly, not just to capture the two large ones.
Well, Woolworths put in their own submission, and it said that any new excessive pricing prohibition should be applied economy-wide as an extension of other regulations already applicable to firms with substantial market power. I mean, that's what Woolworths said in their submission, isn't it?
I can't recall that from that submission, but I can check that for you, Senator, if you want me to.
All right, no, that's fine. It is what they said. And Choice, the consumer representatives, or one of the consumer representatives, said it's not clear why the government has decided that price gouging is only wrong if a supermarket does it. So, Minister, why did the government decide that price gouging should only be addressed if it's done by a supermarket, and decide to let big banks off the hook, big insurance companies off the hook, big energy regulators off the hook, the airlines off the hook, some of which have a concentration of market power akin to Coles and Woolworths in the supermarket sector?
Well, our election commitment was about supermarkets, Senator McKim. That doesn't mean, to use your term, letting others off the hook. There's already existing powers that are available to regulators. So our commitment was looking at supermarkets, and that's what we're focused on implementing.
Yeah, but my question, Minister, is why has the government formed a view that price gouging, excessive pricing, should only be addressed in the supermarket sector and that it not be addressed across the rest of the economy where there is undoubtedly price gouging going on in many sectors?
Well, I mean, I can only repeat what I did in my previous answer, which is the ACCC has provided clear evidence of entrenched market power and limited competition. It's a targeted response based on a strong body of evidence that directly affects the cost of living for Australian households. There are also a range of other measures underway to improve competition and transparency around the economy, including cracking down on shrinkflation, increased funding for the regulator for ACCC and stronger merger laws.
Yeah, I'll come to some of those shortly, but the reason the ACCC provided that advice on supermarkets is because the Treasurer instructed the ACCC to have a look at the supermarket sector once the Greens-led Senate Select Committee had finished doing its outstanding work, I might add.
All good things come back to Greens ideas in your world, don't they?
Well, eventually, Minister, the government did accept the proposition after mocking it, I might add, for 18 months, accept the proposition that excessive price gouging could be addressed. I'm trying to find out why the government made a decision to only limit addressing excessive pricing to the supermarket sector and not to the entire economy.
Yeah, so I've answered it. The third time I'll answer it is
that's all right.
It directly affects cost of living for Australian households. That is the commitment we made in the election campaign, and that's what we're delivering.
Yeah, I think you find Australian households are getting smashed by spiralling insurance premiums at the moment, which is just, as one example, contributing massively to cost of living pressures. Let's just leave that aside for a minute. I note there's no submission from the ACCC uploaded to Treasury's website. Did the ACCC, I understand you gave evidence to questions from Senator Payman that you had conversations with the ACCC. Did they not provide a submission to your consultation?
We engaged with the ACCC very, very closely in preparing both the advice and also the prohibition.
But they didn't submit to...
I can't recall them providing a submission, but I think it would have been superseded by all of the other conversations and information that we got from them.
All right. Is Treasury aware of any other similar jurisdiction anywhere in the world that has addressed excessive pricing that's only limited the response to one section of the economy?
I haven't made that kind of inquiry, Senator.
No. So, Senator, I gave the example before, the European Union approach. I think they have a general prohibition, but in practice it's only been applied to particular sectors like pharmaceuticals. And in Australia, the context around pharmaceuticals is quite different, given PBS and things like that. So that the evidence I'm aware of is when countries have a very general regime, it tends to only be useful and only applied in very specific sectors.
Yes, it may have an effect of dissuading price gouging, though. Might it not, Mr Kelly, if it was in place more broadly across the economy, and perhaps those other jurisdictions where, as you've said, it does apply economy-wide, it's possible that it has an effect of dissuading corporations with significant market power from engaging in price gouging.
A lot of things may be, Senator. It's not something I'm going to claim to be expert on.
All right. So the OECD, in their economic survey on Australia, says Australia was once regarded as a leader in competition policy, but its competition policy framework has fallen behind the frontier relative to its OECD peers. Is that fair? I don't know, Minister, Mr McDonald, Mr Kelly. I mean, this is an OECD. I mean, has anyone read that?
Yes, Senator.
Yes, Mr McDonald.
We have read it. I think it is quite commendatory of the government's policies around national competition policy, etc. So I think you can read different parts of it and maybe get different messages. Obviously, I'm not aware of all of the countries in the OECD's competition frameworks, but I would have thought that the new mandatory merger control regime, the government's policy around non-competes, national competition policy, would be moving us in some ways much closer, if not to the frontier.
You're at 8 minutes.
Well, thanks, Chair. The report does say that Australia's fallen behind relative to OECD, and it does commend the merger reforms, which were put through the Parliament with the support of the Greens. But
there you go again, Senator McKim.
Oh, well, it's nice to have some influence in here and some influence on Labor. But the report goes on to say many key sectors in Australia are highly concentrated, and it says prices are high and markups have risen. I mean, it's the case, isn't it, that firms with high levels of market power are more easily able to mark up higher than firms that were operating in a more highly competitive market. That's a fair comment, Mr McDonald, isn't it?
That is a fair comment, Senator.
Yeah, thank you. And the RBA has conceded in estimates last year that some firms are using the cover of high inflation and the lack of competition to raise prices above increases in input costs. Would Treasury agree with that?
Sorry, was the question, is inflation providing a mask for price gouging? Is that the...
That's another way of putting it, but I was very careful in the way I put the question because I'm not trying to verbal Ms Bullock here.
So Senator, like a question on that, which goes to those more general issues around inflation and what's driving inflation, better asked to the macroeconomic group, which just a bit...
No, I'm not asking...
I prefer not to venture there.
I'm not asking about inflation. I'm asking whether Treasury agrees with Ms Bullock's contention that some firms were using, in 2024, were using the cover of high inflation and lack of competition to raise prices over and above increases in their input costs.
So, Senator, like as a general answer, firms say a lot of things and will provide reasons that kind of sometimes more kind of more substantive than others, and I'm sure that's one example of when firms make justify their prices.
To wind this block up, thanks.
All right, thanks. The report, the OECD, I mean, I just find it interesting that Matthias Cormann is schooling Labor on competition policy, I have to say, Minister. I find this pretty ironic.
I haven't read the report, I was just trying to see...
Well, I mean, I do recommend it to you, Minister.
Yeah,
it does attribute our decline in competition policy framework relative to other OECD states. It attributes that in part to relatively few successful competition law cases and penalties that are low by international standards, and it recommends enforcing competition law more vigorously and consistently by enhancing the ACCC's enforcement capacity, simplifying the legal framework and increasing average penalties. Has the government asked Treasury, or is Treasury currently undertaking any work that would enhance the ACCC's enforcement capacity, simplify the legal framework, or increasing the penalties?
Well, I mean, Treasury and Treasury ministers work closely with the ACCC, and we work with them very closely and listen to their, if they have advice to provide about gaps or issues that they see in their regulatory powers, and we take that seriously. The OECD report, I'm advised, spoke of that our moves are encouraging in this area, and they welcome merger reforms, the national competition policy and non-competes. And I'm also advised we've increased penalties to $50 million, a five-fold increase in penalties. So I think that shows again the record. And this is an area that Assistant Minister Lee has responsibility for and brings huge energy to. And that's why you're seeing all the work that's being done.
Just can't get you over the line on divestiture powers, Minister. Unfortunately, Mr Lee has just failed to get you over the line.
Dr Lee, yeah.
Take that as a comment. Thank you, Senator. We'll go to Senator Pocock.
Oh, sorry, we've just had 3 from the crossbench. Can we come back to opposition? It's two from the crossbench. Can we come back to the opposition?
You only told me about them after I'd already set the list up.
Well, we've got another 20 minutes, and we said we were going to break at 1.
Yeah, I think we should be able to make that.
Thank you, Chair. I have some questions about the government's response to the Parliamentary Joint Committee on Corporations and Financial Services final consulting report. In October, Minister Ayres said this report was an important body of work. Why then did the government respond to a comprehensive 200-page report and many, many days of evidence with a paltry 6-page report that only noted all 40 tripartite recommendations?
Senator Tony McDonald, First Assistant Secretary, Digital Policy and Corporations Division. As you say, the parliamentary inquiries cover a broad range of issues, and the government is implementing a large package of reforms in relation to that matter. There's a lot of that work that has been implemented, but there's, as outlined in the government response, there's a number of items that are still a work in progress. This is a point Mr. Kelly covered earlier in response to Senator Canavan, where we have a number of steps in place. I think in the two committee responses, there's only one where the government disagrees. There are a number of others that talk about either noting, agreeing or agreeing in principle. But as the Minister said before, sort of many of those elements, even where we're just saying that we're noting it, there's work that has proceeded and indeed sort of is underway and will continue. So when providing a response, and this response was a sort of overdue, as you know, we try and provide it as best we can at a point in time based on all of the moving parts that are going ahead.
Well, there were some really important recommendations that have been ignored, including lowering the partnership caps, separating audit from non-audit, improving whistleblower protections, not allowing PwC to tender for government work till all investigations have concluded. These are all very practical, doable things that our evidence suggests is pressing. They are pressing and they are important. When will you, as a government, actually enact reforms that match the scale of this problem, Minister?
Well, I'm not sure I can add anything further to the government response that's being provided, Senator Pocock. It's our position is outlined in the government's response.
So on just the question of partnership caps and separating audit from non-audit, incredibly important reforms that really would make a difference to conflicts of interest and perceptions of conflicts of interest and to good governance and ethical practice in this sector. You have no plans at present in this period of government to deal with those issues in a legislative way?
I'm just trying to get the response.
Perhaps if I could assist, Senator, I think this may be referring to the absence of such measures in the regulatory initiatives grid. And perhaps to assure you, Senator, that that the regulatory initiatives grid outlines announced and public regulatory reform priorities and initiatives that are expected to materially affect the financial sector over the next 2 years. And we try and be as comprehensive as possible, but it's not intended to be exhaustive or capture day-to-day policy work, such as the Treasury's ongoing policy consideration of issues in relation to accounting, auditing and consulting firms. So the position we're in is that sort of we put things onto the regulatory initiatives grid once the government's agreed to them, but sort of we don't know everything that the government's going to agree to over the next 2 years. So I'm trying to avoid double negatives, Senator, but the absence of an initiative from the RIG does not mean that work is not occurring in this regard. And it doesn't mean that nothing will be done over the next 2 years.
But surely the grid represents a priority listing. If you're on the grid already, you're going to be ahead. And there is, as I can see, nothing on that grid in relation to audit or assurance in the consulting sector. I've had a look at it.
So I guess I come back to the point sort of that points go on to that where once the government has agreed to it. And so that's this is, I mean, I think it's an important initiative to try and give transparency and awareness to the sector if stakeholders can know what is coming forward, but it can't cover everything, and sort of it covers what we know.
So not an exhaustive list. We can. It's not impossible that it appears there, but at present not there, and yet we've had such a detailed inquiry over years where there is cross-party agreement, a cross-Senate agreement about what needs to happen that's quite specific and a roadmap essentially laid out. I must say, as a senator was part of that, how incredibly disappointing that is, Minister. If I can go to, unless you want to offer any other comment on that.
Happy to go to your next lot of questions, Senator.
In May 2024, Treasury released a consultation paper titled Response to PwC Regulation of Accounting, Audit and Consulting Firms in Australia. The website says that the consultation process is now being completed. Consultation has now been closed for more than 18 months. What has the government done in the time since?
Senator, that consultation process raised a number of issues and complex points to consider, which we have examined carefully and thought through and developed different options that could be that could address the risks with current regulatory settings, but also how to avoid the potential for unintended consequences in doing that, so how to get the balance right. And that we expect the next step, so we've done a number of those pieces of work, we would expect the next step in that process would be a consultation paper to start to go into some more of those options in a greater level of specificity. But as to the timing of when that paper would go for consultation, that would be a matter for government.
So this is a second round of consultation following the first and an 18-month gap since the first. Is that what you're describing?
Yes, but it's not the same consultation, Senator.
A different paper. When can we expect to see that paper?
It's a matter for government, Senator.
You're at 8 minutes.
Senator Pocock, can I just add in, after saying I didn't have anything else, I can just provide some further information that the Assistant Treasurer is introducing a bill this week which engages directly with recommendations of the report from the committee, and the Minister has written to the committee bringing it to their attention. It's the Financial Reporting Systems Reform Bill, and it deals with recommendation 20, 23 and 24 of the committee's report.
Is that a bill relating to the External Reporting Australia?
Yes.
Yeah. I've got questions on that ahead. Thank you.
It might assist the committee. As the chair of that committee, I actually have a copy of the correspondence, and seeing as it's up for discussion today, might just table that.
Oh yeah, sorry.
Which gives us a bit of an update. It's
yeah,
what
right.
You just
okay,
said.
the same thing.
Yeah.
Okay.
Haven't seen that.
Sorry,
Thank you.
I should have said. The minister had written. I wasn't sure if it had landed with the committee.
It just got delivered to me.
Okay. In real time here in estimates.
Why are the submissions to this inquiry to date not public?
Sorry, this is to the one from 2024.
Yeah.
Well, the release of submissions, Senator, is a matter for the government. Typically, what would happen is the trigger point for releasing submissions is when the next step was taken in that process. But it's a matter for the government when submissions are uploaded.
I mean, this is a sector that loves consultation and loves long, long delays and hopes the government's going to fall asleep and the Australian public will stop paying attention. That is their modus operandi. And so the delays really concern me, and the failure to be transparent about what this sector has said is a real concern. Minister, will you make those submissions public?
I'll take some advice on that, Senator Pocock.
Thank you. The two inquiries and the discussion paper by Treasury all identified partnership size as being an issue that has caused scandal in the sector. Currently, as you know, there's a partnership limit of 1,000 for accountants, and on page 13 of the review, Treasury said, quote, the limit may be too high. We recommended the limit should be 100, which is at the level of a range of other professional partnerships. What is the government or department planning to do about partnership limits, and what's your current thinking?
So, Senator, those are points that we canvass amongst the options of the next way forward. Sort of, so it would be a matter for the different options for handling that issue and for what that level would be set at. Were it to change, would be matters that would be canvassed properly in the consultation paper, but the release of that paper would be a matter for government.
And just last question, I'm out of time on this bit. How will you ensure the voice of citizens is part of this process? I look at the list of who's turning up here. The Big Four turn up very enthusiastically, along with the bodies that they essentially capture and have a very big voice on. They're in your ear a lot. How are ordinary people who are affected by the behaviour of these very large firms and their governing bodies represented?
Senator, it's a very good point. It's one that we talked about at the last estimates as well. There are a number of mechanisms, including the use of public consultation processes, that we take account of. But as I said previously as well, it is something that we drill into our staff on a regular basis. That sort of, while it is human nature to be looking to engage directly with the people you're talking about, but just be aware of that is not the entirety of the community that has an interest in these matters, and that part of the training for our staff is to think about the questions that are not being put and the views that are not being put, and not allow themselves to be covered just by the loudest voices. And as we talk through, as canvassed in the letter that has just been tabled, part of that in the context of the financial reporting process is putting in place measures to balance out the necessary need to have experts in the room with having a balance on appropriate boards and standard setting bodies, so that other voices are heard and they're not crowded out by those. But I don't think there's an easy answer to it, and it's a challenge that is incumbent on us as policy advisors to government to continue to be aware of.
Well, these are the kings of regulatory capture. Citizens are a small voice, so I wish you well in doing that, and I'll continue to ask about it. Thank you.
Thank you. Senator Bragg.
I'm going to ask you some questions about the Economic Reform Roundtable and some financial regulation initiatives that were flagged. So, the RG97 endeavour, who knows about that?
Senator, superannuation matters are dealt with by Revenue Group these days.
But it's not necessarily superannuation, is it?
The group in Treasury that has had carriage in respect of RG97.
Where's that group? It's not markets anymore?
It's retirement income and...
Well, there have been a lot of changes. Must have been a big renovation at Lakes and Crescent.
Is in Revenue Group, as it was at the last estimate.
It sounds like you bulldozed a few wings, did you? No, it's only a joke. Okay, so what's that?
They kept the rose garden.
Well, it's important to maintain some traditions. Okay, so you don't know about that?
That group will appear later, Senator, so they're the appropriate people to answer those questions.
Great, well, I've had a good morning.
Okay, Senator Sharma.
Thank you. We're trying to wrap up, aren't we, shortly? All right, I'll keep it very quick. I just wanted to ask about the National Competition Council. So I believe the 3 current members of the council, their terms expire on next Tuesday, the 17th of February.
The answer is yes, for the record.
Sorry, that's when they expire. What is the process to appoint new councillors, or has a process been undertaken? Is a process underway?
Yes, Senator. The process, I think, is near finalisation, and it does involve consulting the states, looking for nominations, then going back to the states to approve nominations.
Okay. What's the process that's being conducted?
So that is the process, Senator. The states are asked for nominations. The Treasurer's right to the Treasurer with their nominations. We provide advice to the Treasurer on a range of people that could fill those roles, and then the Treasurer writes out to the Treasurer's other state Treasurers with his preferred candidates, and when there's a majority of states, it's approved.
Okay. Is this process that's being conducted now, is this consistent with the new Australian Government Appointments Framework, the Briggs Review?
I think because it started before that came out, it's not subject to those requirements at the moment, Senator.
Minister, is that your understanding as well of this?
Well, the Briggs, the new Australian Government Appointments Framework came into effect in February this year.
Yeah.
And as we discussed in the Finance Committee, covers a range of, a number of positions. And, through that, we're pretty clear about how that appointments framework should operate.
So my reading is any appointments made now, that the framework's in place, should be made consistent with that framework. It doesn't matter when the process started, it's when the appointment's made, right?
Well, no, but the framework didn't come into effect until February.
But the framework's in effect now, right?
It is,
and
but
no
if there was processes underway before that, it's a timing issue, they've started before that, then they continue. That's why you have a date of effect.
Yeah. So, Senator, this process is largely complete by that date of effect. It's also not the case, that this is not going to be a suitable process under that appointments framework. Obviously, we've seen the appointments framework. We're thinking very hard about it as a department, about how we operationalise it and support our ministers in applying it. Okay. I think for both the NCC and the Australian Competition and Consumer Commission, when we get to it, kind of factor in always thinking about the process that's appropriate is we do have to deal with these timelines and kind of involvement in the states that make it a bit different than, say, an ASIC or an APRA type appointment that it came up earlier with the Secretary.
And just one of the components of the Australian Government Appointments Framework is the recommendation that no person should serve on more than 2 Australian government boards at any one time. I believe at least one of the current councillors is on more than 2 government boards currently. Has that been taken into account with this recommendation? Has this been factored into the consideration and decision-making process?
The current or the recommended councillors and their what boards they're on would have been information that we gathered, but I can't recall, given this new framework, whether we actually took it into consideration again, given the new framework.
Senator, is generally taken into account. Whether it's taken into account the way the appointments framework would ask a minister to think about it, that's kind of harder question to answer. But certainly, as Mr. McDonald said, what other things a person who might be considered is on is kind of a routine part of consideration. It is the case in the Treasury portfolio. We do have a number of very specialised bodies and panels who, it's a small pool of expertise we're going to be looking at, and they kind of do link across each other. So that's something we're going to have to navigate in the future and just kind of think about how we approach that.
And that's why we had this discussion in the other committee, but, when there's argument about legislation or, the best way to deal with appointments, it recognises that across government there are different different issues that agencies and ministers have to consider, and so there is flexibility in the framework to accommodate that because of the nature of the huge variance in appointments across government.
Yeah, I mean, I can see that exception is given for specialist or significant and eminently talented people. Has a recommendation gone to the Treasurer then for these new appointments?
Yes, Senator.
Okay. Are you expecting more than 3 members? I mean, there's currently 3 councillors, right?
I wouldn't want to prejudge any announcements that might be made, Senator.
Okay. How long will the term of the new appointments be?
I think it's 5 years for the general appointments, Senator.
Okay. And is it fair to expect an announcement on this before the appointments of the current members expire?
I think it's anticipated that there won't be any gap.
Okay. All right. Thank you.
Thank you, Senator. Senator Pocock.
Thank you. And I'm just sitting here reading the letter that's been tabled today, and I want to go to this question of the External Reporting Australia. I understand that the new board will, quote, not retain the coercive information gathering powers of the Financial Reporting Council. Am I correct in saying that this refers to the FRC's information gathering powers as outlined in section 225A of the ASIC Act, which includes penalties for non-compliance?
Michael Quinlivan, Assistant Secretary, Corporations Branch. That's right. There was overlap between that role that the Financial Reporting Council plays and the role that ASIC plays in terms of regulating audit and quality, and so the view was taken that ASIC should maintain that role and continue with their ability to, with their existing information gathering powers and ability to investigate those cases. We saw reports last year of them taking action on a range of auditing.
Well, I have to say I'm completely unconvinced. I mean, we want to have a more efficient, effective and fit for purpose organisation which has lesser powers than the bodies it is replacing. Why will it have weaker powers than the existing structures?
So perhaps, Senator, to assist, I mean, this partly goes to the question of the composition of the bodies as well. Given that in order to have effective standards, the clear feedback from the consultation over time is about the critical importance of having current practitioners involved in that process. Then the approach has been to be clearer. Has always been the case that ASIC has effectively been the regulator of audit quality and auditors. The process that was there previously was about providing reports, which then can lead to a confusion that they had a role in regulation. And the approach that is set out here is to sort of have clarity of roles. We have technical standard setting bodies that are focused on the detail, and the regulatory functions are sitting very clearly outside of that and within ASIC.
I think it's unconvincing, and so I remain concerned about that. But I want to go to the membership of the body itself. We found in the inquiries into consulting a major contributor to the rot at the Big Four was regulatory capture, and there was no rule to prevent former partners with financial ties receiving an income currently to being on the Tax Practitioners Board, a classic case of the fox inside the hen house. These organisations love that, and they find all kind of ways, and they tell us constantly there just aren't enough people in the pool of experts, and you have to have someone with a financial interest in the work that is actually being regulated on the regulator. So I'm absolutely unconvinced about it, and a lot of Australians would agree with me. So I really want to make sure that the standards body has true perception and actual removal of conflict of interest. So will the legislation establishing this body explicitly ban senior executives or partners currently working at a consulting or accounting firm or with ongoing financial links to these firms that is anyone who's in an organisation that's governed by such a body, from being members of the Government Council of the ERA. This is a pivotal test. Are you going to make sure that there is true independence? When I look at the words in this letter, they're completely unconvincing to me, I have to say. We rely on, independence, that it's not dominated by persons with actual... I mean, we want an organisation not only is it not dominated from it, but is actually free from perceived or actual conflicts of interest that are financial.
So perhaps to come back to the point I was just making, Senator, that is why the way to avoid regulatory capture in this instance is that this is not a regulatory body, it's a standard-setting body. The regulation of auditors is clearly within ASIC. Now, within that, there are, of course, conflict of interest and other sort of provisions in there, but the approach that's adopted is in relation to standard setting, not in relation to regulation, but in relation to standard setting. It's critically important to have people who are actually undertaking that work being a part of the process. What the letter refers to and what the bill that will be going to Parliament shortly covers is how to get the appropriate balance within that standard setting body so that the range of voices are covered. And these are points that were canvassed in the parliamentary inquiries and the parliamentary evidence as well. They are not easy issues. It's about striking the right balance.
So, Mr McDonald, you see no risk in putting into a standard-setting body people who are currently in receipt of income in relation to organisations doing work to those standards? Because I do see a real risk there. And we have a body of evidence which tells us, give us a chink and we're in there like a rat up a drain pipe. If there's an opportunity to influence a standard, you can bet your bottom dollar those who are making a lot of money from it will find a way to influence it. And the way we can prevent that perception or actuality is by making sure those standard-setting boards are free of that compromising presence.
Okay, so Senator, I didn't say there was no risk, but it, as often in cases, is about balancing risks. The risk of not having any current practitioners involved in a standard-setting body is that you have standards that are set that don't reflect the issues that are being faced by the sector. Now, that's the question is not whether or not there are risks. The question is how those risks can best be balanced and how the competing considerations are managed.
Well, we know there was evidence in the TPB where, valiant attempts to talk about conflicts of interest and declaring your conflict has not occurred, did not occur. And that is an inadequate protection for ethical practice.
I think we're getting into discussing the merits of the policy on a bill that's just being introduced. So I think we've gone as far as we can explaining the reasoning behind it.
I'll come back in the Parliament.
Thank you. Well, that is...
Sorry, Chair, I think Mr McDonald just wants to make a...
Sorry, Chair, I just want to correct one of my responses to Senator Sharma, because I actually have the notes here. Rather than the Treasurer, was Assistant Minister Lee, who wrote to Premiers and Chief Ministers on the 24th of June 2025 seeking nominations for the NCC. And on Dr Lee. And on 15th of December 2025, Assistant Minister Lee wrote to Premiers and Chief Ministers seeking their agreement to the proposed appointees.
On the 16th of December?
On the 15th of December 2025.
Okay. Thank you for clarifying that. I appreciate it.
Thank you very much. That concludes our session with market groups. So we will suspend for lunch now and resume at 10 minutes past 2. Thank you, everyone. We'll make a start. The committee welcomes representatives from the Department of Treasury Fiscal Group. I will throw straight to Senator Patterson for questions.
Thank you very much, Chair. Good to see my friends from Fiscal Group. I want to revisit the questioning you might have seen this morning to the Secretary about the variation between PFO and MYFO in the medium term. Can you help me on a dollar figure of that variation in the underlying cash balance?
Senator, Damien White, Deputy Secretary, Fiscal Group. As the Secretary said this morning, we consider the medium-term numbers and the longer-term numbers when we do IGRs is best done as a percent of GDP, because as nominal numbers grow over time, the comparison of those nominal numbers becomes less useful. Numbers 10 and 15 years into the future do not mean the same thing as numbers now. That is the way we've shown those numbers in history whenever we've done any numbers past the forward estimate, Senator.
2029 is not 10 or 15 years into the future.
No, but the end of the forward estimate, end of the medium-term period is another about 10 or 12 years into the future, Senator. And even then, I mean, GDP grows by like 5 or 6% a year. It quickly becomes 20, 30, 40, 50% bigger than it is now. And numbers that you have in nominal terms over those periods of time do not mean the same thing.
So are you saying that Treasury does not have it in dollar terms?
No, Senator. In fact, to do the calculation, we need the numbers. We cannot do a proportion of GDP unless we have a numerator and a denominator.
Indeed.
But we do not show them in the budget papers, and we have not put them out in the public domain because of the reasons I've said.
Sure. Well, I'm still insisting that you tell me because I would like to know what it is. And it not being your preference or your practice is not a valid reason for not answering. So what is the dollar figure?
He's answered your question.
No,
Senator
he hasn't.
Patterson.
He hasn't told me what
has.
the dollar figure is.
Well, he's explained the approach Treasury takes. It has always been that way, and they take that approach for the reasons that Mr. White has explained.
Yes, thank you.
So,
caveat acknowledged.
Like, he's answered your question. It might not be to
I'm
your
sorry, Minister.
satisfaction, Senator Patterson, but he has answered your question.
No, I'm sorry, Minister. When I ask for a number which Treasury knows but doesn't say, that is not answering the question.
You cannot order a particular answer, Senator Patterson. Treasury have answered the question.
Mr. White, what is the number?
As I've said, Senator, we put the numbers in the public domain as the percent of GDP in a very transparent way, including putting numbers for GDP up on our website. It allows people to make calculations like are in the public domain, but we do not put them there like that as nominal dollars.
Yes, so the figure we have in the public domain is 57 billion, and the reason why we have that figure is because those GDP figures are rounded to the nearest 0.1 decimal point. So it's close, but it's probably not exactly what the number is. And I think it's in the public interest to know exactly what the number is, and you know what the number is, you have the number, and it not being your usual practice or not your preference is not a valid reason to not answer a question.
Not usual practice. It is not the practice.
Even that is not a sufficient answer. Treasury has information. If it doesn't wish to provide that information, it would have to make a public interest immunity claim. And Minister, you know well that a public interest immunity claim that this is not the practice of Treasury is not going to stack up. The Senate would never accept that. So, Mr. White, what is the number? You know what the number is.
Senator, you're right. We have the numbers, but this is just not the way that it's been done. And we do not think that putting the numbers for nominal dollars in the public domain is the most helpful way of showing these things.
I appreciate that that's your view. I respect and understand that view, but your belief that it is not the most helpful way is not a valid reason for failing to answer a question in Senate estimates. You've admitted you know the number. I've asked you the number. You need to say what the number is.
No, he doesn't need to say. He can answer your questions in the way the witness chooses to, Senator Patterson.
No, Minister. The only acceptable grounds for refusing to answer a question is a public interest immunity claim. Is Treasury seriously making a public interest immunity claim over a number that it knows because it thinks it's not helpful?
Treasury reports the medium-term outlook in the graphs in the mid-year economic update. We've been through that this morning. That is how Treasury explains their thinking on medium-term outlook.
Yes, and that's very interesting, but still not a valid reason for information Treasury holds being withheld from the public. So again, I'll ask Mr White, can you please tell me what the number is in dollar terms?
Senator, we have, so when we do our numbers, what we've put in the budget is in the forward estimates, we show what has happened about what has happened to those numbers in very large amount of detail, and we put those in nominal numbers, and that shows that since last budget and PFO, the budget has improved by about 8 or so billion over the forward estimates that were in the MyEFO, and about 15 or 16 billion dollars in the FBO before that. In the medium term, we show that it's about that the underlying cash balances are about 0.2% of GDP per year on average, so a relatively small amount, which, as we talked about this morning, is why we say that we think that this is broadly in line with the numbers. And yes, and people can go out and see what we put there. But if you want the numbers, I will get Ms Brown to talk to you about the number.
Yes, please. Thank you, Ms Brown.
See if I have the... No, so Philippa Brown, First Assistant Secretary, Budget Policy Division. The number is $54 billion.
Thank you, Ms Brown. I'm not sure why we just had to spend 7 or 8 minutes to finally acknowledge that the deterioration in the underlying cash balance in the medium term is $54 billion. The $57 billion guesstimate was already out there in the media. We now learn it's $3 billion less, $54 billion. Minister, why was that whole charade necessary?
Senator Patterson. Well, I think Treasury's been clear about the way they report and have, including under your government, the medium-term forecasts. And that, based on the evidence I've heard today and from the Secretary, would have been their preference because they think it gives a better picture of their view of the medium-term outlook. Now, you are running, your political arguments here, and have chosen to have a different view to that. You've got the number. It's not the way Treasury prefer to explain their medium-term forecasts, but, and I back Treasury on that. So there's a difference of opinion.
Minister, this is information that Treasury holds, which it has no valid reason to refuse, and we just went through a charade of 7 or 8 minutes after going through a charade of 15 minutes this morning with the Secretary.
Yeah.
Senator O'Neill, that's completely out of order. Senator O'Neill, you don't have the call. Chair, can I ask you to bring Senator O'Neill to order?
From a opinion, maybe 142 billion if you look at the PO document.
Just let Senator Patterson finish his questions, please.
142 billion you would have been.
Okay.
I know the Treasurer's Office is texting you, asking you to jump in, run interference to protect the government.
Don't flatter yourself, Senator Patterson.
We've all been there. We've all been there, Senator O'Neill.
I don't think anyone's doing anything.
We've all been there.
Of that order.
I've been a government backbencher as well. I know what that's like.
Well, thank you for sharing the wisdom with us. Yeah. But you're distorting the truth of what was reported this morning.
Okay. Let's get Senator O'Neill, if you could just keep your opinions to yourself.
Thanks, Chair. I think what this shows is for some strange reason, extreme sensitivity on part of the government about this figure.
No,
anyway, we've got the number now.
It's about standard budget reporting, actually, Senator Patterson. Okay. That's what it's about. Okay.
I think anyone watching will come to a different conclusion. But anyway, we've got the number now, $54 billion. To what extent is that $54 billion figure made up of changes to revenue forecasts, and what extent is it made up to changes of expenses forecasts?
Senator, you can see we put the charts in the budget papers in the MyEFO as the Secretary was talking about this morning. So charts 3.5 and 3.6. So in those charts you can see that for receipts start the medium term roughly about the same level as in the PFO, and they decline slightly below the PFO line. So by the end of the medium term on the receipt side, receipts are lower than we assumed at PFO.
By how much?
I'll come to that in a second, Senator. On the payment side, you can see that in the first couple of years of the medium term, payments are a little bit higher, or there's a bit of a gap between the PFO and the MyEFO ones, with MyEFOs being a bit higher. But after the first couple of years, those two lines are very close together. So, if we're talking about that, so at the end of the medium term, Senator, receipts are 0.2% of GDP below what they were at PFO, and payments are the same level as they were at PFO.
That's the end point.
That's the end point, yes.
What is the cumulative difference on both the payment side and the receipts side?
So the cumulative difference is, so as I said, at the beginning, payments make up the most part of the change between PFO and MyEFO, but by the end, it's receipts. Over the full period, payments are a bit more than receipts.
Okay. What do you have it in dollar terms? Can you break
no, I
down?
don't. I only have it in percent of GDP terms, Senator.
Okay. Well, can you estimate the share? What is it?
No.
60-40, for example.
It's a bit over 50% for payments. Possibly a bit over 50%.
Yeah.
But not probably. I don't have the numbers, but it's probably not like 70%, right? It's like somewhere in that a bit over 50% range.
Because I asked the PBO on Monday and they said roughly 60-40. Is that in the ballpark?
It might be in the ballpark, but I don't have the number, Senator, but it is a bit over 50.
Okay, how can we get the exact figure?
Well,
Ms Brown, do you have it?
No, sorry.
How do we get the exact balance of that share?
So as I said, Senator, I don't have the exact balance, but it is a bit over 50. The PBO said 60-40. That is probably going to be in the ballpark, but
okay.
We don't have a number.
Can you take on notice to
we
give me
can take
the
it on
precise
notice. That'll be fine.
Number? Thank you. To what extent are the changes in both revenue and payments as a result of variations in forecasts, and to what extent are they a result of policy changes?
So as the Secretary said this morning, Senator, we don't have that. I might just explain how we do the medium term to explain why we don't have it. So in the forward estimates, those numbers are done in a very detailed manner, basically spending program and revenue item by item. And so people put in the exact numbers into Finance's system and they split changes between estimates updates, between estimates variations and measures. We don't do it like that in the medium term. This is a much more aggregated method in the medium term. So what we effectively do is we group up, I'll just use spending as an example, we group up spending into a smallish number of items. So for example, in the health portfolio, we have like 5 items, right, where there's like hundreds of actual spending programs. And we take the total amount spent on that item in the last year of the forward estimates. So that number will include all the things that have happened over time, all the measures, all the estimates, variations, but say there's like 50 billion being spent on this item, we take the 50 billion and we then apply a growth rate through the medium term. And that's a growth rate based on the sorts of things that we think will affect that in the medium term. So if it was like a pension payment, for example, we would take the number of people we think are on the pension and the indexation factors and just make that into a growth rate. So we don't have, so basically because we take that aggregate at the end of the forward estimates and just grow up by growth rate, we don't have a measures versus estimates variations. It's just a total amount that we expect to go into the future.
Sure, but I asked the Minister the other day in Finance and she listed a couple of government programs that contributed to this, including the Health and Hospitals Agreement. So you must have that data and you must, and Finance said they provided you that data, and you must have inputted into this calculation. Is that not right?
So that is the general approach we take. We then know that there are some things that governments do or some things that happen that will not fit well in that general approach of a standard growth rate. So, for example, we've talked about the Health and Hospitals deal. We knew that was being done. The government provisioned for that. So when we know things like that are substantial and we think will make a big difference that does not line up with our standard methodology, we make changes like that, Senator. So yes, we put in numbers for the Health and Hospitals deal. We put in some numbers for the Defence Henderson precinct, but it's only big things like that that differ from the standard methodology, and for the vast bulk of spending, we do not have a split between measures and variations.
Right. Okay. I don't know if you've got the chart that I provided the Secretary
No, I have not,
earlier,
Senator.
but you would know from the data that there's a particularly large, the biggest divergence in the forwards is in the 29-30 financial year. What's the reason for that?
So the main reasons for that, Senator, are those 2 items that are on page 296, I think, of the MyEFO. Is it 296? It might be 294. 294, Senator.
Yep.
Where it says contingency reserve includes provisions to reflect basically the expected increased contribution to the health and disability deal.
Right.
And the government's commitment to $12 billion over the next decade for a defence precinct at Henderson. So they are the 2 main items. There are a few other things in there around maybe, and they make up the vast bulk, and there's a few other things, particularly like infrastructure and interest and GST that add a bit, but those two things are the main items.
But the health and hospitals agreement is not terminating in that
No,
year, is
that's,
it?
I agree, Senator, it's not terminating. So some of the items we have in the medium term are lumpy, so like Defence and Henderson is a thing like that. So some of the infrastructure things are a bit lumpy, and sometimes PDI can be a bit lumpy depending on when there are maturities and how we issue. So there are some lumpy things that fall out over time, which means that gap closes back up as we go further through the medium term.
Okay. Just to conclude, I know the Chair will want to rotate the call in a second. You have said that the majority of the deterioration, a slight majority, a bit over 50%, is due to the payment side, not the receipt side.
Yeah.
What is the Treasurer basing his public comments on when he says it's mostly receipts, not payments?
So we think the Treasurer was talking about the end point of the medium term, Senator, when if you sort of think through the medium term we have things changing, but by the end payments have contributed basically zero to the change since PFO. Receipts are basically the entire change by the end of that period. And if you think of that as sort of the structural change that will go into the future, I think that's what he was talking about. But
that's an absurdity. That's an end point at the end of the mid-year. It's not a mid-term forecast. It's not the cumulative effect.
Agreed, Senator, but it is the point where receipts are, at the end point, receipts are the difference between what we had at PFO and what we have at MyEFO.
Oh, that's a very impressive effort at
the impact at the end
translating the Treasurer's
term is the best
error.
indicator of what the structural change in the budget position has been, which is the point of those graphs, right?
So, Minister,
and if we'd done your based on your election commitments, the budget would have deteriorated 142 billion over the medium term. So
I don't know what that's got to do with anything.
I'm really surprised about how worried you are about this, Senator Patterson. Are you seriously saying that you wouldn't fund Henderson or hospitals?
No, I think
what's it going to be? Hospitals or Henderson?
I think a $54 billion deterioration is worthy of examination personally, particularly because it occurred in a 6-month period.
Of that,
in 6
you're not
months.
doing Henderson if you were in government, or you're not doing hospitals?
Minister, you know
No,
this
seriously.
isn't a forum to ask me questions.
Well, are you even going to be the shadow finance minister by the end of the day? Unlikely.
That's a very nice try, Minister. I'm impressed that you've waited for as long as now for that diversion, but it doesn't get you away from the error that the Treasurer made.
Is it Henderson or hospitals?
Do you accept that the Treasurer...
Is it Henderson or
Minister,
hospitals?
it is not your role to ask me questions. Do you accept that the Treasurer got it wrong when he said the majority of the change is due to payments, not receipts, not payments?
The Treasurer... no, the Treasurer's comments are entirely correct, and that's not correct.
That's impressive.
That's your political slant. We get that you're here to make your videos and have your little political point scoring and fight amongst yourselves like we're working genuinely on the defence and health systems of this country.
Well,
so everyone understands that as a baseline.
We just want the Treasurer to be accurate when he talks about the budget.
Were absolutely correct.
Right. Well,
if you disagree now that chart 3.5 and the way the medium term projections are being put, including that it's at the end of the medium term that gives you the best assessment of the structural difference across the budget, are you arguing that because it's not a position that you took when you were in government?
It's
a politically convenient position for someone to take who's spending more time on the internals of their own political machine than actually caring about the future of this country.
Well, I think
that's what we've seen today.
I think, Minister, I'm demonstrating my interest in the budget and have been all day. And you've demonstrated a reluctance to admit
you're organising how to count to 26. How long does it take to get to 26?
I understand you're embarrassed about the Treasurer's mistake. I would be too.
The Treasurer hasn't made a mistake. Stop. So you can run your political... Look, we get you're a political operative. You're running your political lines. The Treasurer's comments are correct.
Yeah, OK. Thanks, Chair.
OK, Senator Hume.
I have just a couple of follow-up questions on the same page of my info, which is page 58. There's a chart there around the annual growth in major payments down the bottom of that page. And it shows the highest growth payments over the next 10 years. So aged care isn't there, so I'm assuming that since the budget last year, aged care has dropped down, the growth in aged care has dropped down below nominal GDP, and that's the reason why it's not on the graph. That's correct?
Yeah, we say on the next page, Senator, that aged care is going to be 4.9, down from 5.2. Yes, and I think it's just dropped out of our list of fastest growing pages.
Right, thank you. But it's been replaced now by childcare subsidies, which are projected to grow significantly faster than at the time of the election. So can you just tell me why that is the case?
So we have that explained on page 59, Senator, in the second last dot point of those dot points there, that it reflects higher than estimated childcare use by families in the forward estimates. And then, as we said about the way we grow things, if we have higher growth in the forward estimates, that'll be a higher base right at the end, and we'll probably have higher growth into the, well, it'll start from a higher point and continue to be higher through the medium term because we will apply a growth rate.
So when you say higher than estimated childcare use by families in the forward estimates, are you talking about more families using it? Are you talking about families using childcare more often? Are you talking about families using the same amount of childcare but it's more expensive? When you say more use, what do you mean?
Possibly.
They're using more childcare, more hours are being utilised, so more subsidy is being paid.
So is it more families using
that's
the same hours?
That's a question that you should ask DSS.
It's because it's a very fast-growing area. I'm just wondering whether there is any curiosity around that.
So we don't have all the detail of that, Senator. It would either be the department responsible for it or finance would be the ones that have much more detail about the exact reason for that sentence.
Okay.
I think it, and let me check because I think there's something to do with fees as well in there.
Mm-hmm. Thank you. Something to do with fees, the increase in fees.
Yeah, and that it then puts pressure on the subsidy.
All right.
But that is really a portfolio question for DSS.
Yes. All right. Well, if you could take on notice Finance's Treasury's understanding of what the components of that growth, that would be excellent. Thank you very much. Thank you, Chair. I think Senator Patterson has some more questions.
I do, but if you need to rotate, I understand.
No, Senator Patterson.
Very good. Thank you. I have some questions about changes in off-budget between PFO and MAEFO as well. There is a net other line when summarising the off-budget items.
Can you give us a page number?
I don't have the page number, I apologise.
It could be 71, Senator, maybe? I don't know.
Yeah, I think so. I apologise.
Do you want to tell me what the net other numbers you have are, and I can...
well, the total is 7.6 billion.
No, it's not.
25-26 minus 1,124, 26-27 3,294. Is that making sense? Adding up to 7,632.
No.
Someone will text me the page number
Yeah.
and tell you.
Yeah, that would be excellent.
I've just got an extract here in front of me. 71.
Yep.
Net other B, it's the bottom line.
Yep. So we have a different number, Senator, for net other.
Yeah, I've got that table 71. It doesn't align with those numbers.
This is a change since PFO is mine.
Oh, it's a change since PFO.
Yeah,
okay, right. Okay.
So you need PFO to then compare
correct,
to
yes,
this.
sorry. That's
yeah.
changed since PFO. So,
okay.
It looks like $7.6 billion of off-budget expenditure has occurred between PFO and MAEFO. It's summarised as net other, which there is a note which says includes amounts that cannot be itemised, including commercial and confidence transactions and decisions taken but not yet announced. So, can you confirm that that is right? That's $7.6 billion of new off-budget spending in that category.
I think we don't have
We don't have the PFO to MAEFO comparison. I don't think.
We can certainly take on notice.
Thank you. If you could.
Yep.
Can you tell me? Can you break down what those decisions are?
Well, it will depend, Senator, about whether they're the commercial and confidence ones and decisions taken but not announced, because we can't break those down, but we can try our best to do whatever else is in the line.
Yeah. Can you tell me what proportion are commercial and confidence and what proportion are decisions taken but not yet announced?
We can see what we can do, Senator. So there would have been, well, at PFO there would have been no decisions taken but not announced in the numbers. But what about we just take it on notice and we've got the gist of your question and we can see what we can do for you.
So the government, I think, has publicly announced the $1.1 billion for critical minerals deal, which is probably the 24-25 or the 25-26 number.
I'd be guessing, Senator. So
I think we need to take a proper look at those numbers and we'll see what we can get you.
Could you do that? Thank you, on notice. The 26-27 financial year, I understand it's about $3.3 billion. Can you tell us anything about that?
I think we're just going to have to take all these on notice, Senator. I don't think we have the answers here with us today.
Right. And can you confirm whether about $3.8 billion of that over the forwards is for Housing Australia? Has there been a big injection for Housing Australia in the next financial year to the tune of about $3 billion? Yes, there has, or yes,
Housing Australia is a separate line item, Senator.
Yep. So there's no. It's not part of that net other.
Oh, okay. I don't. Right, well, I'm not 100% certain, but I would have thought it more likely that Housing Australia stuff is in the Housing Australia line. I don't know if we have any better answers.
Luke Spear, Assistant Secretary, Budget Policy Branch. I think on the broad, just to confirm that your reconciliation is correct, the 7.6 over the forward estimates in those particular years. But to confirm, Mr. White, we get those numbers from Department of Finance. It is a long list of different things, including a range of commercial and confidence ones, and so we'll have to check actually the breakdown. We don't closely track that number.
All right. I accept it if you need to take that on notice, and I look forward to that on notice.
Thank you. Senator Sharma.
Thank you. Mr. White, I understand you met with some of the former or current employees of the Australian Office of Financial Management?
I did, Senator, yes.
Were they current employees at the time you met them, or former?
I'd rather not talk about the characteristics of the people I talk to. We provide, as the Treasury Department, if people from our portfolio agencies, especially the smaller ones, wish to come and talk to us about anything really, we think it's an important job that we can provide to provide a method of doing that. Especially in small agencies, sometimes people might find it hard to find a person they might want to talk to. I don't think it's in anyone's interest for me to talk about the sorts of people who came and talked to me or what they talked to me about.
No, what you've just said then makes perfect sense for current employees.
It's a very small workplace.
Yeah.
Yes, so that makes perfect sense that there's these normal channels of engagement for current employees, but I was asking it also about former employees.
As I said, I don't think it makes... I don't think I'd like to go to who I talk to or what I talk to about. They came and talked to me pretty much in confidence about the sorts of things they had to say. I think we want to protect the ability of people to do that without having anything suggested about who they are.
Okay, I respect that. Is this when the concerns were first brought to your attention and the Secretary's attention, though, that prompted the independent review that was announced yesterday?
It was probably around the first time. Now, I can't quite be sure exactly, but it was probably around the first time that we had concerns put possibly so explicitly, Senator.
Okay.
We had known, I've had this job since, I don't know, end of 2024, and I have known from that whole time that AOFM are doing a change program, and even through the beginning parts of that, there have been, I guess, you know, from my discussions with AOFM, there's been some hints that various people, you know, may not be on board with that, which shouldn't be necessarily unexpected, right? If you're doing a change program, not everyone necessarily agrees, but like, I suspect that was the first time that they were given in this sort of way.
Okay. Just in terms of day-to-day Treasury oversight, are you the responsible official as well?
So Treasury has a large number. I don't know exactly how many portfolio agencies live in the Treasury portfolio. They are divided up amongst the deputies.
Yep.
So yes, I look after the AOFM because they are effectively linked into the fiscal side of what Treasury does. They raise the debt. I also look after the Commonwealth Grants Commission. My markets group colleagues have way more, like APRA and ASIC, and obviously Revenue Group have the HL and those sorts of things. So that's how it's done. So yes, so I have oversight's kind of maybe sounds a bit more formal than it is, but
okay,
like
but the
person who talks to these people and worries about what's going on there, yes.
Okay. Have you had any concerns about the ability of the agency to manage the government's debt load as a result of the significant and rapid organisational change and some of the concerns you've had expressed to you?
No, Senator. So, as best I can tell, and I am not a debt management expert, in what we have seen over the last several months, or maybe 6 months or even longer, the AOFM's ability to raise the debt that they require to fund our budget seems to have been going well. As part of what we as Treasury do, the AOFM does a funding strategy and a liquidity strategy, so 2 different strategies, and they are approved and ticked off by the Secretary of the Treasury. And so, in the middle of last year or so, they present them to our Secretary. Our Secretary has an AOFM advisory board of 3 or so, I think it's 3 people, who are experts in debt markets, who provide our Secretary with advice on whether they are sensible things that balance risks and costs and all the sorts of things you would like AOFM to do. They provided that advice which suggested that what AOFM were doing was a sensible thing and that we should approve it. So, yeah, no, there are no concerns with what they've been doing so far.
Okay. I was just... one thing that struck me, and this might not be related, but just the price at which we're having to, or the rate at which we're having to price our debt to clear it on the market has gone up significantly in the last sort of 7 or 8 months by about 80 basis points, and a risk premium has opened up with compared to a US 10-year Treasury bond. So if you look at June last year, I think the risk premium was negative in Australian Treasury bond to a US Treasury bond by about 5 basis points. If you look at the most recent sale, I mean, I think our weighted average yield for the 10-year Treasury bonds that went to market on the 4th of February were 4.91%, and in the US, their last sale on the 15th of January was 4.173%. So is that a cause for concern? Because obviously this is a change to the, I mean, the last few years at least, there was effectively no risk premium between US and Australian Treasury yields on a 10-year Treasury bond.
So are you asking more generally, Senator, or are you asking about whether the AOFM has anything to do with it?
Well, I guess, I mean, I've noticed that pattern. What's your explanation for it, I guess? And is it anything to do with the AOFM's funcking, or is it...
That was covered in the previous session under macro. When Dr Grant went through the market response and how that factored in.
Well, I guess then my question is, have the developments at the AOFM which have concerned you sufficiently to appoint an outside investigator or an independent review, is there any concern that they might be having an impact upon this?
I would not think so, Senator. I would think bond markets move because market participants think differently about the economy and what their views are on how they're going to invest. From what we see, when the AOFM issues bonds, they issue bonds basically at the interest rates that are prevailing in the market. There seems to be nothing happening there that suggests that people are making us pay more money than we would otherwise pay based on what we know the market rates are. We don't think the AOFM is having any impact.
Okay. Just in the interest of time, I'm happy to yield, Chair. Thank you.
Thank you. Senator Canavan.
Yeah, look, I might just ask a couple of follow-up questions here. I'm sure you've probably seen the article in the Australian Financial Review today just on Senator Sharma's question. Someone is quoted in that article as saying this is a real problem and could see AOFM taken advantage of by experienced bankers. Has the Treasury put in any contingencies here to avoid this happening, given the turmoil we're seeing in our unit that is responsible for selling $1 trillion of government debt?
Senator, as the Secretary said this morning, we've set up a review of the AOFM led by Guy Debelle. We haven't done anything separate to that. In terms of issuing bonds on a regular basis, it's a well-practiced process. It's done at least a couple of times a week, basically, at the moment. It doesn't seem to me, and as I said, and the results seem to suggest that we are getting bonds issued at the sorts of rates that we would expect given what's in the market.
I did go through with Senator Sharma as well, but we did go through before that yields on Australian government debt have increased considerably higher than other countries in the past few months. So we did have the situation of ANZ being banned from doing deals on government debt because they acted unconscionably. There's clearly a risk here. The corporate sector is pretty savvy if we're not careful. So the only thing you've done is the review.
So, Senator, the ANZ thing was several years ago.
But they were banned last year, weren't they?
Yes.
Well, I can't remember exactly when they were banned.
Yes.
They were banned during last year.
Yeah.
Yes, but the event happened, I think, in 2023. As I said, I don't think that there's any indication that the change in yields on government bonds has anything to do with AOFM.
No, I think it's more to do with out-of-control government spending, but still, there's clearly a risk. Is the DeBell review looking at the appointment process for the head of the AOFM? Ms Hughes, is it?
No, Senator.
This article...
Yep. Yeah, no, Ms Hughes is the AOFM CEO, but no, we're not looking at the appointment process. We're looking at the ability, basically the ability of the AOFM to do its job to issue bonds at a cost-effective rate, managing risk well too.
This article claims that a person who spoke to the headhunter at the time of the appointment was told that the preference is for a woman candidate, and because presumably it was a male, it was he, when he asked whether it was worth him applying. Was there instructions given to the headhunter that a preference should be for a woman to lead the agency?
I have no knowledge of the appointment process, Senator.
Well, could you take that on notice?
Yes, Senator.
Thank you. Okay, we'll obviously ask questions of them later. Now, I wanted to go to a table in my EFO on page 81, table 3.13, if you are able to help me out on this one. I'm particularly interested in the line program-specific parameter variations. That is showing a deterioration of a somewhat amazing $17.5 billion this financial year. Can you just explain? I've never really focused on this particular line item, but can you explain a bit what that is? What is program-specific parameter variations?
I can, but first I might explain to you the table. So this table is it's an accrual-based table doing expenses. So it's not a table that feeds directly into the underlying cash balance that we use. So it's on the accrual side of the budget rather than the cash flow side.
Sure.
Parameter-specific variations are effectively all the things that are not counted in the rest of the table, right? So if you think about, so we have things that affect payments. So we can have economic parameters like inflation, employment, and those sorts of things. But program-specific parameters are about those specific things that affect various payment programs. Now, I don't know if I have one in my head, but like, I don't know, if we're thinking about health, it's like, you know, more people turn up to the doctor and stuff, right?
I've got a few, but yeah, okay.
But it's those sorts of things. It's things that are specific to programs that are not like broader whole of economy type parameters.
I mean, it just struck me, the reason I say I haven't particularly focused on this line item before, but this is, I think, over 6 months. And over
this is the HEX. My understanding is this is the HEX 20% cut moving
$17 billion
from 24,
change.
25 into 25, 26.
Is that, how much is the HEX component of the 17 billion?
A very large part
it's
of
a
it.
very large component.
How much?
I'll see if I've got the figure, but it's a large component.
Yep. So when you compare this table, Senator, so table 313 to table 3.2 earlier on, which admittedly doesn't break it down into all these components, that table 3.2 shows the parameter variations on payments that flow through to our underlying cash balance. The total number, so the equivalent to the 23 billion at the bottom of the table, 23.13, is $7 billion, just over $7 billion, $7.3 billion.
Still a lot of
money. So the gap between 7.3 and 23 is effectively those things that for that year are recognised as increases in expenses like the HEX thing, but which do not have an impact on cash flows there and then. They might have an impact on cash flows later down the track. It could be the next few years, it could be a long time into the future. So it's things where something happens that affects the amount of, affects like assets or liabilities we have now. their value. So HEX is one. There's also some things around when actuaries come and revalue things sometimes, like in the NDIS or veterans payments. Those things will change the number a large amount in the first year, and they might gradually flow through to the cash numbers later. So you often get big numbers in this table of 313, Senator.
Have we got a number for the HEX?
It's about $10 billion.
Right, okay. So that does still leave, that's the $7 billion then in the other table, roughly?
So 10 plus 7 is like a bit over 17, so we'd probably have a few billion extra of other things.
But I'm just focusing on the line. I think that's 17. So
oh yeah. So we don't. So sorry, Senator.
I'm jumping around.
Yeah, we don't have a.
Is the HEX part of the? Just to be clear, is the HEX part of the 17?
Yeah, HEX will be part of the 17.
Right, okay,
yes.
Okay. Okay. So what's the other 7? It's huge. Like I've never seen anything like this when I've looked back at other budgets. I've gone back and have a look.
It's the other variations that are referred to in the parts of MyFed that talk about cash changes. So things like the cheaper home batteries program.
How much is that one?
I think that is in the order of possibly. Oh, I can't remember. I can find that in the document.
Okay, if you could, while you do
and
that.
And there's some liabilities for military compensation and veterans benefits.
Yep.
But I think they're the big moving pieces, those 3.
Right.
But we can come back on that, I think.
I mean, this is in 6 months. I mean, how could you get, say that, I wanted to ask about the battery scheme. What was that costed at in PFO?
I think it was...
For this financial year?
Oh, I don't want to...
Yes. So, Senator,
exactly.
So for things where a liability or an asset is revalued, so the things like the HEX.
Okay, now can we come back to the battery? I didn't ask about the HEX.
No, you were saying about why it could be big in 6 months or 8 months.
No. My question just then was, my question was very direct. How much was the battery scheme costed in PFO?
Sorry, Mr. White was trying to answer an earlier point, and then you moved on. So okay.
So the variation in 25-26 on batteries is $3.4 billion.
Right. How much was it meant to be in PFO? How much is it this year? How much is it in MyFO?
I don't have with me all of those figures. I'm happy to take that on notice.
Yep.
How could you get it wrong?
It was a very, very popular
But
program,
you got it wrong by...
But hang on.
They're your estimates, Treasurer, Finance Minister. You got your figures wrong on one program to the tune of $3.5 billion.
The uptake...
Whether it's popular or not, they were your figures.
The uptake was much higher than was forecast.
Yeah,
you are correct.
and obviously all their spending now is spending for inflation because you couldn't get your figures right.
To put batteries on their house to help them with their energy costs, inclinging
$3.5 billion error.
In large numbers of rural communities and regional communities, actually.
They're your figures. They're your figures. It's your budget.
Senator
Got them wrong by $3.5 billion.
Which is why we've made some changes to that program because it turned out...
Because you stuffed it up.
There wasn't.
You haven't controlled your budget. It's blown out.
We have supported a program that Australians have embraced in much greater and faster numbers than was anticipated.
Okay.
And we have made sensible changes to manage that demand.
That error, that 6-month error, is half the $7 billion. What's the next biggest one?
Senator, I'm happy to take on notice more detail.
Right.
This is probably
I'm just
more
worried,
finances area.
Are you going back, because this is a bit of a pattern the last few years, when I've looked at this now, this particular row or line item, it's hit massive records in the past 2 years. Now, so you're over $50 billion here across the forwards. There were 2 other years in the previous budget year, which was over $30 billion variations. And then before that, and the AFR did some good work on this too, before that was hardly any changes. Indeed, they used to overestimate largely. So is there any analysis or investigation going on about how these errors, they are errors, they're estimates, you make an estimate of a program.
They're variations on estimates.
Well, you use whatever...
Well, that's what they're called. They're called estimates variations.
You can use whatever cover-up you'd like, but they're errors. They're errors.
Senator Canavan.
And how have you got the figures so wrong? So is there any investigation
How can it be a cover-up if you're asking about it based on numbers that you're given?
The way you're describing it is the cover-up, Finance Minister. Is there any investigation occurring about how you got these figures that wrong?
That's a matter for the Department of Finance, essentially, on how...
So it's your responsibility.
And so, yes, I can confirm we are looking at programs where we see, and we have been, I mean, the NDIS was, you know, when you go back and say you go back over a number of years, that, when we came to government, was having massive estimates variations. We're trying to moderate that. And in a number of other areas where we are seeing big growth, yes, as you would expect the Department of Finance to be looking at them, and I can confirm we are.
Right, okay. The problem here is, how can anyone believe the figures in my EFO if they're going to be out to the tune of, in this budget, 50 odd billion, as I said, last financial year, in both my EFO and the budget, 30 billion. That is a bit of a problem for going back to how the markets are viewing this government's fiscal strategy and how it's flowing through to yields. It's hard to believe the figures in the reports because they end up being varied, if you want to use that term, within months. What's happened?
I can rotate the call and come back.
Can I just have one more,
yeah,
if that's okay? I'm also interested, I've just focused on the 5th, 25, 26, but the next 3 years over the forwards all have variations, I'll use the Minister's term, variations of $10 billion or so. Why are those figures out by that much?
We have to take that on notice, Senator. We don't have a breakdown of what's in that line.
Haven't you looked at this? This is $30 billion of cost blowout.
Senator, I might just point you to page 67 of the MyFO document, which explains them on a cash basis, noting that table that you're looking at is on an accrual basis, but that is the part of the document that explains on a cash basis the significant variations in payments.
And for the rest of those years, the cash basis is closer to the accrual basis, so those numbers will probably explain the vast bulk of it.
Okay, well, take me through them. What is it?
Well, they're there, and
I kind of want to know it on a year, but I don't quite understand why you don't know it off, because it's a $30 billion error in 6 months for those 3 years.
We're saying...
And you're not across it. You're not like, okay, what went wrong there for $30 billion?
Well,
I'm worried about this government. I mean, you should be across it, Finance Minister, because, I mean, how are you managing this budget? If you do not understand, you haven't even asked questions about what happened to $30 billion.
Are you all the main stars of your own videos? Is that what you want? You want to build this, you know, like...
What?
Point of order. What is the
hell are you talking about? I'm talking about $30 billion, and what are you talking about?
I think
you don't know. It's your budget, and you don't know where $30 billion went. Is it under the couch? Is it? Is it behind the TV? Where is the $30 billion?
Senator Canavan, as we kept trying to say as you were doing your speech to the Parliament, on page 67, it takes you through.
It doesn't add up those figures on a yearly basis, annual basis, like I asked.
No, we'd have to take that on notice, but this...
Which officials have already agreed to do before you gave them a lecture.
My point is why you, Minister, don't understand where $30 billion went missing. I mean,
I think the Minister
if I was reading that, but that's one of the... When I read my EFO, I was like, what's that? But you didn't ask those questions. You don't seem to be across your own budget.
Well, I don't know where you were when we released my EFO, but I spoke about this at length.
Well, you obviously read it.
And the explanation is there on page 67. It talks you through the major movements, whether it be disaster events, whether it be some of the arrangements around age pension. You go through it. Childcare, NDIS, support for seniors, the GST payments. I mean, it is all there for you. There is, you know, I don't know what you don't understand about that.
Are those, in those dot points there, do they all relate to that line that I was mentioning? Or are they for various variations across the table? Because I'm asking about the 30 billion in that line. So it's a bit unclear to me, because that when I read this, that list of dot points says major increases in payments from parameter and other variations. Yeah. So is it only for that line? Those
some of them will be in that line, Senator. Some others may be. Some others may be in some of the other lines in there. But as I said, this will have other things where they are not, where they don't have a cash effect. These page 67 things explain the biggest movements in cash payments over the course of the forward estimates, and they explain the 30. What number was that? They explain the line in table 3.2 on page 56 that talks about $35 billion of parameter variations to payments in the main, and most of those things will be the same things that cause the big movements in your table that you're talking about. granted, not all in that one line you're talking about, but across the lines, and there will be other things like HECS and things like actuarial evaluations of things like veterans' benefits.
Well, what's clear is the government has just lost control of its fiscal strategy.
No,
because it's just blown out by $50 billion.
Senator Canavan, so you wouldn't pay for disaster events, is that right?
Well, I wouldn't.
So you would not allow
I would hope that if I were Finance Minister, I wouldn't make
$6.3 billion in disaster payments. So that's what you're saying.
$10 billion error on one program. That's the battery blow.
That is what you're saying.
In 6 months.
You think that paying for disaster events,
I think you should both resign. If you made a $10 billion error in a public company, you'd be out the door. You'd be out the door. $10 billion error on one program.
$3 billion on additional support for Australians with aged care. On the aged pension, you don't want Australia to audit that either.
If I were in your shoes, I would be holding myself to account, which you are not. You're making excuses when you have wasted, you have totally missed $10 billion on one program.
Elderly Australians and those in disaster-affected communities would like.
Well, I'd like an explanation on how you got one program wrong to the tune of $10 billion, and you continue to distract from that.
Or when the age pensioning
crisis. Can we please just stop talking over the top of each other? Do you have any more questions, Senator Canavan? All right, I'm going to rotate the call.
Can I just have my?
You're getting all the answers. They just don't fit with what you think, Senator Canavan, or what you want to think.
Okay, Senator O'Neill, you have a
point
of order.
I do have a point of order, and I stopped asking for it because the escalation that happened was entirely predictable, because the standing orders that you read this morning were not respected. You clearly identified, and perhaps Senator Canavan wasn't here to hear these words: dignity, courtesy, fairness and respect. And the way in which that questioning or attack was undertaken was hardly respectful.
Don't give me this patronising crap.
And here you go.
Seriously.
This might be okay for a Year 9 boy in the playground. It is not okay for the Senate.
And you're giving me a lecture.
It is not okay for the Senate. Just talk over me a bit more, Matt. Come on, keep going. Keep talking over the women in this room. If that's how you were brought up, that's a big failure.
Here we go.
Absolutely. So I couldn't even make my point of order without you speaking over the top of me.
Of taxpayer money.
You're out of order. And that's my point. That Senator Canavan is out of order and at odds with the standing orders.
Chair,
do we need to...
Chair, just to assist the committee, for what Senator Canavan is trying to portray as spending, losing control of spending, I can go through the $35 billion in payment variations in my EFO, and perhaps Senator Canavan can choose which ones he would prefer weren't funded. $6.3 billion for disaster events, $3 billion for Australians on the age pension, $2.3 billion in additional supports for government and non-government schools, $2.1 billion in additional payments for the Defence Force superannuation benefits, $2 billion in support for veterans, $2 billion in additional childcare support flowing to families, and $1.6 billion in additional financial support for Australian carers. So which bit of that...
that is less than half.
That's less than half. That would you not fund?
Well, that is first point. Okay, I'm happy to answer the question. I'm happy the Minister's put the question, I'm happy to answer it. The first point to make is that I just added that in my head, and it was less than $25 billion. So it's less than half. Less than half your $50 billion mistake. So if it was only half $50 billion, maybe I'd be a little bit more accepting. But $50 billion error should be grounds for any chief financial officer to be shown the door. And so that is a problem. The other point to make is the problem here is not what you're spending it on, is that you're giving the Australian people, the Australian markets, the wrong advice about how much you're going to spend. So within 6 months, you announce a program, like the battery program, and within 6 months, it's not $2 billion, it's $12 billion. That is a problem, because the markets need to be able to trust what the figures are in the government's budget, so that they can assess how much will inflation be when they borrow, when they lend you money, how much they think they'll get back. And so, well, don't ask me questions there, Minister. I'm happy to come over on that side if you'd like. But you asked me the question, so I'm going to answer it. I'm going to answer it. And so this is why we have the highest interest rates in the developed world right now, because the markets clearly don't trust your numbers. How would they be able to trust your numbers? Because they're wrong within 6 months. And now Australian families are paying more for their interest as well, because of your reckless spending and inability to provide figures that the market can trust.
Well, no, I don't accept that.
So keep asking me questions.
I don't accept that, and for the purposes of your arithmetic, I didn't include the $10 billion in extra GST, which also affects this line. Senator Canavan, would you also stop that from flowing to the states? Is that
a GST parameter? Is the GST that line that I mentioned?
So GST,
yes.
well, GST payments to the states appears in that line.
In that $10 billion that was out.
GST was higher over the forward estimates by $10 billion, Senator, and we then have to pay that to the state.
Well, this is a problem. Yep.
You're right. Perhaps we should let you determine all these things.
Well, mate, you're not doing a very good job. Anybody could do a better job. The Australian economy has never been through a worse period.
Treasury.
I mean, it's never been a worse time for Australians.
All right, I've got Senator Canavan.
So it has.
I think you
don't disrupt the professionalism of the Treasury.
Banter that's going on.
You are.
I think
that's exactly what you're doing, and you know you're doing it.
Finished your line of questioning. I'd like to go to Senator Whitten, if I could now. So thank you, Senator Whitten.
Thank you, Chair. I suspect I have a few overlapping questions, and I'm not meaning to put fuel on any fire, but I'd like to ask my questions if that's okay.
Please, go ahead.
My questions go to the blowout from the electrical vehicle FBT, which I heard was just being discussed. Was it Treasury's figure, the 90 million?
So I think electric vehicles will be revenue group, Senator.
Sorry?
Electric vehicle FBT concessions will be revenue group, not us.
Okay. And what about the home batteries?
You can ask about home batteries, yes.
That's part of Treasury?
Well, it's not our, it belongs in the Department of Climate Change portfolio, but if you ask your question, we'll see what we can do.
Okay, so on the home battery scheme, was the 2.3 billion initial costing from you guys?
No, Senator. So the Department of Climate Change, Energy, Environment and Water, I think it's their full name, they costed the program. Costings are done in consultation with the Department of Finance to validate them. Yet Treasury is not involved in expense costings or payment costings.
So Treasury doesn't validate any figures they're given from other departments?
No, Treasury does. For the budget, the split is Treasury does tax revenues, Finance does pretty much payments and non-tax revenues. There might be some weird things that don't quite fit that, but that's the general way it works.
Okay, thank you. I'll leave that there then, and I'll move on to another thing that you might have been involved with. The construction estimates for the nuclear power plants that were being bandied around before the last election. So the 600 billion price tag that was thrown around to build 11 gigawatts of nuclear power, was that something?
We have had nothing to do with that, Senator. We would not do things that are not for the government.
Treasury don't cost opposition policies.
No, well, I wasn't asking whether you costed anyone else's policy. I was asking whether the 600 billion figure came from somewhere. I'm pretty sure it wasn't the opposition at the time. I was just curious as to where that figure might have come from. So it wasn't you, so I can move on.
I have no idea,
Senator.
Senator.
It was from the Smart Energy Council, I think, from just checking online.
Okay. I'll move on to another topic. I've had additional questions in relation to the MIFO release. First, I'd like to understand how a productivity assumption of 1.2% per annum is justified in the release when the past 3 years have been minus 3.5%, 1% and minus 0.2%.
Senator, that was canvassed in macroeconomic group earlier today, and they are the people who have responsibility for productivity estimates in the budget.
Seems I keep missing the boat, don't I? Yeah. I won't ask any more questions on that. Let's move to, I think, what we were just talking about, the policy effect on the budget. On page 53 of the MIFO, and I quote, net policy decisions have improved the budget by 2.2 billion over the forward estimates. This is the first time since 2017-18 budget that the net policy decisions have been positive. Does it include 7.2 billion increase in the home battery scheme on page 67 of the report?
It includes all measures that are in this report, Senator.
Okay. And it includes the 2.3 billion for the increase of the NDIS, childcare subsidy.
So the net policy decision line picks up any policy decisions of government that have gone into MIFO, and so each of those are then separately and individually reported in Appendix A in the document.
Okay. Look, I've got to say I tend to agree with Senator Canavan that a lot of those are policy decisions, not an overflow from somewhere else. When you stand up and talk about policy of increasing spending for childcare or something else, that's a policy. That's not anything else, is it? Have I missed something?
So, as we've had a discussion, I think, with
I'm really quite deaf.
Sorry, okay, I will talk later.
Yeah.
As we've talked about, I think, with Senator Canavan over the last few... Senator Patterson over the last few estimates, we put things in the budget as policy decisions where government makes a decision about to change something, and we have estimates variations where an existing program is the same policy but the amounts are different for whatever reason. Either more or less people take them up, the price of them changes, and we clearly differentiate those in the way that the numbers change in the budget, and they are in table... Is it 3.3? 3.2. So on page 56, you can see that we put where governments take decisions to actively change things, and then where estimates change just because the economy or the number of people wanting something or prices change and those sorts of things.
Yeah. So I can understand there'd be, unknown contingency required for natural disasters, but childcare.
So for everything we have in the budget, Senator, is a forecast. Assumptions and estimates are made about the various things that matter to those forecasts. So if we take childcare, for example, it's the number of people who will use childcare, which is kind of based on the number of kids of that age group, the number of days that they will use or the number of hours, the prices that they pay, and how our subsidies interact with those things. And because we are forecasting the future, it is impossible to get those things right all the time. And between every estimates update that we do, and we do them twice a year, and in this case it's been about 9 months since we did the last one, things will change, and we update the estimates all the time. There has never been an estimates update where things have stayed the same for many things at all.
Yeah, I just think the problem people will have is the quantum of the update all the time, like that. They're big numbers to be out by.
So the numbers that we have in this MyEFO are not exceptional compared to history, right? There have been times where estimates variations have been bigger. There have been times where they're smaller. It just depends on what happens in the economy, in particular service areas that the government provides services in. As I said, this is not an exceptional change by any means, either in the forward estimates or across the medium term. It's the sorts of things we expect to happen each time we do an estimates update. As I said, sometimes we get closer, sometimes we're further away, but there's never been a case where it's zero.
Yeah, look, I guess we're going to have to agree to disagree on some of these things, aren't we? So I'll move on. The contingent liability on the housing scheme. Is that you guys?
Is that a page in MyEFO, Senator?
Page 110, I believe it is.
110, okay.
So I note that the contingent liability for the Guarantee for Housing Australia on page 110 and modified is a part of this increase to account for the increased risk of defaults under the 5% deposit scheme.
So is it a contingent liability, Senator? Is that how it's done? I mean, our housing people are in tomorrow and might be able to talk more about it, but in general, contingent liabilities don't have numbers in the budget.
But so I think it's saying increase, or
we're basically like identifying risks to the budget. So it's important enough to note that something could change and there could be a change to the budget down the track, but we don't yet have enough confidence in that to report a number against it.
And that's my question. I'm not asking for a number, but is it because of the increased risks for the 5% deposits?
I think you should...
Senator, I might just point you to pages 118 and 119. As Mr White said, the housing group will be able to provide further information, but there's quite a bit of information there about the guarantees for housing.
Does it say that it's increased? Or?
Well, just modifying... My understanding in MyEFO, we're modifying a statement that would have appeared in the statement of risk in the budget.
Yes.
And it goes, so it was, our guarantees around housing were already in the contingent liability section. And my understanding is this is modified to include some additional information, which is there on page 118 and 119.
Okay, I'll have a look at that.
And housing are up tomorrow, Senator, if you want to take it up with them.
Okay, thank you. And finally, my last topic, individual tax bracket creep.
That's revenue group, Senator. They're on next, I think.
Yeah.
You're in the right spot.
Thank you, Chair.
All right. I think we've done
I've just got that one. I'm not sure if it's. Sorry, Chair. I've just asked for an article from the Financial Review to be tabled, but might be a bit of delay there. While that's happening, this article is an opinion article by Chris Richardson on the 22nd of January. In that article, he has a graph of budget forecast misses, and it's effectively a chart of that line in table. I've forgotten the table, but in the table we were reading out. And I just heard your answer to Senator Whitten saying that this is nothing unusual in this budget, and I'm just nothing out of the order or something to that effect. I'm just struggling to understand that in regards to this particular chart. It takes things back to the 2017-18 budget, and in fact there's nothing never anything been like this $47.8 billion miss, as Mr Richardson describes it. So I'd just like you to reflect on the evidence that is this just normal to have a $47.8 billion forecast miss in MyEFO?
So I was talking at the aggregate level, Senator, about if you look at total payments or total receipts or changes in underlying cash balance and those sorts of things, what has happened in this MyEFO is not exceptional compared to history. As I said, some have had worse, bigger revisions, some have had smaller revisions. That doesn't mean every single line item in the budget
there's a
has
pretty
that
big
same
one because
circumstance.
it's $50 billion. So I'm just wondering, is that the $47.8 billion figure in that line item? Is that exceptional?
So we'd have to take that on notice, and I have not looked at that line item. As I said, this line item lives in the part of the budget that does the accrual numbers. It's not in the part of the budget that directly relates to the underlying cash balance. A lot of our focus is on the underlying cash balance as the main measure of the budget. We can go away and have a look at that line and come back to you on notice about it.
I'll just because I think it might just take a while for the article to be tabled, and I don't want to hold you around. But so just a quote from it, Mr Richardson says that the latest was particularly shocking. That's the latest MyEFO. The budget update issued just before Christmas said existing policies were going to cost $47.8 billion more than had been expected at 2025's earlier update. That is the equivalent of doubling last year's NDIS costs and putting that on the national credit card. Please read that last sentence again. I'm just wondering if, Mr Richardson's a very well-regarded analyst, and if this is concerning him so much, why don't you seem as concerned about a $50 billion budget forecast miss, as Mr Richardson describes it?
Senator, I'm not saying I'm not concerned about our ability to have better rather than worse forecasts in the budget, but we did say that this line includes some things that can change quite substantially when people revalue assets and liabilities. They do not flow through to cash flows immediately for a number of them. They don't affect the underlying cash balance.
There's a reason we have accrual accounting.
No, I agree. I'm agreeing. So they will flow through over time.
Right.
And so because they flow through over time and we actually care about them, we do have a bit of a look at them, but it is not part of the main focus of the budget and the underlying cash balance. We will have to come back and have a bit more of a look at what's happening there. As I said, some of these things around actuarial valuations of programs are becoming more prominent. Like a decade and a half ago, we did not have an NDIS. The NDIS gets revalued by an actuary every time now. That change in that valuation will appear in that line that you're talking about. It's a thing that we didn't have at all a decade ago. So there's possibly things about the structure of the budget that have changed that mean we're actually picking up different things or more things than we did a while back. But I don't want to say that is the entire reason or anything, but we would need to go and have a look at that line. There will be a lot of things in that line, Senator.
Okay. All right.
Okay.
Leave it there. Thanks, Chair.
Thank you. All right, so thank you to the fiscal group, we can say goodbye to you and welcome the representatives from the Department of Treasury, Revenue, Small Business and Law Group, along with the Australian Tax Office, the Tax Practitioners Board and the Australian Charities and Not-for-Profit Commission. And while we're doing a shuffle at the table and in the back there, I might note we started an hour behind the schedule, so my suggestion is that we push our next break to an hour behind when it was scheduled, which would be 4 o'clock. So just to let people know, and this set of witnesses that we will be seeing now extend over the break, so there'll be plenty of time for round 2. We stop at 4 and then come back in 15 minutes. So we're not stopping now, we're just waiting for people to... Sorry, that was a clumsy...
So delaying the break to
4 o'clock. Yeah.
Right.
Yeah.
And then what does that mean for the dinner break? For those of us that have
that's
stuff
a fair way ahead.
Well, yeah, okay.
I mean, if
we're
we
due
keep
to break for dinner at 6.
If we keep to time, I mean...
But can we confirm that? Because people have arrangements.
Let's try and break.
All right, we'll try. Yeah. No matter where we are in the program, we'll endeavour to break at 6.
Yeah.
Okay. Thank you, everybody.
Hello, how are you?
Very well, thank you.
Well, that's good.
Please take your time. Right, we might kick off. Just wait a minute for the Deputy Chair. Okay, so the committee welcomes representatives from the Department of Treasury, Revenue, Small Business and Law Group, along with the Australian Tax Office, the Tax Practitioners Board and the Australian Charities and Not-for-Profit Commission. We will go to Senator Hume to start off the questions.
Thank you, Chair. I just want to start off by asking some questions about the new super tax that was introduced today. I understand why we were all in here, and just make sure that my understanding of how this is going to work is clear. There was an article in today's paper around how it was excruciatingly expensive, makes death excruciatingly expensive, and I'm sure you've seen that. So I just want to ask some questions about the 296 tax and what happens when a person dies during an income year. The EM, to the previous version, said that individuals who died before the last day of an income year are not liable to pay the 296 tax, but now my understanding is it says that the EM says in the year of death, your total superannuation balance reference amount will always be the amount just before the start of the year. So that means clearly that if someone starts the year with a total super balance above the thresholds and then they die during that year, then there can be a 296 liability. Is that correct?
Senator Diane Brown, Deputy Secretary, Revenue, Small Business and Law Group. That is an issue we're aware of. Mr McKenna can take you through it.
Yes.
The article is probably misunderstands that we've gone from a system where we look at the change in balances to a system where we look at the earnings, but Mr McKenna can explain that more fully.
Thanks. Brendan McKenna, Acting First Assistant Secretary, Retirement Income and Superannuation Division. Yeah, so what the bill does is, as you would know, there's a change in policy from taxing gains as they accrue, which is under the former model of the bill, to taxing on a realisation basis. That basically requires a different approach to how taxes is calculated, and it's now calculated pretty much in accordance with the way underlying taxes, like fund tax, is treated under the current fund tax system. So to the extent that there's a taxable event that happens in the year, a CGT event, and to the extent that that's attributable to the member and that member has died, then that's income that would be attributed to them. If they happen to be above the thresholds, then the normal tax liability would accrue to them.
So who is responsible for that liability if the superannuant dies? It's the deceased estate?
The deceased estate, similar to income tax or the tax for Division 293. So we already have concepts in the law that have the estate liable for the remaining tax bills of a deceased person. So
what happens if the deceased estate is not the recipient of the super benefits? Is the estate still liable to pay the tax?
Yes, they are.
Okay, so transfers of assets to family members on death are normally tax-free, and the previous version of this legislation didn't apply to individuals that had died, but this new 296 is different. It can still leave a tax bill arising for your estate, and that can go to your children who would potentially otherwise have received a tax-free inheritance. Is that right? So it's a death tax.
Well, I think so there's the death benefit payment, and there's the question of how that is treated in the hands of the recipient. That's one question, but then there's the question of the fund taxation and the Div 296 tax, and that's basically a question around how the earnings of the fund are treated,
right.
And that's what we're talking about here. So I think they're two separate issues.
Two separate things.
Yeah.
Okay. It does sound like that this is potentially a contentious issue. Is it something that has been consulted on?
Yes, it was. That was in the draft legislation that was released last year. We consulted on that for 4 weeks.
And what was the feedback?
There was a range of feedback on that, but
did people say, "I don't want a death tax"?
Most people don't want any taxes, Senator. So people saying they don't want taxes is probably not unheard of in our line of business. But I mean, realistically, what we've done here is we've moved from a model that was taxing earnings as they accrued to a model that doesn't tax earnings as they accrue. It only taxes earnings when there's a realisation event, and so that necessitates a different approach.
Right.
To how we apply the tax.
But a realisation event can obviously can occur after you've passed away. In fact, must occur after you've passed away. So therefore, it is a tax after you are dead. It's a death tax, and it's paid for by the estate, even if the estate isn't the recipient of the benefits.
It doesn't have to occur. It occurs if the fund needs to realise assets in order to pay out a liability for you, to pay out your death benefit. So it could be that they have other liquid assets that they can pay out your death benefit. If not, then they can accrue, and normally would under current laws, they would realise an asset and they would pay any fund tax, because that would be a CGT event under the fund tax laws at the moment.
Okay. Can I ask, just now that this bill has been introduced, where the Treasury can talk to me about how many of those consultations, submissions raise concerns specifically about not just this issue, but specifically more about the treatment of franking credits in 296?
There were a couple that raised issues of franking credits. I'd have to take on notice exactly how many, but there were at least 2 that I can think of, I think.
And there was a total of 103 submissions, to put that in perspective.
So what were the concerns that were raised about the inclusion of grossed up franking credits in the 296 earnings base?
So there were some claims that were made that it resulted in double taxation effectively, and they are claims that we do not agree with.
And they've been set out in the explanatory memorandum.
So did they propose any solutions to this concern?
There were some solutions that were proposed, but as I said, I think they were based on a misunderstanding of how the BTSC and the imputation system...
Sorry, can you just say that a little bit louder? I couldn't quite hear you.
I said I think those submissions were based on a misunderstanding or a misinterpretation of how the imputation system and the BTSC interact.
Sorry,
the Div 296.
Div 296, right.
And so, our very firm view is that the treatment that was put out in the exposure draft legislation and is now in the final bill introduced to Parliament is the correct treatment and perfectly consistent with the normal operation of the imputation system.
All right. Can you explain to me then, for the sake of everyone else around the desk, what the concern was, what the solution that was proposed was, and what the misunderstanding was that meant that that solution was unnecessary?
What I'd prefer to do, Senator, is explain to you what the imputation system is meant to do and how it works in this situation, and explain to you why I think that it is the appropriate treatment, if that's okay.
Let's start there then.
Okay, so the imputation system is effectively, it's intended to ensure that income is taxed at the marginal rate of the beneficiary, whether it's a shareholder, whether that's, in this case, we're talking about the member of a fund, and that it's taxed effectively at the marginal rate that they face, and we're talking about taxes paid in the company. So what we want to do is we want to give acknowledgement of the fact that tax was paid at the company level, and we don't want to double up on that tax. So to give you an illustration, if there's $100 of income that is earned in a company, it would normally pay, and that's profit, it would pay $30 of tax in the company. It would pay out a franked dividend to, in this case, the super fund of $70, because that's what it's got left after tax.
Yes.
It would have an imputation credit that goes with that of $30. And what would happen in the fund is that the fund would get a refund, essentially, of that $30 of tax that was paid in the company, and it would get assessed on the full $100 of income, and it would pay tax at the appropriate rate for the fund. Now, in the past, that's been 15%, let's say, in the accumulation phase. Under the BTSC, there's obviously the additional rates that go on top of that.
Sorry, what does BTSC stand for?
Sorry, Division 296. Better targeted super concessions, but I'll try and call it Div 296.
Right.
Sorry.
Thank you. Sorry, and could you just say that last sentence again?
So the fund might pay $15 of tax on the $100 of income, remembering that it's got a $30 credit that's been refunded to it, so the tax that was paid in the company has been refunded. Under Div 296, there would be an extra layer of tax that would be applied, for people who are above 3 million or above 10 million. So it would be that extra bit of tax that's applied there. But it would ensure that that $100 of income is treated in the same way as $100 of income that was earned by the fund through, let's say, interest. If they got $100 there, it would face $15 of tax, and if the member was above 3 million, then it would face an extra 15. So it's exactly the same treatment. It ensures consistency in the outcome of the tax system, regardless of whether you invest through a company in dividends or whether you invest directly in other income.
So the double taxation concern is real, it's just that it's been a decision that's made. Is that correct?
No, it's not real. The double taxation is alleviated by the refund of the tax. The $30 of tax that was paid by the company, that gets refunded to the super fund. So there's now no tax that's been paid on that $100 of income, and then we just tax that as we would tax any other income in the fund. There's no double taxation.
Are you planning on publishing the submissions that...
Yes, we're in the process of going through that now.
When will that be?
As soon as we can.
I think we're in the process of just probably checking the submissions don't have any kind of material that needs to be deleted, that commercially confidential or defamatory comments. It really is just a matter of, it probably quite imminent that submissions will be published.
Okay. Okay. I'm sorry, that's 10 minutes, is it? Yeah. Okay, I'll come back to this.
Yeah,
Thank you.
Come back. Okay. Senator McKim.
Thanks, Ms Brown. I just wanted to tidy up a couple of matters that the Secretary kind of referred to you when I raised them with her this morning, just around the capital gains tax discount. I just want to start by saying I'm actually asking a genuine question. I don't understand how this has happened, and I'm hoping that someone can help me understand how it is that in 2009, 39% of the capital gains tax discount went to the highest 1% income earners. In 2022, that figure, the amount of the capital gains tax discount that went to high income earners, was up from 39 to 54%. Those are both Treasury figures that are publicly available. And the Parliamentary Budget Office has now done an assessment that in the current financial year, 59% of the benefit of the capital gains tax discount will go to the top 1% of income earners. Can someone help me understand what is happening here, please?
I will make a couple of comments first. There is that additional distributional information now disclosed in the tax expenditure insight statements, and that is for the very purpose of having these conversations. Two, as Deputy Secretary DeMarco said at the time, capital gains tax can be quite lumpy and can affect people's income from year to year when they do a realisation. But Dr Johnson has looked at it a bit more closely, and he'll be able to give you a bit more of an explanation around the change in numbers.
Shane Johnson, First Assistant Secretary, Tax Analysis Division. So I just might go through how we calculate the benefit, if that helps. So when we're looking at the benefit for CGT, that's in the tax expenditure statement, essentially we're looking at the tax that's paid underneath the current arrangement versus the tax that would have been paid underneath the benchmark. And the benchmark treatment, essentially what we use, and it's long-standing practice, is a Hague-Simons benchmark. So it's what's called a comprehensive income, so it's all income is taxed at a marginal rate. Just on there, so that's the way we determine the benefit, is the difference between those two. You could use different benchmarks, and others have used different benchmarks. You could use a consumption tax benchmark, you could use a taxing rent benchmark, there's a whole range of different ones, but this is just one approach, so it gives you an example of what we're trying, what's being calculated. It is, as Ms Brown said, it is sensitive to changes in realisation rates. So capital gains is a realisation-based tax, so it accrues when you decide to sell the asset, and so that people have, that's a unlike other income, that's a choice, and so that can have implications. What we see is that, and then the other thing as well is the size of those gains can also change through time. So you can have a higher gain, and so that can actually push someone to a higher tax bracket. So these are all things that could actually change the benefits over time. One thing that we do see is that, and I think one thing we just need to be careful about how we determine the benefit, because there are a lot of other things that go on. Like I said, there's the realisation, when you realise it, it's the size of the gain. It's also the economic incidence and where that actually really lies as well. So they're all things that to think about. And the way we calculate, we don't bring into those things. We do a nice simple benchmark. It's just the difference between what you would have paid under the existing versus the Hague-Simons benchmark, essentially. One thing that will drive a higher proportion of the benefit going to under this calculation method is, like I said, realisation, the size of the gains, but also over time, the number of people that are in that top decile, and I assume that's where you're going to, is that top decile that we've shown, is that we expect a greater proportion of people in that top decile to go into the top personal tax bracket. And if you're in the top personal tax bracket, you're paying a higher rate, and so therefore you're getting a bigger benefit for any dollar gain. So that's
thanks, but it's gone up in 15 years from 39% to 59%. I mean, that's a massive increase in the percentage of the benefit that is going to the top 1%. It's not the top decile, it's top 1%. So, right? So the top 1% of income earners. So, I mean, if you want to quibble with those figures, I don't think you were, by the way, but please do. But I'm still not clear what's happening. I mean, like you've said, this might be happening or that might be happening, and so it's lumpy. And I get all that. What is happening here, Mr. Johnson? Why is the top 1% getting so much so much of a greater share of the benefit of the capital gains tax now compared to 15 years ago?
Over time,
why is it happening?
More people are receiving capital gains income in that top bracket.
In the top 1%?
Yep, in the top 1%, yep. The size of the gains are also get bigger as well over time, relative to elsewhere in the distribution. And then we're seeing more people that are going into the top tax bracket as well. If it's particularly within the decile, you see more people going into the top tax bracket.
But the figures, you wouldn't quibble with any of those figures?
No, I mean, they're our published figures, yeah.
Yep. And do you project this out into the future?
No, we don't normally project. We normally produce the estimates on the actual year of focus. So.
All right, thanks. I've got a number of issues I want to raise, so I'm just going to jump around a bit here. I'm going to come to the ATO. It's been reported that the contracts you've awarded to one of your private debt collecting firms, Recoveries Corp, have been worth about $42.8 million since 2022. But before we go specifically to Recoveries Corp, can I just ask the ATO, do you use private debt collectors to recover debts, to recover alleged tax debts from welfare recipients?
Thank you, Senator. Rob Heffron, Commissioner of Taxation. I'll get Mr Allen, who runs our Second Commissioner of Frontline Operations, to talk through what we do. Would make the point that you mentioned a particular taxpayer. We are, of course, constrained about talking about the tax position or tax circumstances of individual of companies or people due to our confidentiality provisions. So when it comes to that, we could maybe talk generally about because I understand the article went down the path of saying here is a company which we awarded a contract to, and that company didn't pay any tax. The fact that a company doesn't pay tax, I think, as you're aware, is not particularly unusual. There are a whole range of reasons why, and the company income tax, in one sense, it's not in one sense, it's a profits tax. So if a company doesn't make profit because it's got accumulated losses from past years, it's got R&D tax deductions, it could be a number of reasons why it doesn't pay any tax. So the fact that a company doesn't pay tax, when we publish the tax transparency report, I think we publish about 4,000. Section has about 4,000 companies, and I think of those, about a third don't pay tax. And it's not because they're tax avoiding or doing something something contrary to the spirit of the law. Well, we would hope they wouldn't. And that's the tax gap, I think, as we've discussed before, the tax gap for large corporates is actually, relatively small, particularly compared with other taxpayers. But anyway, no doubt we'll come to that, but I just wanted to preface that. And also give Mr Allen time to get up to the table. So I'll pass over to Mr Allen.
David Allen, Second Commissioner of Frontline Operations. So we engage Recoveries Corp, which is our external collection agency. They play an important role in our broader kind of like debt management strategy. And we use them to do two things. One is we have a pre-engagement letter which we send to taxpayers, and these are taxpayers who we've tried to engage with. We've written to them, we've sent SMSs, and we've not been able to get engagement. So we write to them with a pre-engagement letter, effectively saying that if you don't contact us and set up a payment plan and meet your debt obligations, then we will refer you to an external collection agency. We find just the letter is actually quite effective in people engaging with the ATO. However, if they don't, then we will make a referral to the external collection agency, and they contact the taxpayer and say they're from an external collection agency. But I just want to be clear, we only make referrals to the external collection agency when the taxpayer hasn't been engaging with us, where they haven't set up a compliant payment plan, and we exclude taxpayers who show any evidence of vulnerability or hardship. However, we recognise that we're dealing with large volumes of population here, and we know sometimes that we may end up referring someone. So a lot of training goes in with our external collection agencies to ensure that if they see signs of vulnerability, they're referred immediately back to the ATO. And we've got a dedicated tailored support hub for supporting taxpayers in vulnerable situations. The other thing I should probably just say about external collection agencies, they don't do any firmer actions. So things like garnishes or director penalty notices are all done by ATO teams and more dedicated teams dealing with firmer actions. So they have a very specific role.
Thanks. Do you exclude...
You're at 10 minutes, Senator McKim.
Pardon?
You're at 10 minutes.
All right. Thank you. Do you exclude welfare recipients from... you said you excluded people that you're aware had vulnerabilities, for example, but do you exclude welfare recipients? And the reason I ask is because after the Robodebt Royal Commission, it was clearly deemed unethical and harmful for Centrelink to use private debt collectors to chase alleged welfare debts. And I'm just wondering why, in that context, it's okay for the ATO to use a private debt collector to chase an alleged tax debt from a welfare recipient.
Well, as I said, we definitely look for taxpayers in the population that have vulnerability indicators, and not all Centrelink recipients would we say have vulnerabilities. So we would, potentially make a referral to the external collection agency on that basis. But as I said, if subsequently through that discussion with the external collections agency some vulnerability is identified, then it's referred back to the ATO. But we don't make a blanket sort of admission for, welfare, because we're not really in a position to judge, what that welfare assistance is, and it takes many different forms. So our risk engines will look things such as income, assets, and so on, and then obviously prioritise those for the next best action.
Are you doing 10-minute blocks?
I will rotate, and then we can come back to you. So, Senator Hume, do you want to...
Yes, thank you. Just before I move on slightly, I just want to clarify whether Treasury costed an alternative where the Div 296 wouldn't be taxed on death. Was there a big revenue difference between whether it is or whether it isn't, won't be?
I think, to be sure, I'd have to take that on notice. I don't believe that we did. As I said, we constructed, we moved from a taxing on an accrual basis to a taxing on a realisation basis. In doing that, we had to revisit a range of settings around how that tax, what makes sense in that new kind of construction of the tax. And so, this is one of the things that I guess we worked through. But I just want to take that on notice, I guess, just to be sure.
So you take on notice as to where the Treasury did costings on whether not charging people tax after they had died compared to deciding to tax people on their super after they have died.
Yep.
Yes. Thank you. That would be good. I want to ask some questions about, which I asked earlier, but this is probably the better place to do it, about the AFR's reporting this week about the intention to scale back or replace the 50% capital gains tax discount, and whether that's being examined ahead of the budget. I'm wondering where the Revenue Group has undertaken any analysis or modelling or policy development on changes to the capital gains tax discount.
So, Senator, I do recall that you asked the Secretary that question or a similar question this morning. And I think, as the Secretary said this morning, the Treasurer has indicated that he is considering whether to take more steps can be taken on tax reform. We will support him in that work. We provide advice on the operation of the tax system on an ongoing basis. To now indicate specific matters or specific taxes under discussion would, as I think the Secretary indicated, risk inhibiting the deliberative process.
Yep.
And decisions of budget are normally made at budget time by the Treasurer.
So, obviously capital gains can occur in the residential housing market or the housing investment housing market, which is, I think, where this is being... the discussion largely revolves around that, but obviously capital gains can occur in any investment. I wonder whether the Revenue Group has done any analysis of what the effect might be of cutting or abolishing the 50% capital gains tax discount in other asset classes.
Well, Ms Brown, in her previous answer, indicated that they support the work of the Treasurer in all the processes that are underway for budget, but they aren't in a position to go into specifics about work being done, because that moves into more of the deliberative arrangements that government works through in the lead up to the budget. I think the Treasurer has been clear in his public statements that he is prepared, and the government is prepared, to have a discussion around intergenerational issues in housing.
So, may I ask then for Revenue Group's description of why a capital gains tax discount was introduced in the first place? What's the thinking behind a capital gains tax discount?
So the capital gains tax was introduced back in 1985. There was a few considerations, I believe, at the time, and some of these had been raised in submissions made to the inquiry looking into the operation of the capital gains tax. Some of it was to encourage savings, so to tax it at a lower rate to labour income. Some was to have, if it was taxed at nominal rates, it would have been very high effective tax rates. And I'm just trying to recall there was a third reason given as well.
Was it simplification?
Pardon?
A capital gains tax. I remember when the capital gains tax was brought in, but the capital gains tax discount. Largely, it was a simplification measure, wasn't it? It was a red tape reduction measure, because calculating the index, an indexed capital gain is actually quite complicated for average Joe. I mean, yes, there's technology that can help you do that, but a capital gains tax discount made it all pretty clear. Is that right?
It was a simplification. This is the 1999 reforms. It was a simplification exercise. Yep.
So then removing the capital gains tax discount, even if it's only removed on one asset class, is a tax complication measure as opposed to simplification measure, isn't it?
Sorry, can you repeat that? I mean, I think it's...
Well, if a capital gains tax discount is a tax simplification measure, then removing it is a tax complication measure.
Well, that's more of a statement, I think, from you, Senator Hume.
Actually, it's just logic, isn't it?
Is there a question?
Yes. If you put...
Is it a hypothetical?
Well, no, clearly not. I mean, if you won't tell me whether this is something that you're considering or reveal the analysis or any of the deliberations of Treasury on this particular measure, and it's been pretty clear because it's been leaked to the media all over the place that this is something that you're considering.
We're conducting normal budget processes, Senator Hume.
So my question was, if the original capital gains tax discount was introduced partly as a simplification measure, a red tape reduction measure, then if you remove it, it actually makes tax more complicated.
There's a lot of ifs in there.
Well, not really.
Yeah.
There's only one.
There was two. If it was introduced for this, and then if you remove it, it's that, right?
Sorry, you mustn't have been listening. But
yeah,
Ms. Brown said it was introduced as a simplification measure.
Your question or your proposition has a lot of ifs in it. We're not going to get into the specifics of work that may or may not be being done for the budget process. Senator Hume.
Okay. So the Parliament is now currently doing a Senate inquiry into a CGT discount, but it doesn't have access to the same information that appears to be circulating through some of the media briefings. Why is that?
Well, I'm not sure what you're talking about there and what information the committee might be seeking. I think
there seems to be an awful lot of information that's being briefed out to journalists, and we've already established that's not coming from Treasury.
Well,
so I'm interested to know if this information is available and journalists are getting hold of it, why is it not being made to a Senate inquiry where that information gets the opportunity for appropriate scrutiny?
Well, Senator McKim indicated, and I would just point out that it was your votes that helped establish the Select Committee into CGT for inquiry, supposedly on something you don't support changing, is what I'm kind of
where I'm
well, I
hearing
think inquiry
from.
gives us the opportunity to receive submissions to understand all sides of the argument, don't you think?
You seem like you've pretty much formed your views, if I'm just picking up the vibes here. But anyway, Senator McKim's indicated that he is considering, I think your chair, considering calling Treasury to provide evidence to that committee.
Can I ask then, Minister, can I be very clear here? Because we are not ruling anything in or ruling anything out, you are not ruling out changes to capital gains tax applying across housing, shares, trusts and any other form of investment?
Well, I'll refer you to my previous answer where I said the Treasurer has made public statements, and I have as well, and I think the Prime Minister has, about a discussion about examining the intergenerational issues affecting housing in Australia. We've been clear on that.
That's just housing. What about the other asset classes?
Well, I mean, in terms of, I'll go back to my earlier answer, which is we aren't going to be having a rule-in, rule-out game as we undertake normal budget processes. You will see the budget in May, and we'll be able and available to answer questions at that point.
Okay, I think that's going to frighten the horses for a lot of investors out there that aren't necessarily invested in investment property. You've just said we're not playing rule in, rule out on a whole bunch of asset classes that have nothing to do with housing supply.
That's code for you're going to go out and whip up a scare campaign.
I think you just did, Minister.
Senator, I did not.
You can rule it out. You don't have. There's no scare campaign to be done.
I referred you to the previous answer I gave, which said we are interested in a discussion on the intergenerational issues around housing. Now, you're the one that supported a select inquiry into the operation of the capital gains tax, Senator Hume. So take responsibility for that.
I'm not entirely sure why you fear inquiry on this issue.
Well, it does seem rather odd to me. I'm not sure what you got in return for supporting the select committee, but that you would be sitting here beginning, it seems, to wage a scare campaign based on a committee that you supported establishing.
I would imagine that there'll be an awful lot of submissions to that committee, Minister, that will be vehemently opposed to changes in the capital gains tax. Vehemently opposed. In fact, let me point
you were prepared to establish an inquiry to have a look at it. Seems so odd
and they're
to me.
Incredibly opposed. So let me just point you
to
opposed, Housing Industry Association. Sorry, Chair. Let me just get the question out. Housing Industry Association Managing Director, who said, if the policy objective is to increase the supply of new housing, Australia requires more investment in housing, not less. This requires stable. I'm sorry. I'm just quoting.
Yeah. No. Sorry. Okay, so because we are investing in housing,
I'm sorry, just let me finish the question. Even the quote would be a good start. Let me do that.
Holding it to the way you vote in the Senate.
It's 3:57. If we can
just let finish this question.
Senator Hume get it out, and then we'll try and aim to break at 4 o'clock.
So Housing Industry Association Managing Director Jocelyn Martin said, if the policy objective is to increase the supply of new housing, Australia requires more investment in housing, not less. This requires stable, predictable and neutral tax settings and a reduction in policy settings that increase costs, uncertainty and risk for housing investment. Changes to capital gains tax or negative gearing that raise the cost of investing in housing risk further constraint on the housing supply pipeline. So, does Treasury agree or disagree with Housing Australia Association's assessment that increasing taxes on housing investment risks further constraining the housing supply pipeline?
Can I just point out that I think there's 70 other submissions to that inquiry, many of whom have a very different view to the one that you've just quoted from, Senator Hume. From my quick looking at it this morning, because I haven't engaged very closely on that committee, I'd be interested once the committee reports, of course. But if your explanation for establishing this inquiry is because you don't support changes to capital gains tax, but you thought you may as well have a little look around and get the vibe of submissions before you just reconfirm your existing view, then you're accountable for that. We have said we're prepared to have a look and a discussion about intergenerational issues as
Minister,
they relate
I understand
to
all of that, but you're very, very defensive. I just want to understand what Treasury's position is on this. That's all. You seem very, very sensitive.
You've
very
quoted
sensitive.
from one submission, which I don't know if Treasury's read.
We do that in reports
to
all the
ask
time.
Treasury for an opinion, which is not normally the role of the it's not the role of Treasury. No, it's not the role of Treasury to give opinions
on housing investment
to committees.
What is the
in fact, it's against the standing orders to ask for opinions from public servants.
Oh my heavens! It's an economic issue, isn't it? I mean, surely this is not something that is out of
Treasury's
Treasury's
called to that
reach.
committee, and I'm sure that they will participate fully.
Hang on, I'm allowed to ask it here, Minister.
In the inquiry.
You're
asking for an opinion. It is not in
I wasn't
order.
asking for your opinion. I was asking for Treasury's opinion.
Can I just ask, does Treasury want to make any comment at all? And then I'm going to, we're going to suspend for a break. I can see you. No, so Treasury has no comment on this matter.
So you have no comment on
they're
whether
not here to
it is
express
appropriate
opinions.
to,
They're
if
here
you
to answer questions
increase taxes
about
on housing, whether it
policy
will
matters
affect
that they are
housing supply.
responsible for.
I think the matter has been addressed, perhaps not to your satisfaction, Deputy Chair. It's 4 o'clock. We will come back and there'll be plenty more time for this group to have questions answered. So we'll leave it there for now and come back at 4:15. Thank you. you.
Thanks, Chair.
We have resumed proceedings, and Senator Colbeck has the first block of questions.
Thanks, Chair.
Thank you.
I just want to go to some questions around tobacco excise. MyEFO downgrades the revenues for tobacco in 25-26 by $1.6 billion, and in 26-27 by $2 billion. The Australian Industry Group released some modelling recently that suggested illicit tobacco now accounts for approximately half, it's probably more than that I think, with an estimated revenue or excise loss of about $10 billion per year. What is Treasury's modelling saying in respect of that? Where do you think it's at now?
So, Senator, we do give an estimate or a forecast of tobacco excise each economic forecast. So the last one was in MyEFO, and again we did revise it down. You might have cited that number, but by $8.2 billion over the forward estimates in the 2025-26 MyEFO. Our next forecast will be in the budget in May.
So, not quite my question. AIG has released some modelling suggesting that it's costing $10 billion per year. Where does your modelling sit?
So, Senator, we revise our estimates at the times of economic statements, so in MyEFO and budget.
I understand that. I've read MyEFO. MyEFO is saying for this current financial year it's 1.6. Next year it's $2 billion from an estimate of so this year from 7.05 down to 5.45, 1.6 billion, 22.7% down. Next year 6.8 to 4.8 billion, down 29%, $2 billion drop. But that's not the total loss. That's what you're expecting to downgrade your revenues by. So what are we losing? AIG estimate it's $10 billion a year. What is Treasury's estimate of what we're losing annually from illicit tobacco?
So we forecast legal tobacco, but Dr. Johnson's just come to the table. He might be able to add a little bit more context.
Shane Johnson, First Assistant Secretary, Textiles Division. I think, as Ms Brown was saying, we look at the legal tobacco market, do our estimates. To be able to do what you're asking, which is a counterfactual, we'd need to have information on the illicit market, and we don't monitor the illicit market. That comes to more of a tax cap type of analysis.
Yes, but I mean, by very nature of the fact that it's an illicit market, there's not a lot of data about it because it's illegal. So I'm trying to get a sense of how much Treasury's modelling thinks we're losing on an annual basis. AIG says it's $10 billion a year. Are they too high, too low? Surely Treasury has some modelling of what we're losing on an annual basis through the sale of illicit tobacco, which is out of control. It's more than half of tobacco sales in Australia right now.
Senator, if I could help, the gap that you're referring to, the Commissioner for Illegal Tobacco, which sits in the
Health Department,
in the Board in Home Affairs, I think, they actually look at this quite closely and do the calculations, because I'm sure you're aware of it, but in the budget papers, when it talks about the excise, it's actually excise and customs duty, and the bulk of this is customs duty foregone, because most of the illicit market, as I understand it, comes in over the border, not produced in Australia. So strictly speaking, the excise is the duty foregone loss of excise is what's foregone on domestic manufacture. For imported, which is the bulk, as they assess, of the illicit market, is in the realm of border force and the Legal Tobacco Commissioner, and so I think they would have that broader assessment of the overall costs.
So you don't do any modelling at all as to what this illicit market is costing the Australian economy?
So in the tax office, when we work through the tax, I'll get Mr. Second Commissioner Hirsch to talk a bit more detail about it. We used to do a broader calculation around the broad tobacco duty that is part of the gap, because of the setup of the illegal tobacco. I don't have the ITEC, illegal tobacco,
illicit tobacco,
and e-cigarette commissioner. Because that function being set up, they're now best placed to do that. So in the last annual report, we sort of made it clear that what we would then continue to do is do the reporting on foregone excise, but the excise is a much smaller part because that's just the illegal stuff that's grown domestically, but not imported, and so they would have that look.
So where is their annual report is published?
Where is tobacco grown in Australia?
Yep. So
there hasn't been a tobacco industry in Australia for 20 years.
Yes. So, Senator, if I might come in, so I would commend you the report of the Illicit Tobacco and E-Cigarette Commissioner. Their report does estimate the amount of illicit tobacco consumed in Australia. Their methodology is based on wastewater analysis of alkanoids.
Yep.
In the past, the tax office had attempted to do a wastewater analysis but was unable to isolate from other plants in the nicotinoid family. But I do commend the ITEC Commissioner on their wastewater analysis. To answer your first question, their estimate is that illicit tobacco is around 50 to 60% of the tobacco consumed in Australia as at 24-25. And in terms of your comments around domestic crops, which is our concern in the tax office, we have in the past estimated that's about 10% of illicit tobacco is domestically grown, 90% imported. You are absolutely correct. There have been no licences to grow tobacco in Australia for, I think, around 20 years. So there is no legal tobacco grown in Australia.
Correct.
Illegal tobacco is grown from where we have successful raids. It's pretty much grown all around Australia. Anywhere where, as I understand it, tomatoes and other crops, similar crops can be grown, tobacco can be grown.
I'm aware of some of the raids in Victoria where, because it grows pretty quickly, there's been significant raids of $10, $15, $25 million worth of crop. I'm aware that there is some of that occurring.
Yes,
but
I think we've done about 100 raids over the last decade of crops.
So there is wastewater intelligence modelling being done.
I would commend that report. It also estimates nicotine use in the illegal e-cigarette market.
Has Treasury done any modelling on resetting the excise levels to assist with combating the illicit market? I mean, so the argument goes the high price of cigarettes, where you're paying $50 a packet, versus $13 to $20 a packet through the illicit market, is what's actually driving this. There's money to be made here, clearly. I've spoken to a particular small retailer, supermarket, at home who's losing $1 million a year in sales because it's all going through the illicit market. Their October to October figures for the last cycle was $150,000 down in the month. So the last 2 or 3 years, it's just taken off out of control, and the Australia Post admit that they're probably the biggest, I won't say trafficker, courier of illicit tobacco in the country. I mean, any of the websites you go on to, get your Australia Post tracking number. You shareholder minister for Australia Post.
You're at 10 minutes.
Yep. Has there been any modelling done on changing the rate as part of an overall mechanism to combat this trade that is basically feeding organised crime?
In terms of illegal tobacco, the government keeps all of these matters under review. Obviously, the Minister for Home Affairs has a huge role to play here, and we take advice from a number of agencies across government. We have, as you know, put in extra investments in the last 2 budgets to deal with some, providing extra resources to combat the illicit tobacco trade in Australia, and the government will keep monitoring it and taking it appropriate advice from agencies.
Yeah, and I acknowledge the additional seizures, but the market's growing at 6 times the rate of the seizures are growing. So surely there has to be some common sense conversation about the driver of the market, which is the high excise rate. I mean, I get wanting to stop people from smoking. I've never smoked in my life, and I'm on the program with that. But it's clear that the excise rate is driving the market. And there seems to be a complete head in the sand approach to reconsidering what the illicit market driver is.
Well, there isn't.
So I'm asking if there's any...
There isn't a head in the sand approach.
Has there been any modelling done on recalibrating the excise rate as one of the tools to modify the market?
Well, I know that is an issue that's been raised with the government and is seen as the single solution to this problem.
No, it's not a single solution, Minister, and I'm not suggesting that.
So
don't try it.
Well, no, I'm not necessarily saying that's what you said. I'm saying that there are advocates who see it as the single solution. It's not, and the government has been working, including with states and territories that have significant responsibilities here, to look at how we continue to respond to this, this market, essentially, and we will keep it under review, as we have done in the last 2 budgets. The big increases in excise actually happened in the 2016 budget and beyond, where they were hiked by 12.5% a year, I think. The increases in recent times have not been anywhere near that big. So, these are matters that we look at and we will keep under review.
Minister, the change in the market has happened over the last 2.5 years. That's where the explosion... Yes,
but you're linking it to the excise, and I'm saying the big increases in the excise happened in 2016 and going forward, that where it was raised 12.5% a year.
Look,
I think every year
you can try and
for 4
deflect
years.
this all you
I'm not
like.
deflecting it. I'm just saying that it's not the only thing that we're looking at. We're looking across the board.
And I know that that's occurring. I mean, the Tasmanian government's got new legislation that was introduced in the last couple of weeks. So I know there's a whole range of things that are happening.
Yeah.
But this is taking a huge chunk out of revenue, estimated by AIG to be at $10 billion a year. One of the arguments against doing anything is that there's going to be a revenue hit. Well, we've already suffered that. And I'm trying to get a sense of, A, what the total number is on an annual basis. You're reluctant to indicate that to me, but you've reduced revenues projections for this year by 1.6 billion, by 2 billion for next year. So it's not small amounts of money.
Well, and again,
that's just these 2 years.
I'd refer you to the Illicit Tobacco and E-Cigarette Commissioner's report that goes through all of the issues that you're interested in and raising. It's got quite detailed analysis around, costs and impacts, and that is a publicly available document.
So has the Treasury done any modelling on reducing the rate?
Well, Treasury... I am answering that these are matters that the government keeps under consideration. Treasury is one of the agencies that would provide advice around our response to illicit tobacco, but not the only one. The Health Department has views, strong advice. Home Affairs does. State and territory governments do.
Yeah, but I'm asking questions about the revenues that the government is or isn't collecting, and I'm just asking a simple question: has there been any modelling done? It's not.
So the department, obviously, as the minister indicated, is involved in interdepartmental conversations, discussions across the agencies. The minister referred to Health, Home Affairs, to keep the issue under watch. In terms of modelling, we're responsible for modelling the excise on legal tobacco. We have done some work around the elasticity of demand for tobacco to see whether that's changed. So there is modelling of that type that's going on. But otherwise, as the minister said, it's an issue that's complex, cuts across a range of issues. Treasury is involved in those discussions across government.
Senator, I'm going to have to rotate the call if you want to try and wind it up and then...
Yeah, I will. So is there a particular price point where that elasticity that you've mentioned particularly changes?
I'd have to take that on notice.
Okay, thank you. Just one question. I want to go to Mr. de Cure, who's sitting quietly out there on the wing, trying to avoid attention. Do you have any further investigations in relation to PwC on foot?
We have some matters ongoing with PwC, yes.
Do they relate to matters that have been discussed with you before, or are they new matters?
As I said in previous evidence, Senator, the 9 partner-related matters that were related to the Peter Collins leaks inquiry have been concluded from us, with one matter outstanding due to that former PwC partner using their appeal rights. There are a range of matters, and one in particular with PwC that's an ongoing investigation. It's been ongoing for some time now, and I said, I think, in previous evidence that I hope that it will be concluded in the middle of this year.
Do you have is there a statutory time frame around that?
There is the normal statutory time frame, but we're not feeling constrained by that in terms of getting the matter concluded.
Can you say how many matters you have?
One.
Okay.
Thank you. Senator McDonald.
Thank you very much, Chair. I've got some questions with regard to Treasury's modelling for future taxation streams. The Australia's Net Zero Transformation Treasury Modelling and Analysis document shows on page 34 a crossover of green commodity exports and fossil fuel exports. It looks to be about 2032. What I'm interested in asking is, in what year does Treasury project that taxation revenue from renewable industries will surpass taxation revenue from fossil fuel industries?
We heard that discussion this morning with our colleagues in a macroeconomic group, and so Dr Johnson has been giving it some thought in the interim. Might be able to make a few comments.
Thank you.
So the analysis that's in that report, it looks at how the global net zero transition could impact on the structure of the economy and on Australian exports. Those results haven't been extrapolated to revenue impacts. One thing that we do though is that we don't disaggregate. When we do our forecasts and our projections, we don't go through and disaggregate by every single type of sector. Once we get to the projections, we're often looking at broad aggregates and trends. Those trends, and we're applying economic parameters to those aggregates. Those economic parameters will pick up changes in the carbonisation of the economy, for example, and to the extent that they do, they're still reflected in our revenue forecast, but we don't decompose the impacts on every sector or each type of decomposition, if that helps.
What proportion of Australia's revenue is made up from royalties and corporate taxes, PAYG taxes from the mining sector?
I probably need to take that on notice, I think. I could try and see if I can get some results before.
Well, I guess my best estimates is around half.
I would really need to check.
So you can see where I'm going though. If our biggest income stream is from coal, gas, iron ore, and not just the royalties and corporate taxes, but the associated high salaries and whatnot, PAYG taxes. And when I look at this document, it's projecting that we will no longer be in receipt of those items. And whilst this is a fairly significant upward line, it's my understanding that the amount of critical minerals and the amount of hydrogen and the amount of ammonia, the amount of renewable energy that we would have to export would be truly huge in order to come close to the sort of income stream that we're receiving from fossil fuels at the moment. And I felt sure that Revenue Group would have some views on this, given that it's, you know, like any business, your income streams, your top line's important.
And so our focus will be on what our projections for GDP, because that's where we're going to get that's one of the primary drivers or relationship between tax revenue and GDP. And so in that report, as it shows, the GDP continues to grow, and so our estimates will be based on that. But it's right that the structure and compositional changes to the economy will have an impact on revenue, but they often balance out where we have a certain firm may exit, other firms will come in. But what we focus on is the aggregates, and we look at GDP and how GDP is tracking, and that gives us a good sense on where revenues are likely to go.
Okay. Then I'm surprised that you think that those income streams will match what we're receiving from those three big earners currently. So can you provide what modelling you have done then based on GDP and how you see the GDP projections for renewable energies, for critical minerals? I think uranium was in it when we had this discussion last estimates. How you'd see those.
So like I said, we don't decompose to that fine level, but if you'd like some information on how we see corporate revenues going over the longer term, the 2023 intergenerational report highlights those things, and also goes into a discussion around the corporate sector and the mining sector and what might happen over that time period. So that document's there, and it's quite a useful resource.
I'm fascinated that you don't disaggregate when we're talking about a replacement. The government's modelling is a replacement of three really huge sectors, and the modelling is it's just going to. I mean, I see here that the growth of hydrogen, we have no hydrogen industry, or yes, I think no would be a reasonable thing. An ammonia industry that.
So, Senator, as Dr Johnson said, the intergenerational report from 2023 actually outlined the very challenges that you described, the impacts on revenue sources from climate change and also the opportunities from climate change. It's the type of analysis that you're talking about is something that we do think about from time to time, and usually and quite commonly in the context of the intergenerational report. We do have another one coming out in 2026, but as Dr Johnson said, it is forecasts are very hard, and forecasting more particular things gets harder and harder. So we do forecast at a higher level than particular sectors. That doesn't mean that we don't look at the sustainability of revenue sources and have regard to whether there are new revenue sources that need to be considered. For example, the road user charge on electric vehicles might be one example of recognising how consumption patterns have changed and how that is affecting, in this case, fuel excise, and how that might give rise to a different or a new a taxing arrangement being necessary. So it is something we keep under watch. but that level of specificity that you're looking for is just not really possible in forecasting.
All right, so...
Mr de Cure, were you indicating you had something to add there?
I need to correct a previous answer, if I may.
Oh, okay, sorry. Maybe we'll do that once. Is it related to this matter? No. Okay, I'll just hold that thought. You're at 8 minutes, Senator McDonald. Thank you.
All right, so the intergenerational report, which is going to be updated this year.
It is due to be updated this year.
And that is going to have a fully fleshed out model for me to test.
I can't promise that. We're still working out what it will cover. But those are the kind of publications where we do give thought to what is the long-term trends, both in spending and revenue. It's looking at the long-term trends in fiscal policy.
All right. Can I ask then on notice the annual taxation revenue to the Commonwealth of the fossil fuel sector, coal, gas, and then add iron ore as well, please?
So if you like, what I can give you is mining company tax payable in 22-23 was...
Well, the only problem with that is it's going to include critical minerals.
I will decompose it, if you like, a little bit. I'll decompose them as well as we go through, if you like.
Okay.
It was 54 billion in 22-23. It's about 2/5. In that year, coal, so sub-element of coal, oil and gas were 23 billion, or about 1/6. And that information is available in the taxation statistics.
And is that just corporate taxes?
That was for corporate tax.
So it doesn't include royalties or PAYG income?
It doesn't.
Okay. And do you go through to analyse the impact on businesses within the communities that those businesses are operating in?
So that's probably a question for our climate change modelling colleagues. We look more at the revenue and the revenue impacts of policies.
No, I don't think it is, because it's about existing. Like, do you examine if you have the coal industry in Australia, the associated industries which wouldn't be reporting that they're coal miners or they're coal suppliers, they'll be transport and tyre suppliers.
So the revenue that comes from supporting businesses.
Yeah. I'll need to check to see how that's classified. That would depend on how the entity itself classifies in their tax return, because how they classify themselves will be picked up in the taxation statistics. The information I gave you was from an ATO publication, taxation statistics. So.
Now, I understand. I guess given that Australia has relied on mining income streams for, most of its history, or a significant part of its history, that these are things that we've not had to consider before. What is the impact for those industries, the associated industries also being impacted, and the regional communities that they're part of?
Yeah, so in terms of the economic impact on those industries, that type of analysis is picked up in that climate report. They use a computable general equilibrium model that does pick up the effects on related sectors or inputs into that sector.
So not in this report, in another report?
It should be in that one.
The net zero transformation?
Yeah, they should be picked up in the analysis.
Well, only in a very broad way if it is.
It's best to refer those questions to Macro Group.
No, well, that would be of no use at all, because I've spoken to Macro Group and they say impacts on taxation.
So impacts on taxation sits with us.
Yes, and not just tax for the mining companies, but taxes for the associated
Yeah, okay. So if there's impacts on taxes, that does sit with us.
Yeah.
Sorry, I thought you were interested in economic impacts. Like I said, we haven't extrapolated those to particular revenue impacts.
Okay. When you do the analysis for me on the tax revenue to the Commonwealth for mining and specifically coal and gas and iron ore, would you also provide that for the forwards, please?
So we won't have it for the forwards. We can only provide you with historical estimates, because we don't forecast at that fine level. We'll forecast.
Well, you forecast a price, a commodity price.
We forecast commodity prices, but we forecast the mining sector, but we don't look at those particular. We don't do every single particular commodity. So.
Really? Okay. I mean, biggest business in Australia, and and it's a bit of a guess. Just wait till the
certainly not a
commodity
guess.
prices come in.
It's certainly not a guess. There's a lot of thought goes into it. The modelling is quite detailed, but we don't go through and look at each individual commodity. We can get very, very accurate estimates of the revenue by looking at certain group sectors across the economy.
Oh, well, then if you could provide me with that information.
What we do is we look at collections data and other things to try and inform those, but we don't actually forecast based on. In fact, the details of our forecasts are in the budget.
Senator, I'm going to have to rotate the call.
Could I just finish off on this line of thought then? So if you could provide the very finely modelled data that doesn't break it down by sector for the forwards for me, please.
So that would be company tax collections in the end.
Okay. Okay.
I'm going to need to rotate. We can come back if we need to.
Sure.
Thank you. Senator Payman.
Thank you, Chair. Good afternoon. My questions are in similar vein to Senator Colbeck's, relating to the declining take from the tobacco excise. By how much were tobacco excise revenue projections decreased over the forward estimates in MyEFO?
I think I indicated earlier it was 8.2, but I'm just going to check my notes to make sure I've got that number correct. Dr. Johnson may find it quicker. Yes, tobacco excise receipts were revised down by $8.2 billion over the forward estimates in the 25-26 MyEFO. That's compared with the 25-26 budget forecasts.
And the projection for this financial year is $5.45 billion. It was reported that this was the lowest take for the tobacco excise in 20 years. Is that assessment accurate?
We might need to check that one.
That's okay.
Yeah.
Sorry, could you just repeat the number for me?
So the projection's $5.45 billion, and it was reported that it's the lowest take in the tobacco excise in 20 years.
Yes, so it's 5.45 billion is the estimate, the MyEFO estimate for 25-26. I need to check if it's the lowest one, but that is the estimate for 25-26.
Okay, if you could come back to us, whether it's the lowest in 20 years. So the $5.45 billion 20 years ago is worth around $9.4 billion today. Could you take it on notice whether, adjusted for inflation, there has been a lower take on tobacco excise in a financial year since the tobacco excise was introduced?
Yeah, we can take that on notice.
Beautiful. Thank you. I'm curious to understand whether the government will invest further in compliance in the next budget. Is there any indication or...?
That would be a matter for government to announce.
Well, yeah,
it's doing so.
Senator Payne, I answered this in respect to Senator Colbeck's question. We keep this under constant review. We've put in $350 million in the last two budgets, and the extra investments have delivered or made a real difference in the numbers of seizures at the border. But, we accept that there is more to be done here, including working with states and territories on the criminal activity side of things.
Thank you. So on the other things that could be done, are there any other particular policy levers that the government's considering?
Well, I think it covers a range of there's law and order issues, which we work with the states and territories on. There's border control issues which fall within our responsibility. There's definitely, health advice around this problem, and then, also the work that Treasury does in looking at how much revenue we collect. So, across there's a whole range of activity happening. Really, I'm not in a position to expand on that today.
The receipt projections for the tobacco excise were downgraded at the 2025-26 budget by 1.35 billion, upgraded at the 2025 pre-election economic and fiscal outlook by 400 million, and downgraded at the 2025-26 MyEFO by 1.6 billion. I'm curious to understand, will the 2026-27 budget see an upgrade or a downgrade? Or will Australians just have to wait and see what happens?
We update those forecasts in the budget. So we do update them twice a year routinely through the MyEFO and budget. And so they'll be done. They were done for MyEFO, and you know the work will be done over the next little while to update that for budget. We don't release it before budget.
But are you anticipating it for there to be an upgrade or a downgrade?
That's something that will be disclosed in the budget.
Because, yeah, as Senator Colbeck also alluded to earlier, we're seeing excise going up and revenue going down. So either people are miraculously, quitting smoking en masse, or the black market seems to be eating up the government's lunch. Just curious to understand, are things going to be turning around? If so, when?
So the government's working on a range of measures to address the illicit tobacco market. The Minister went through a number of those, higher enforcement, another 345 million spent around improving on that work. The compliance work has also been picked up by states and territories. I think there's been a number of raids in states to close tobacco shops in recent times. All those effects will have, we'll have to see what those effects do to the illicit tobacco market, but they're all directed at trying to reduce the illicit market.
Well, we'll look forward to the budget then. Thank you. Thank you, Chair.
Thank you. I'll go to Senator Pocock. And then I've got Sharma. And then I'll go to you after that.
Yep. Thank you, Chair. Senator Colbeck, I said one. There's currently 2 investigations involving PwC.
Twice as bad.
Yeah, I was half right.
Senator Pocock will have an interest, I'm sure.
So, thank you, Chair. You did ask my questions. Thank you, Senator Colbeck. But 2 ongoing investments in relation to PwC, are both of them expected to be completed around the middle of the year?
Yes.
Are they both related to legal professional privilege probes?
No. Well, Senator, to preserve the procedural fairness of the investigations, I don't want to comment on the subject matter of the investigations or the details of those matters.
Okay, look forward to their completion. So some questions for the Commissioner in relation to the employment of Michael O'Neill. In response to a question on notice number 398 and 400 regarding his employment, Michael O'Neill's employment at the TPB, the ATO refused to answer my questions on the grounds of privacy, making reference to the Privacy Act 1998 and the Public Service Act 1999. Am I right that the ATO and the TPB have previously supplied many hundreds of pages of just such information in relation to Mr O'Neill's employment in May 2024? A number of this table certainly reviewed that material. It's questions on notice number 022, 023, 031 and 032.
Senator, I think that's true. I do recall it was just after I started, and there was a lot of material that was provided to the Senate committee. I think my recollection, they were quite, they're unusual circumstances. As Curtis come to the table, we might want to talk through that a bit. But the fundamental proposition is, as an employer, any conversations I have with my employees should stay confidential. Any discussions about roles that employees take on, I'll have conversations with employees, obviously take that into account, and then make the moves that I think are appropriate for the organisation, both for the individual and for the broader organisation. And I think breaching privacy to put that in the public domain, I just don't think would be appropriate, and so I don't intend to do so.
Thank you, Commissioner. That answers my question. It is true, therefore, that many hundreds of pages regardless of the way you want to talk now and talked in our previous conversation about not wanting to do, it has been provided. Have the relevant...
Senator, sorry, I did say it. I might get Ms Curtis to talk to that because I assume it's true because you've said it in such a way it sounds true, but I just, because it was early on, I was quite new at the time, I just might get Ms Curtis to confirm that that was the case or not, as the case may be.
Yes, Ms Jackie Curtis, Chief Operating Officer at the Tax Office. That is correct, Senator.
Thank you. Have the relevant legislation and policies, including the APS, SES, Performance and Leadership Framework, the Public Service Act 1999 and the Privacy Act 1988, changed between then and now?
At least not material to this issue. They may have changed for other reasons, but not
material. Thank you. Did you ask Mr O'Neill if he agreed with your prior release of information? Is that why you previously provided the information but declined to do so this time?
Yes, Senator, we did ask Mr O'Neill and we went through all of the material with him and he was very happy for us to provide that material at that time.
And did you ask Mr O'Neill if he agreed to the release of this more recent information?
No, I haven't.
So why did you ask him once and then not the second time?
I can only speak for the second time. I think there are a range of issues that I need to take into account in deciding what to make public where they're the subject of confidential discussions. And they will remain confidential with the staff, the relevant staff member and me.
So you made a decision that the ATO at one moment makes a decision to reveal information and then at another moment decides it won't and uses a confidentiality breach. It is publicly well known that Mr O'Neill led the probe into PwC, into the scandals, and that he faced very significant pressure from the ATO and other places to back down on his investigations into the consulting firm and its behaviour. We set out that material very clearly, pages 143 to 146 in our FPA inquiry report, where we go through bullying and harassment charges, allegations that were subsequently dismissed, a TPB internal inquiry dismissed, prolonged processes led out of Minister Sukar's office, a workplace assessment, and finally a fraud investigation, none of which stood up to any scrutiny. No charges were laid. There was nothing that in relation to Mr O'Neill's performance. So this is a very political question. It's not just a matter of any employee. There has been public discussion about their employment, and now so I think you can understand that the decision to move him to another position, which you did, is a real concern. I am worried that you're covering something up. And I want to know whether you moved him into a new position as a reprisal, as a consequence of the work he did in exposing PwC for their tax leak scandal.
Senator, I'd reject comprehensively any notion that there's any kind of cover-up or any kind of reprisal. I have to make judgments about my staff and where they work and the movements they should make for their benefit and for the organisation's benefit. Mr O'Neill had been in that role for over 7 years. It was time for a move for his own benefit, not just the organisation, but clearly also for the organisation. He had a role where he was in charge of leading around 200 of my other staff. And it's important for our staff to make sure they get a good spread of different leadership traits and management capability to model their own behaviour on. And this is common across organisations. I think there's a consensus, particularly the public service, around 5 years in a role, particularly senior role, is about enough. 6 starts to get too long. 7 is definitely the time where people should move. Now, having said that, you might come back and say my appointment's 7 years, which, at that time I'll certainly be moving out and hopefully not moving into another role, but doing something else.
Well, that's an unexpected admission, Mr Heverin. You're looking at a bunch of people who start with a 6-year term and many of them go on to do 2 or 3.
But I think,
not David.
But I think the difference, with all due respect, in an organisation where you're in charge and directly in charge of hundreds of people at a time, the idea of people in leadership roles casting shadows, intentionally or unintentionally, often unintentionally, is an important thing. We have to take it into account.
So can I know my time is short. Mr de Cure, I want to come to you. In the December estimates, I asked Mr Heffron who made the decision to move Mr O'Neill, and he said it was him. I'm now interested in the origin of the idea to move Mr O'Neill. Who in the TPB initiated this discussion of changing CEO? Was it you? Was it a consensus of the board or the tax commissioner?
Senator Pocock, the appointment of a member of the commissioner's staff to the role at the end of the day is a decision for the commissioner. I, on behalf of the board, have a regular interaction with the commissioner, and we discuss the staffing needs from time to time of the board. And I think that to say more than that would be inappropriate in the circumstances. We have regular dialogue about the needs of the TPB.
When was it specifically raised?
As I said, I have a regular dialogue with the commissioner.
Can I ask you to take that on notice then, Mr de Cure? I'd like to know when that first discussion occurred. Was there a reason given as to why Mr O'Neill would be moved?
I think the commissioner has explained why Mr O'Neill was moved.
I want to be clear, and I would like to come back to you, Commissioner. There is public interest in this because this was an officer who played a significant role in an event that had a long shadow and certainly surfaced important issues of corruption, poor behaviour, ethical breakdowns and so on. Can you see why the public would be interested in a move of Mr O'Neill out of the position he was in when he did that important investigative work after the preceding 5 attempts to move him from the position?
Senator, with I think I want to choose my words carefully, with appropriate respect, I can imagine how someone, if they just read reporting, might come to that conclusion. But we have to remember there's a secretary of the board. Mr O'Neill reported to the board itself, and it was the board that makes decisions, particularly disciplinary decisions. And Mr O'Neill was also one of 200 staff from the tax office, which Mr O'Neill is one. And that 200 would work to make sure the right information is brought to bear for the board to make their consideration. Mr O'Neill is effectively a division head as a Band 2 SES officer. Did a good job. As you say, his persistence and his tenacity meant that things would be brought forward. But I wouldn't want to underestimate the activity of the other 199 there.
I don't, Commissioner.
And so I think there's a risk when people look at an organisation, particularly large organisations or teams and large teams, and there can be that maybe the fallacy of attributing the success or the work of a team to a particular person, and so I think when we look closely at what happened, what was brought to bear, what the board finally decided, Mr O'Neill had a very important part in that, no question about that, but not on his own, as one of a team of around 200 people.
I'm not suggesting a significant investigation of the kind that we undertook 22 days of inquiry around, and which estimates has seen repetitive questioning on, and we have heard from Mr Hirschhorn and from Mr de Cure about the attributes and leadership and significant role that Mr O'Neill played. And there are, in these kind of significant cases, as a considerable media discussion of this has pointed it to, there are often heroes at the centre who do create momentum, and I think the evidence we have heard says Mr O'Neill was significant. Of course, always in a team. But I will move on.
You're at 10 minutes.
I'm at 10 minutes. Okay, I won't be moving on.
Okay, thank you. Senator Sharma.
Thank you. Sorry, I wasn't expecting that. I just had a brief question for you, Ms Woodward, if I could, please. I read a media report in the AFR in January that's indicated that the Commission wrote to Minister Lee in June seeking more resources to allow the Commission to engage charities at risk of terrorist exploitation. Is that media report correct?
Sue Woodward, Commissioner, Australian Charities Not-for-Profits Commission. Yes, Senator, there was the AFR article. It referred to actually information contained in the incoming government brief.
Okay. So that's on your, because it refers to, the article references a letter, but I understand, I had a look on your FOI log, so it's in the incoming government brief. Would you just remind, because I'm not being able to pull it up right now, just what that recommendation is in the incoming government brief?
The comment which was made in the brief was that in order to conduct stakeholder engagement with charities that might be at higher risk of being misused for terrorism financing purposes, that if we were to receive additional resources, we could do more engagement. So it wasn't that we wouldn't do any, it was that if we had additional resources, we could potentially do more.
Okay. Have you received those additional resources?
Not separately.
Okay.
Since that incoming government brief and the work that we're doing across as part of our role in a whole of government response to the Financial Action Task Force mutual evaluation that will occur this year, we are resourced to play our part. It was obviously highlighting to an incoming minister a key thing coming up in the coming year also in terms of that evaluation.
Have you got a sense of the number of charities that are identified as at risk of being exploited by terrorist groups, or the subset, or the size of that?
It's obviously a hard thing to estimate. It's out of the 65,000 registered charities, it's typically a small number. We do get the data on the number of charities working overseas, so you might expect that they are more likely. It is about 6% of registered charities, so that would be about 3,000 charities that work overseas. Within that, of course, it's not to say that all of them are at risk, and there can certainly even be other charities that may not formally work overseas that could be at risk. So it's not so much concern that individual charities are involved in the terrorism financing themselves, but it's that they can be misused.
Exploited.
Yeah.
Okay. And I mean, so of the 6% of registered charities working overseas, I presume you've sort of triaged their level of risk depending on where they're working. I mean, it's probably a pretty low risk if they're working in Fiji, for instance, or the Southwest
Or
Pacific.
New Zealand, yeah.
Yeah, but it's a higher risk.
It is triaged on a risk basis.
If they're in Iran or Afghanistan or something like that.
Yes, and we would... there are risk assessments done, national risk assessments, and we get that information to help us do our work.
Okay. And is it true that 22 charities had their registrations revoked in the last calendar year, 2025?
That's correct.
Okay.
Sorry, I should just clarify, because 22 were revoked for what we would call compliance activities, so sort of where we've conducted investigations. A larger number would voluntarily revoke,
okay. Yep.
And a larger number again would be ones that we do revoke under the compliance head of non-reporting. So where we have a particular program, we call it double defaulters, so where they persistently don't report. That's a much larger number.
Yep.
But you're right about the smaller group in terms of investigations.
Okay. And so of those 22, because that's quite a high, it's the highest number ever I read, is that right? Or?
Well, as I say, the number of charities on our register is going. I think out of 65,022 is not a big number, and it may just have been that the year before, which was 11, so it does sound like a percentage, a much higher, a doubling, but it's a doubling of a very small number.
Okay. And how many of those were because of concerns you had about the potential exploitation by terrorist groups?
I would have to take that on notice to be sure. Sometimes it might not be that category.
Okay.
Charities have obligations to comply with external conduct standards and governance standards, so the concern we might have had might have been couched more in the terms of them not complying with those obligations satisfactorily, rather than absolutely specifically saying that it was because they were involved in terrorism financing.
I understand the one that was lost its status last year was, I don't know the name, sorry. It was run by Sydney spiritual leader Wissam Haddad, and it was followed an investigation by ABC's Four Corners episode. Is that correct? That charity lost its...
I think you're referring to a charity, and I might not get the name correct, but I'm pretty sure it was called the Daravan
that
charity.
sounds right to me, yeah.
And that, as the register indicates, that charity was revoked.
Okay, and was it because of the concerns revealed in the Four Corners episode that this charity was radicalising young Australians?
We don't, under my secrecy provisions, even with the changes, because it's a previous investigation, I'm not able to disclose the grounds for disclosure, but as the register indicates, it was what we would call for compliance, as opposed to, say, voluntary revocation.
Okay. When was the last compliance revocation done? Have you got the most recent one?
I think I was told about one that was done just yesterday, for example.
Okay. Okay. And you're not able to say, though, because of the secrecy provisions?
I can't talk about the circumstances of why that particular charity was revoked at that time.
I understand. Are you able to say, of those 22, I mean, not the names, but the subset, is it 25%, 20%? That were revoked because of concerns about exploitation by terrorist groups?
Well, I can take that on notice. I'd be pretty surprised if it was more than one or two.
Okay.
But I could give you the general categories of... A lot of the concerns might fall more into the category of private benefit, mismanagement.
Understood, yeah.
So we don't sort of categorise them specifically, mostly because, fortunately, it's not a large category, but I'm happy to take on notice and disclose what I can.
Okay, that would be helpful.
To cover off your point.
Okay, thanks, Ms Woodward. Thank you, Chair.
Thank you. Senator Pocock.
Thank you, Chair. I've got some questions about the petroleum resource rent tax. In the last MyEFO, it had PRT estimates for 25-26 down by 23 compared with the estimates in the 2025 PFO. Why is that? That's a huge drop.
I might ask if Dr. Johnson's going to come to the table again. I wasn't quite sure which one to explain that change in the. I believe it was to do with around when someone came into production, but I'll leave that to Dr. Johnson to be more precise.
Shane Johnson, First Assistant Secretary, Tax Analysis Division. So I think just going to make sure I understand the question, just around the downward revision in MyEFO.
So between 2025 PFO and then MyEFO, at 23% downgrade of the projections for PRT.
So the we had a in the 25-26 MyEFO, we had a $450 million revision down in 25-26, and I think 1.5 billion over the 4 years. That's largely reflects a downgrade in the oil price assumption. So the oil price assumption was $102 a barrel, down from $131 a barrel. So it reduces profitability of the firms.
I know the government went for the weakest option that Treasury proposed to reform the PRT, but the government told us that petroleum resource rent tax would go up, and yet we're seeing it go down. So when does Treasury think that PRT will actually go up?
So PRT it will fluctuate with the oil price and exchange rates. My recollection is I thought we revised up PRT at budget and PFO before. So this is a revision down, but the revision down does reflect not a policy change. It's purely to do with changes in the oil price.
Mm-hmm. Would it be accurate to say that the tax on offshore gas exports, PRT, is still giving us less revenue than the tax on beer?
Can have a look. Just bear with me a second. So in 25-26 in MyEFO, taxes on beer, we're expecting 2.7 billion. Taxes from PRRT, 1.5, so yes, it's lower than...
How do we live in a country that exports, one of the biggest gas exporters in the world, and we're getting more tax from beer than PRT? Maybe it's one for the minister. This is a political. It's a political decision.
Not really an opinion. Well, we've made changes to the PRRT that we got through the Parliament. Other areas of tax reform for us right now, the priority is delivering on our election commitments and on including the bill that the Treasurer introduced today.
But Minister, like at a time when the budget's under pressure, I know I turn up every estimate and ask these questions, but it makes no sense to me, and I think of many Australians. I want to revisit questions around PRT and receipts from offshore LNG projects specifically. And as you might recall at the last estimates, I was asking questions about a question notice that I put during the estimates before, and I wanted to know who's paying PRT and how much PRT is being paid on just offshore LNG exports. And at the last estimates, you told me that you don't have that data. I was interested if you have that data now.
So we don't break. So the data that's collected doesn't break down PRRT by product, or by the actual fields used to produce oil and gas, because it's often mixed. So we won't have that information. Okay.
So on page 180 of budget paper 1 in the 2023 budget, it clearly says, and I'll quote, "To date, not a single LNG project has paid any PRT, and many are not expected to pay significant amounts of PRT until the 2030s. So what's changed in the last 2.5 years? How did you know that back in the 2023 budget? And how do you not know that now?
We might have Mr. Robertson come to the desk. Maybe if Sue, if you wouldn't mind. Sorry, just do a bit of shuffling of chairs here. There has been obviously changes in the PRT tax laws in that period to bring forward revenue collections, but that's what Mr. Robinson can elaborate on.
Senator Marty Robinson, First Assistant Secretary, Corporate and International Tax Division. I think as we discussed last time, prior to the introduction of the cap on the use of deductions in the 2024 budget, it was well recognised that the substantial capital expenditure by offshore LNG projects and the carry-forward deductions that they had meant that they were not in a position where they were paying PRRT, and I think as you just mentioned then, it wasn't expected that they would be paying until the 2030s. Now with the introduction of that deductions cap, that will bring forward the expenditure or will bring forward payment of PRRT. I think as we mentioned, as I mentioned at the last estimates update, there was information reported by the ATO in their annual entity tax information that indicated the number of entities paying PRRT had increased from 11 to 16, and there were five entities that were paying PRRT for the first time as a result of the introduction of the deductions cap. So we know from that information that there are entities paying.
Is that saying that's for offshore LNG?
That's correct.
Mm-hmm. But Treasury can't tell me how much that is.
Well, Senator, the issue is that the information is reported at an entity level, and I think we had this discussion last time. Entities are related to different LNG projects or to different gas projects, which then feed into different LNG projects. And so we don't have that information at the LNG project level, it's at the entity level.
Sure, but
I might see if the ATO wants to add anything further on.
Well, can I maybe ask then, like, if looking through the budget papers, when it comes to beer excise or spirit excise, that's millions of Australians paying to different entities that's collated, and your Treasury can say, this is how much we're getting for beer excise, which is far more than we get for PRT. This is what spirits is, which I think is 2.5 times PRT. When it comes to one of our biggest, we're one of the biggest gas exporters in the world, and the Treasury says, oh, don't know, can't tell you how much we're getting. Like, surely, like, this can be solved.
Well, Senator, I think as Dr. Johnson mentioned there, we do collect and publish quite extensive information on PRRT collections, but I think your question, just to go back to the beer analogy, is a bit like asking, well, what's the breakdown of beer excise on draft beer versus Pilsner or something like that? And I think it's getting down to that sort of level. But,
how is it that granular, though? Because PRT is what? Oil and gas.
Senator, you're at 9 minutes.
It's a bit more complicated.
Well, as I mentioned, Senator, the information that the ATO is reporting is at an entity level, and so that doesn't report on whether it's gas or LNG.
Okay.
Senator, I think that the ATO may have some.
Senator, I might maybe if I talk a little bit about our disclosures. So we disclose each year as part of our corporate tax transparency, the PRRT that we collect, that is broken up by the legal entity, and we publish the name of the legal entity.
Thank you.
Also in the public domain, so if you took our information and you went to ASIC lodgements, those ASIC lodgements will often talk about what sort of project that entity is doing.
But I mean, why should Aussies have to do this? Why should we have to play this game to figure out how much we're getting from our gas exports, which we know half of it is just being given away for free to multinationals? But surely there's a way of actually collating it and say, right, Australians, this is your gas. We're exporting a lot of it, and this is what we're getting back. Like, this seems like such a...
So, Senator, I'm not going to comment on a policy decision, but I would say that it is part of the exception to general taxpayer secrecy that we are mandated to publish each year. So it is more transparency than of any other industry that we publish the name of every company which pays any PRRT.
Mm-hmm. Can I ask about... Thank you for that. That's useful.
I'm going to have to rotate the call in a minute if you could wind it up.
Two
more questions and then we'll move on. Yep.
There's a widespread view amongst analysts, including the International Energy Agency, and even some gas companies are admitting that there's a looming LNG glut globally, and prices may soon fall substantially, much below Treasury's current projections, with some facilities possibly even operating at a loss. Are you aware of these, and is that also your expectation?
So I don't think we comment on our forecast for oil prices, but I can indicate that when the department did the review of the PRRT, we were very clear in that document, and Mr Robertson might be able to remind me what that document was called. We did indicate that PRRT is very sensitive to the oil price, and that the revenue expected could move up and down depending on the oil price. It is well known that PRRT is sensitive to the oil price, and that risk was highlighted in the report that Treasury did.
And so facilities, if that does happen and facilities start running at a loss, can they then deduct and compound those losses against future PRRT paid?
Well, Senator, the PRRT does operate on taxing the profits that are made after deductibility of those expenses, and so if there are smaller profits, then one might anticipate that the PRRT collections might go down. But as Ms Brown said, that's all very sensitive to future commodity prices, future oil prices.
Okay. It seems like this whole PRT thing, we should just have maybe, I think the ACT Minister, the ACT is probably right, we should have a 25%, flat 25% tax on gas exports and solve this problem. ACTU.
Oh, ACTU.
Yeah. Is that something that the government would consider, actually moving to a model that's really clear? This is our gas, you can export it, you can make a really good profit, but we're going to slug you a 25% export tax.
Well, I've just referred to my previous answer. We've made changes to PRRT. We have the commitments we took to the last election as our priority in relation to tax reform.
Thank you, Senator Pocock. Senator Canavan.
Quickly, where Senator Pocock left off. I believe the tax office publishes a report of entity tax information. Is that correct?
Yes, Senator.
Looking at that report, I think, well, I've got one 23-24. Is that the last you've published? Couldn't find one.
So, Senator, the corporate tax transparency 23-24 would be the last year that's published.
In that report, I've got Woodside paying $1.7 billion in, well, it says tax payable. I presume that's probably corporate tax. Is that?
Yes, so, Senator, that disclosure has effectively two sections.
Yep.
One is for corporate tax, so that would be the corporate tax number.
Okay.
There'll be a separate tab which has the
PRRT. I've got the Woodside's PRRT at just under 800 million, 2.5 billion. That seems to be equal to the beer excise we were just talking about from one company. Is that? Are those numbers? They're the number. If they're the numbers, that's what it is.
Senator, they are the numbers.
That's just from one gas company. See, ExxonMobil's tax payable 770 billion. I do note there's a number of gas companies that have no tax payable though. Santos. Well, what does it mean when there's a blank cell in that report?
Yes, Senator, a blank cell in that report means that that in that particular field they either have no taxable income or no tax payable.
Right. Okay. I think they've got income. Hang on, let me.
Yes,
have a look.
So, Senator, it's quite a limited data set that we are mandated to publish.
Yep.
As an exception to secrecy, it is gross income, so that's gross sales,
right.
Taxable income, which is a profit concept, and tax payable, which
I presume. Well, you tell me if I'm wrong, but if someone's has got positive taxable income, as Santos does, but a blank cell and tax payable, is that largely due to carried forward losses often?
So, Senator, carried forward losses would go against the taxable income. The reason for a zero there would ordinarily be things like tax rebates, like say research and development,
right,
or franking credit refunds.
Okay,
would be how you might have a taxable income with no tax payable.
I thought it might be due to the large losses they and others made in the Queensland LNG experience, but I mean, I don't know how much you can tell me about this, but have the tax losses associated with that been exhausted?
So, Senator, I can't talk about individual taxpayers, but generally, if a company on that schedule has a taxable income, it will mean that they have recouped their prior year losses and are now heading into tax profitability.
Okay. All right. Well, just want to make sure we're on the record that the gas industry does pay quite a lot of tax through corporate tax. The PRRT is on top of that. And, of course, none of this includes the state-based royalties that the Queensland producers would be paying as well. Okay. I actually had some questions on our favourite topic in this section, illicit tobacco. I just want to go through where we're at, and where we've got to, as others have mentioned as well. Do you know what the excise rate per cigarette was in the 2019-20 financial year? Just as COVID.
Senator, I might have that information. I have got a table. What was the year you were interested in?
2019-20.
2019-20. The excise rate per stick was 0.94.
Right. What's it today?
Today it's $1.50.
Right. How much revenue did we raise in 2019-20 from tobacco excise?
So in 2019-20 we raised 16.2 billion.
Right. And how much are we raising to this financial year, projected to?
5.45 billion. I'm just going to check that's right against the number.
Well, I just wanted to get those. That's sort of roughly what I've got in front of me. Some rounding perhaps, but Yeah, I just wanted to confirm that we've effectively increased the excise rate by 50% or so, a little bit more than that, and revenue has dropped by over half as well. Quite extraordinary. I was interested in your answers before to Senator Colbeck that you're calculating elasticities. I mean, are you calculating an elasticity for the legal tobacco market or for tobacco smoking more generally?
We do forecast the excise for the legal tobacco, so the elasticity is...
So the elasticities will also be based on legal tobacco.
Sorry, I just missed that. Legal
tobacco.
Legal
yes.
tobacco.
Yeah,
okay.
Based on collections. Yeah.
So the elasticity there would expect to be higher than it would be for the tobacco market overall because of the potential for substitution to illicit products.
Yeah. So the elasticity would be higher. That's right. Yes.
I mean, I suppose one assumption we always had around taxing sins or things like tobacco was the elasticity would be quite low because people are addicted to it. But is it right to say that given the emergence and prominence of the illicit market, that assumption has perhaps fallen away?
It's probably something that we're looking at. It's elasticities rely on a long-term data set, and we haven't necessarily got sufficient data to be...
It's been a while since I've done Microeconomics 101, but from memory, when the elasticity gets quite high, the dead weight losses associated with taxing that product also increase. Is that correct?
So a higher elasticity will typically generate a higher dead weight loss, but in this case, what you would want to look at is also the cost of smoking as well, and so it's maybe more complicated than just the straight dead weight.
Well, if they're just substituting to smoking,
if they are,
if the high elasticity is a substitution because of a substitution to smoking illicit products, that obviously that benefit is not there either.
Yep.
Okay, so what is the elasticity? What have you measured the elasticity in the legal tobacco market to be?
I need to take that on notice. Sorry.
Okay, but you do have a figure.
I don't know if we've actually got a figure. I know we've been working on it. I know we provided some material to a question on those before, but I can't remember if we've got an actual number yet.
It's based on real-world data. That's what you're using to estimate.
It's work that we're developing.
A methodology. Okay, I know these things can be difficult to do sometimes to isolate. Okay. So I just wanted to. I mean, is it your position now that this quite significant increase in excise has contributed to the expansion of the illicit market?
I think, Senator, that's asking for an opinion on policy.
I suppose, do you see? Well, not really. I mean, no, it's not really, Chair. I mean, I'm asking for what's happened in the real world. I mean, do you think the effect of we've just been through in the real world, there's a 50% increase in excise, has that, it's not really an opinion about a policy or anything, it's just, has it led to, if you don't know it, that's a different question, but I'm not sure it's quite an opinion to understand whether or not your work, your analysis has shown that such a large increase in excise has increased the size of the illicit market.
I think I provided numbers on excise in our earlier conversation. That's probably as far as I'm able to go at this point.
I do have a FOI document 3812 which does contain I believe some questions and answers, like a Q&A from the Treasury. I'm not exactly sure who's it's been prepared for, but on page, I'll just try and make sure I've got whether I'm quoting electronic page numbers or not, or the documents ones.
You're at 9 minutes.
Okay, thank you, Chair. Right, so I'm on page, it is page 20 of the electronic version of this FOI 3812 from Treasury, and I believe here Treasury does state under risks and sensitivities, illicit tobacco risks, dot point states, and I quote, further increases to tobacco excise and excise equivalent custom duties will, however, strengthen incentives to trade in illicit tobacco. So is that the position of Treasury, that further increases in excise will at this point?
FOI in front of me. I don't have that FOI in front of me. I did check my folder of FOIs. It must be a bit dated, that FOI, so I'd want to read it.
I think it might be. It's under the website address is 2025-02, so about a year ago, February last year. We might table that when the call rotates, and if I can come back to it. Sorry, I also just want to ask, also in that document, I think this advice might have been from a bit earlier on. There's a number of different briefs in this document, but Treasury say, and I quote, reducing the affordability of tobacco through taxation remains the most effective way to reduce smoking. Is that still Treasury's position?
Again, Senator, I think if you don't mind, I'd like to read the document, understand it in its context.
Okay. All right. Okay. All right. Well, we might table it and then we can all have it in front of us and see, because I am just, maybe it is going to an opinion, but I'm asking about a document that Treasury has prepared, so we need to explain it. Okay. Thank you, Chair.
Thank you. Senator McKim.
Thanks, Chair. Is this the right group to ask questions about the performance test for super funds?
Yes, it is, Senator.
Oh, terrific. The Secretary said this morning one of the tangible things governments can do to improve productivity is to remove barriers to productive investment. I don't think that's a contentious statement, by the way. The performance test, as it's currently set, is engaging super funds to herd around the ASX, which is a very emissions-intensive measure. Would Treasury accept that proposition, is my first question. And if you do accept that proposition, is Treasury working on how to remove the barriers or the disincentives to invest into productive nation-building infrastructure like, for example, renewable energy, clean technologies and affordable housing?
So the Treasurer has announced that we are reviewing the performance test. It would be important that it remains continues to exert accountability on trustees for the performance, but it is being reviewed so that it does to check that it doesn't create any unnecessary barriers to investment.
So your evidence, Ms Brown, is that it's being reviewed in order to make sure that it doesn't disincentivise investment, productive investment?
It's not creating an unnecessary barrier to investment.
That it's not creating an unnecessary barrier to investment. My question is specifically around the kinds of investment that the performance test might be a barrier to, and whether, as part of the review of the performance test, whether Treasury is working on removing barriers to productive investment into things like nation-building infrastructure, renewable energy and affordable housing, rather than the current framework which herds superannuation funds into investing into the emissions-intensive ASX.
So Ms Moore might want to say more, but the view is looking at making sure that it's not creating those barriers to alternate investment classes. But
Ruth Moore, Assistant Secretary, Member Outcomes and Governance Branch. Through the review, we are hearing from some stakeholders that is an issue in their mind, yes.
Okay, so you're hearing from some stakeholders that is an issue. The Treasurer issued a media release last week saying that the future funds returns have increased after changing their investment mandate to get more money into some of the areas that I'm speaking about here. Are you aware of that media statement by the Treasurer?
I'm not, sorry.
No.
Senator.
Okay.
I think it was a joint one.
I beg your pardon?
Him and I. It was a joint media statement
you'd
once they
be aware
released
of it
their
then.
outcomes. Yep.
Well, perhaps I could...
And the future fund appeared last night.
I'm aware of that. I'm not seeking to ask about the future fund here. I guess it was a lead-in to my question, which I'll put to you in fairness, Minister, rather than Ms Moore or Ms Brown. But, I mean, Minister, your media release with the Treasurer makes it clear that the future funds returns have increased after changing their investment mandate, would that give you more confidence to remove any disincentives for super funds to invest in similar areas, the disincentives that exist because of the current performance test settings?
Well, I'll leave. Well, we've been pleased, of course, with the results of the Future Fund, and they have been outperforming, their targets, and that's a good outcome for all of us, and has coincided with change to their mandate, which they spoke about yesterday, about some of the investments they've made. In relation to the second part of your question, I'll take that on notice, but I'm not aware of any further changes in that area.
All right, thanks. So I just want to move to the ATO now, if I might. I've just got a couple of topics to cover, and hopefully that'll be me done for this output. Firstly, in relation to the corporate tax transparency data, there are 79 companies that haven't paid any tax for all 11 years of that data being released by the ATO. I mean, they are spread through the economy, but there are clusters around coal and gas exporters, infrastructure and sort of property and construction businesses. I mean, News Corp, Dow Chemicals, Ford, Brookfield, Mitsubishi, Sumamoto. How is it plausible that a company can make no profit or no taxable profit and continue operating for 11 continuous years? Is there some flaw in our tax settings that allows these companies to get away with this? And has the Tax Avoidance Task Force investigated any of those 79 companies for tax avoidance?
Thank you, Senator. And I might ask if maybe Deputy Commissioner Michelle Sams comes up to join me for this section. The first thing I'll absolutely assure you, Senator, is we put very close scrutiny on companies with sustained losses, and those 79 companies will certainly have had our attention. So I'll just assure you that first. The second thing is I would say that the Corporate Tax Transparency Report reports entities, and some of those entities on the 79, not all, but some, are parts of groups where other entities in that group have been paying tax. So there's, in a sense, internal profit shifting within the group and other entities are paying tax. So not all 79 are part of economics groups which have paid no tax. The other thing I would say is that there is a pattern, and quite a few of the 79 would fall in this pattern, which is if you have made very big losses in 1 year and your company limps on afterwards, that company may never earn enough profits to recoup its past losses.
Because it's writing off its previous
because its prior year losses will shelter its profit in perpetuity. And maybe the last point I'd make is that there are some industries and some entities on that list where, frankly, they just have not been, if you compare that to their ASIC reports, they have just been loss-making.
How do you make a loss for 11 years and remain a viable company?
Well, Senator, that's a very good question, one for smarter people than I, but it does seem at the moment that it is possible to raise capital from the markets for many companies, even when they are in sustained loss-making. But if I might ask if Deputy Commissioner Sams might want to add anything.
You're at 8 minutes.
Michelle Sams, Acting Deputy Commissioner for Public Groups. I think you've covered the main points. There's a variety of reasons. Just because a company is not paying tax, we know there may be legitimate reasons, losses, that they're making losses, that they're carrying forward tax losses from prior periods, or they're offsetting rebates and such things against profits.
All right, thanks. I wouldn't mind digging into that, but maybe in a future estimates, because time is going to prevent me. Mr Heffron, I wanted to ask, I read the, this is a different topic, I read the Queensland Supreme Court judgment in the matter of Clark, and it's in relation to an ATO investigator, Mr Rains. They were scathing findings against Mr Rains, and I can go through them at length if you like. I assume you're aware of the case.
I'm aware of the case. I've read the judgment.
You've read the judgment?
I've read the judgment.
What's the ATO done in response to that? Has Mr Rains been disciplined? Has there been any internal integrity investigations? Has there been a code of conduct process? Can you just talk us through the ATO's response to that very scathing judgment against Mr Rains?
Certainly. So first step is that, not about ours, but the DPP has sought to appeal that. I'm unsure if that's been heard or not, but certainly sought to appeal the judgment. In relation to activity that we've done, because, as you say, if you read the judgment, the judge was unusually critical. And of course, our investigator wasn't the one on trial. And so the idea of actually being given the right opportunity to defend themselves wasn't really afforded. And we need to be very careful about, to the extent we might or might not take action, making sure we afford procedural fairness to all those involved. We need to be careful about what we put on the public record. So you can be assured that as a prudent tax administrator, which we are, we're making sure the processes that we have in our fraud and criminal behaviour area are as good as can be. Where action is taken, I'm not necessarily about this case, but in general, where action is taken and issues are pointed out that we could do better, we certainly learn from that and change processes to make sure we do better. But in relation to this specific, and I won't call them accusations, but specific observations about our officers, I think I have to defer any comment on that until such time as it can be appropriate to have that in the public domain for reasons of privacy, and also making sure that all parties involved have that natural justice will apply. Just might, Ms Curtis might have something to add.
Yes, thank you. I just wanted to add, I mean, as you'd expect, an institution like ourselves would be taking this very, very seriously. So in addition to what the Commissioner has just said, we have actually an internal review now to provide us with assurance over the mechanisms that are in place to investigate these types of tax crimes, the decision-making processes, the quality assurance over the decisions, and making sure that we are operating effectively, and if we're not, then actually trying to address those gaps at the system and process level whilst this is under appeal, and when we're in a position to actually, with procedural fairness, proceed with any type of action that we would take with the employee.
All right. Well, I understand you're doing that review, but I think you said it's like a review at a systems and process level, not specifically in relation to Mr Rains. That's right, isn't it?
Not specifically in relation to him, but certainly in relation to the workforce that conducts these types of investigations, to see if there is anything there that we need to address. And obviously, once the appeal has taken place, we will look further at any further action that may or may not take place with Mr Rains.
So I'll put some other questions in on notice on this, but my last question, because time is just about to expire, is whether Mr Rains is continuing to operate in the same areas that he was when he was subject to this scathing judgment from the Queensland Supreme Court, which included the fact that he'd omitted critical documents from a brief of evidence, failed to include evidence in search warrant affidavits and statements to the court, a joint agency agreement prepared upon or relied upon by Mr Rains was a misleading document. I mean, these are extraordinary findings from a Supreme Court judge. Is Mr Rains still operating at all within, has he been suspended from from operating in these areas or any areas for the ATO?
Just to these, Mr. Raines no longer works in that area. And those elements you read out, I mean, I think it is important that the officer involved never had the opportunity to actually address those. So the judgment, obviously the Supreme Court judge, we need to take that the judgment very seriously, of course, and we are, as Ms Curtis is saying, we're going through that process. But it is, until someone has been afforded the right to respond, I think it would be imprudent to rely on those propositions too much. But to answer the substantive question, Mr Raines is no longer working in that investigations area.
Thank you. We have a 6 p.m. dinner break, so I'm going to go to Senator Bragg now, and I'd hoped we would finish with this group, but I don't think we will. Senator Bragg.
Sorry, yeah. Okay, so hello. There's so many people here. I'm not sure. I've been trying to ask questions all day, but I've been frustrated by the bureaucracy. I don't want to cast any aspersions. I guess it's probably my own idiocy.
Let's go with that.
That's probably the most plausible diagnosis, isn't it? Yeah. So who's here from the legal area?
So, Senator, we do have representatives from the legal area here.
Let's get the legal eagles here.
From January 12, the department did restructure groups.
Yeah, we heard all about this.
And so revenue, this group that now the Deputy Secretary for is Revenue, Small Business and Law Division. So you can ask questions of Law Division, and I'm here and I've got staff here.
Is this part of your great anti-red tape endeavour, is it?
We reduced the number of Deputy Secretaries.
Well, hopefully it's a more efficient machine for you, Ms Brown.
Happy to get your questions.
Well, I want to ask the legal eagle some stuff. Can we get the Mr. Legal Man?
Mr. Hertzberg here. All right.
Yep, Mr. Hertzberg. How are you? Nice to see you again. All right. So, do you deal with the FOIs?
I do, Senator. David Hertzberg, Acting General Counsel at the Treasury.
You get a few there at Treasury, do you?
We get a few. I think we got about 260, around 260 this financial year.
260? Well, that's not too bad. I mean, if you were silly enough to have to listen to the Senate, you'd hear Minister Gallagher and Minister Ayres complain about thousands of OPDs. So 270 is good.
Well, that's FOIs.
Yeah, but that's good.
The OPDs are on
you're
top
complaining
of that.
about, you know...
The OPDs are
industrial scale.
As are the questions on notice, as are everything else.
Well, you know, one thing the Australian people want is politicians who work hard. That's what they want.
There's certainly politicians that work hard in this building. It's not consistent across the building, but there are.
Well, I think this is a good time for some truth and transparency.
Not on your side, of course.
So, okay, well, I want to ask you about. So, do you do the OPDs as well, or just the FOIs?
So, if an order for production comes in, we do provide advice to the relevant area that might have the documents and ultimately the office.
Yeah. Now, you do understand that those are separate processes, don't you?
Absolutely.
That if a senator moves an OPD and is fortunate enough to have that approved by the Senate, that's quite separate from a citizen coming along and seeking documents under freedom of information.
Absolutely, Senator.
Even if those two persons are the same person.
Yeah, as you know, Senator, the FOI framework is legislated. There's an FOI Act which is quite clear about how the FOI regime operates, and we make sure that we give decision makers advice about how that Act works, and our OPDs operate under really Senate convention.
So did you deal with the FOI 4142, which was to do with the Freedom of Information request for the letter received from the Minister for Housing seeking the Treasury commission an independent review into the governance issues at Housing Australia?
So I'm aware of that FOI request, Senator, yes.
So the decision was, were you the decision maker on that?
No, I wasn't.
Okay, the decision maker was someone else. Hang on.
So FOIs...
It was Jessica Robinson. Who's that?
She was in Law Division.
She's gone?
She has.
Okay. What's happening with the turnover there at Treasury? A lot of people turning over at the moment? Every time we have you here, I ask about that person, like, oh, that person's not here anymore.
No, I don't.
I feel like it's, in an episode of Borat or something.
Our turnover rates are quite low, and Miss Robertson, without revealing too much information, had been a long-term employee of Treasury.
Just Mrs. Robinson. Okay, anyways, but she's gone. So the decision was to grant access to this letter, in part. Right? Do you know about that?
That's my understanding. I've seen the decision, yes, Senator.
Yeah. So this letter was a ministerial submission to the former Minister for Housing, Julie Collins, and it was on the 18th of December 2023 to allow for urgent procurement of an external independent reviewer. Okay? So there's handwriting here on the document. I think, is that from the Minister, the former Minister?
Well, Senator, I have the document in front of me. I can see handwriting on the bottom of that page. Often on ministerial briefs, either the Minister or one of the Minister's advisors or staffers might make a comment.
Yeah. So was this in the legal division, this business of commissioning this review? I guess what I'm asking is, I understand that you deal with FOIs and OPDs, but was the matter also yours in this part of your Treasury or not?
There has been considerable restructures of the department. Housing, Corporate and Law Division used to sit together in the not too distant past. These questions may now be probably better directed towards Housing Division, who are appearing tomorrow. They can go to the substance of the matter. Law Division can take you through the legal process.
Okay, so you can't answer those questions for me.
Senator,
okay, move to the next thing. This is the third time it's happened today, yeah?
Can I just mention importantly, I understand this matter is now, as of this morning, subject to Information Commissioner review.
Is it? I didn't know that.
So we received
Did you write to me?
We received an email from your office seeking Information Commissioner review of this decision. This decision is, and that's your right as the applicant to do that. The matter's before the Information Commissioner. The Information Commissioner, as they do, will look at the documents and make a decision about whether any more of that document can be released to you.
But that you're saying, Ms Brown, I should talk to Housing about that?
On the substance of the
That's
FOI.
Fine. I understand.
Yeah.
I'm doing my best here to navigate the bureaucracy.
Given what Mr Hertzberg just indicated, it might be inappropriate to comment too much further, given that it's now in front of the Information Commissioner.
You should have had a chat to your very efficient office. We've obviously cut enough red tape if they're firing that off without you knowing.
Okay, well, let's go to... Let's not cast aspersions.
2 minutes to 6, Senator Bragg. 2 minutes to 6.
Let's go to... Okay, is that bad?
We're going to finish at 6, but
okay.
You can come back. We're going to come back after.
All right, well, let's... I want to... so there's another FOI where I want to ask you some technical legal questions. Am I allowed to ask you those? Okay, great. This is a victory for humanity. So, FOI 4065. Now, I can tell you what it's about, if you want to know. It's about the modelling from the 5% deposit scheme, and I'd like to table that, I think, if I haven't already. Is that right? Yeah, so just while that's being tabled, I think that's okay with you, is it, Chair? We're just tabling the FOI, so you've got the latest piece of the paper. So I guess to cut to the chase, you've used just for anyone who's watching this, the millions of people who are watching this, the FOI is seeking to get to the bottom of why the government has commissioned modelling about the 5% deposit scheme, what the modelling said, and what some of the assumptions and other factors were when the Treasury did the modelling, right? And we can have this discussion with the modeller again tomorrow when he comes from the Housing Division. The reason I wanted to ask you about it is because you've used a Section 22 exemption all throughout this FOI, all the redactions, so effectively almost all the redactions here, you're using a Section 22 exclusion, which is to do with kind of personal privacy and sort of other personal particulars. But it's right throughout the document, including Section 4, where it says factoring in the supply response, where I imagine, I mean, I'm not a super duper expert here, but I imagine that's where the Treasury would have said, look, there's actually some factors here that might affect our modelling and the numbers. There are some sensitivities, there are some variables, but that's been given a Section 22 exemption by you, the Treasury, which you deem as irrelevant. The whole section of factoring in the supply response you deem irrelevant. And so just look, given that we have had a bit of a rocky history of Treasury filing FOI exemptions which aren't quite in line with the law or the conventions, I'm a bit worried that you might have used the wrong exemption here and you're blocking access to information that should be in the public domain that actually has nothing to do with personal particulars or personal privacy. So can you enlighten me, please?
Well, Senator, so I understand this decision is also subject to Information Commissioner review. I can say that Section 22 is a provision that allows a decision maker to delete irrelevant material where that information is not in scope of the request. So here the decision's been made, and I've got the decision in front of me, that email addresses and phone numbers isn't in scope of what the applicant asked for, which is information about modelling and price impacts. So that information isn't directly relevant to that modelling. The decision maker's made that decision. Whether the Information Commissioner agrees with that is a matter for the Information Commissioner.
Well, I think this is the key point, right?
Can we make this your last question and then we'll go to the break, and you can continue after the dinner break.
Okay.
We can come back.
Would you want me to stop now?
Yes, if that's a good place for you. We can come back. We will have to come back, but we also need to stop for dinner.
I always like to help people out.
All right, great. Well, let's suspend there then, and we will come back and resume with Senator Bragg at 7 p.m. Thank you, everyone.